a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, on this Sosnoff Free Friday. Whoop, whoop.
Woo! Freedom.
Double bat.
Freedom.
Double bat. Freedom. They'll never take our freedom. Yes.
A classic, but it's much more quiet. Like that.
Yeah. And then the erupt. Yeah, that's a good one. Yeah, that's Braveheart. For those
Yeah,
who
one
don't know.
of your favorites.
One of my favorites.
Is that really one of your favorite movies?
Oh, absolutely.
Wow.
I introduced him to that early age.
We used to. It's so funny. My girlfriend was asking about like what we used to do, and I would like when I was younger, and I was like, so what age? And she's like I don't know, like 9, 10, 11.
You're like, oh, my dad would take me to Hooters, and then we'd watch Braveheart.
So I did mention the Hooters, which we would do after like football practice. You would take me and my friends to Hooters, and we'd get the calendar, the yearly calendar. We'd hold on to that.
Yes,
for
a
quite some time.
formative young man, an essential experience. Yes.
But the other two things were Last of the Mohicans
Last of
and
the Mohicans, Daniel Day-Lewis, great movie.
great movie, and Braveheart. And she was like, you'd watch those when you were 10? And I was like, yeah, I think so.
Oh, yeah.
Like, I think I would sit on the couch and watch Braveheart with my
Not a
dad.
Double digits, that's the cutoff. You get 9
Yeah.
is too young, 10 is perfect. Yep.
Not
Everybody-
appropriate in any way.
Yeah.
But
So
but that is bat lore. That is part of who you are. So
Yeah.
That's
Oh, it's real.
yeah, yeah.
It's good stuff.
Two classic movies. They're just
when are you booking your time to go into the sauna, Nikki?
well, I don't know the monthly membership fee. I think it's above my pay grade for Casa de Batista there with the sauna pool experience.
Yes, the hot tub too.
Yeah, I'm waiting for the cold plunge, maybe the salt bath.
Right, the pickleball court.
Hey, if they have the pickleball court, I might have to join. Yeah.
Not too far down the street.
Right, the swim up bar, is that installed?
Swim up
yet?
bar, yes, exactly.
Swim up bar we
Juice
have.
bar, you have the juice bar
Right,
too.
yes.
Yeah, I'm
Next
waiting
to
for
the
that.
waterfall.
What's
What
that?
do you want, John?
Next to the waterfall.
Oh yes,
Yeah,
of
in the
course.
grotto. In the grotto. Yes,
the
of
grotto.
course. Yes.
Yes. Of
I haven't
course.
even been in it yet. I have to shop vac it a little bit from the electrician, you know.
Sure, you made a mess.
Made a little bit of a mess. Not
Sure.
too bad. He did an excellent job.
Yeah.
Got a great electrician if anybody needs him on the North Shore. Guy's beautiful.
Yeah.
But it's hot. Like it's so muggy and hot this morning.
Yeah. Oh, that's perfect. That's what you want. But you know, can't wait for the wintertime. Gonna have a little snow out there. Run outside.
I guess so.
Have no clothes on.
Nope. We're gonna stop right there. Nope, we're gonna
Yeah,
stop
well,
right there.
to add to that, Frankie just posted in the chat that it's Barry White's birthday.
It is Barry White's birthday. Heavenly birthday, Barry.
Yeah.
Well, happy birthday, Barry
Yeah,
White.
if you know,
Yes.
you know.
Yeah.
You know. They were asking, I don't know if you were on the show, Scott was asking, like, you know, sexy time music. What do you
Oh, no.
what do you
So-
go with? I came with Barry White, but I forgot about Aretha Franklin. The other two jamokes were like Steely Dan or something.
Oh,
Oh no.
Yeah,
you
right.
mean
See, that's what I mean.
Yeah,
I needed you there,
need
Vanetta,
some
to
baby
save me.
making music.
Yeah.
Yeah. You get Barry White.
Yeah, for sure.
It's good times. Happy
Yeah.
birthday, Barry White.
Yeah.
So, Nikki, what's on deck for you for the weekend? It's the freaking weekend.
I before we get to his weekend commitment, so it's you mentioned the girlfriend. This is like Facebook official now. Like, I mean, you mentioned her on the show.
I'm very happy about this development.
Look at him.
though.
Look at him. I mean, is this like your social media outlet that you could?
yes.
Got it.
Is this the hard launch? You're launching
Of course.
on Maine, as the kids say.
Yeah, I mean, to our audience, this is a big moment.
There's a lot of sad cougars in our chat right now.
Well, you know, there's room for a gumata here and there.
So yes, what are you and your girlfriend? Oh my God, Nikki, it's apple picking season.
Oh my
my
God! Yes! Woo!
Oh, that is so romantical.
Yes.
I've never been on an apple picking date, but I would love to go. But that's my dream date, and he knows that.
Wow.
You know that meme? Never mind.
No, I don't know.
Okay, it's fine.
That's good, though.
But yeah, what are you doing this weekend?
I don't have any plans.
Oh, come
Football
on.
Sunday.
Yeah, that's true.
Yeah,
You
this
know.
season he's deep. He's deep into the football. I mean,
Yeah.
you have been the last couple of years. I mean,
Yeah, you know.
you go. How many pools you in?
I got all sorts of stuff. Mikey's really the number one, but I'm
Yeah. Right.
Yeah.
Yeah, I just don't understand how you do you have like a dashboard? How do you manage all of it? Like,
I probably should.
Right,
Probably
yeah.
should. That's next up. But
Yeah.
Yeah, no, it's easy to manage. It's
all
not,
right,
it's
if you
not
say
too
so.
hard. Yeah.
Usually
But-
have the same-ish players
Yeah.
going in. Yeah.
Yeah. But I actually do have something that I'm planning. So I've been growing peppers
Wow.
on my balcony. It's my like old man type thing.
Sure.
It's my middle age.
Yeah.
My
we get sorted into houses in middle age. Either you get like
midlife
birds
crisis
and
kind of
plants,
thing.
and
So I
that's you.
I've been growing peppers all summer, and I've been saving them. And
Are these hot peppers?
Hot
John-
peppers.
like John gets?
like John does. Yeah.
Okay. All right.
So I got hot banana peppers, Tabasco peppers, jalapenos.
Ooh.
I've been saving them all summer, and I'm gonna pickle them and jar them and make them into like a jardiniere.
Ooh.
I got a logo and everything.
What's the name? Is
You
it
have a
your
logo, you
initials
said?
or
I haven't decided on the name yet.
Okay.
The name is still. So, but that's that.
Name is subject to change. Are you selling the naming rights to the
Hey.
pepper jar?
No. There's gonna be a lot. I have like 3 bags, freezer bags full of peppers.
That's great.
A lot.
Wow.
John, you don't do that anymore. I haven't seen the last year or two. Do you still go pepper picking?
Do you pick
Yes.
a pickled peppers?
You do, John?
I do, yes.
Oh, you're just not sharing them with us anymore.
Haven't
Yeah.
done it this year yet.
Got it.
Wow.
Okay.
Do you have your jars yet, Nikki? Because I got a mason jar supplier if you need mason.
Do you?
Yeah,
Is
I
it
make-
Amazon?
I make jams. Yeah, it's like Amazon. Yeah.
All kidding aside, I have a bunch of mason jars.
Nah, I ordered mason jar.
Okay.
Yeah, but you need the collars and the lids.
Yeah.
It's got to be like official and
Yeah.
if you're gonna seal them, I have even the tongs that have the rubber on them. So because when you put them in the boiling water to pull them out, you need the special tongs.
If you
to-
pickle the peppers, they'll last longer. So
Yeah.
Pickle them first, and then you.
But then to vacuum seal them though, if you put them in boiling water, then it'll.
Yeah.
Don't touch your
my
eye. Don't touch your eyes
cousins-
after you touch the peppers.
Jessica's husband,
Is it pickle pepper?
You packs a peck of pickled peppers.
Adam.
I didn't know that.
He's the TikTok chef star, Adam Witt.
Oh, I thought you meant Jessica here, our Jessica.
No, my Jessica.
Yes.
My cousin. I guess
Cousin
not your
Jessica.
cousin anymore.
Yeah.
Your cousin once removed.
ex-cousin.
Your ex-cousin.
I think you're always cousin. I don't know how that
Yeah.
works. Maybe
Yeah.
not. I don't know. I get. Well, okay.
Yes, we're cousins.
Yeah,
We're
yeah,
cousins.
yeah.
Yes. I'm
He's a
very good
he's
friends,
a TikTok
actually.
pickling star.
He's a TikTok like food chef. He's
Yeah,
awesome.
you can throw his name out there. Go
Yeah,
ahead.
Adam Witt.
Yeah.
Adam Witt.
Okay, I'll have to
He's
check out
on there.
some of
You've
his
probably
videos.
seen his stuff.
Yeah, I didn't know there was a familial relationship.
Mm-hmm.
Yeah.
Cool.
Yeah. So he sent me, the recipe.
Yeah.
He really put me on, as the kids would say.
Yeah.
You know.
Look at you getting in your domestic era.
I know. That's.
And using vernacular from generations that are coming after.
Yes.
Yeah.
Yes.
Amazing how you've aged.
Well, that's what happens when you go unk.
Yeah, but you embrace your unk status. I love
do,
that for you.
I do,
So
I
it's
do.
nice.
Yeah.
That's funny.
You should. You can't change it.
No,
Well, Bat, what is on deck for you this weekend, or what'd you get into last night?
Start of the high school hockey season was last night. We were all the way out in Naperville. It was like an hour and 20 minutes with traffic there. It was disgusting.
That seems short. It seems like it would take longer.
Oh, the expressways are horrible.
Yeah,
Absolutely
well.
horrible. 1-1 tie, and we lost in the shootout. It was fun. It was a good
That
game.
sucks.
Kids played good. First game
Did-
together. It was nice.
Did Vinny get some ice time, or?
Oh yeah. He got some ice time.
Oh, good.
It was fun, but he's playing with he's got a couple of juniors on his team and stuff like that.
Sure.
Yeah.
Yeah.
It was good. He's
There's some-
learning.
There's
He's
some
learning.
big
He's gotta hustle.
kids, I'm sure, that play at this level.
They're getting competitive.
Yeah.
But it's cool because it's a different level than where he was at. Like, they make them put on, like khakis and a white shirt and ties.
Oh, that's nice.
Yeah, it's really cool. It's very, it's a proud moment, at least for the parents.
Yeah.
And they embrace it too. It's kind of cool, like he's into it. Like he wanted to find, the khakis that he wanted to wear.
Yes.
He gets to wear his jersey in school. It's kind of cool. He's going to the dance, which is
Whoa.
Yeah.
Oh, like his
Nice.
homecoming or the fall dance, the fall ball.
Yeah, I don't know. It's
whatever
not
called.
homecoming, but it's
Some sort of
something.
fall dance, yeah.
Exactly. Yeah. So
Nice.
he's happy.
Nice.
Life is
Has she been hanging out in the sauna too?
Nobody's had been in there yet, in fairness, but it's all
he's got. There's a lot of places for him to go now. There's a lot of corners
Oh, gross.
to hide in the backyard.
No.
You know, when you add those in, you better be careful. You might want to put a lock on that.
I leave them alone. I don't creep on them. I just watch the videos afterwards.
Oh no. That's okay. Let's cut that one. That one could be that could be put in.
It's gonna be admissible for court.
Yeah, that is admissible. That was
gonna be just
a self-admission.
That's fine.
That's not good.
That's good. Did you guys watch any football last night? The Packers and the Commanders. What are your thoughts?
A little bit. I mean, the Packers they're very good.
I don't know that I like this. I don't like a world where the Packers are dominant. Like,
they're legit.
They don't stop, man. They don't stop.
They're a
Even when they
legit
lose
Super
Rodgers,
Bowl
they
contender.
don't stop.
Yeah, no, I know. I feel it, and I'm not super happy about it.
Yeah. And the saddest part is that it'll probably exist for the foreseeable future, which is not.
You saying that this is setting up for maybe just a
they have
dynastic run from the Packers?
They have one of the youngest rosters in the league.
Sure, and the LaFleur, he's young.
Yeah.
Yeah,
so
he's like a baby.
that's not good.
No, it's not. And they got
positive.
Micah. Yeah.
Yeah, they have, one of the best defensive players, if not the best defensive player in the league.
Sure.
It's not good for the Bears after the death of the Bears on Monday.
Sad, but
very
true.
sad. It's very sad.
Yeah. I don't like it. But congratulations, I guess.
Yeah, to the Packers
Wisconsin.
peeps.
Yikes.
Brutal.
All right.
Oh, well.
Hey, well, we got a great show for you today. Tom is taking care of some business in New York City. He is doing an investor.
Business.
He's doing sort of an investor talk with Anthony Pompliano. So
Nice.
if you're a fan of Pomp Global Enterprise, if you listen to Anthony Pompliano's podcast, we will be getting, I think, some footage from that later. So we might be able to break up some bits and pieces of that. To put some clips up on social media, but that is TBD. But that is where Tom is. But I really just think he's at Katz's.
Probably.
He was like, I'm not going to have any time to eat anything in New York City. I'm like, be so for real. He's like, I'm maybe like a hot dog on the street. And I'm like, girl. But he's such a drama queen.
He is a little bit of a drama queen. I agree with you. And very high maintenance.
Yeah.
I'm going to have to get rid of his ass.
But that's where Tom is today. But we got a great program because it's Double the Bats, and we love a Double the Bat show at the top of the 8 o'clock hour. We're going to bring you the weekend stocks. Jamal's going to come in and sort of recap kind of the wacky madcap week. Had CPI.
Buy the opening, sell the close. Jamal, sleep in.
CPI, PPI come out this week, a couple of earnings, a crap ton of IPOs. Jamal's going to break everything down. He's titled it, Everything is Bid. That's great.
That's pretty true.
Everything is bid.
I mean, yesterday was kind of a buy everything day.
Yeah.
Couldn't miss.
Also at 8:40, we're going to do Fast Market.
Woo!
So the bats are going to take your trade ideas and then use Tom's money. No, I'm just kidding.
Yep, it's one of my... Oh, no, it's true.
You're going to use Tom's money?
Oh, absolutely.
Yeah.
100% true. Can't wait. It's one of my favorite segments to do when I have
That is going to be at 8:40. Then 9 o'clock, market measures. 4 option strategies in quiet markets.
Ooh.
I don't know if it's like being a first responder. You're not supposed to ever say the Q word because then that jinxes it. You know, if you're working in a
I'll
hospital,
take that.
Like, yeah.
I would like
You're
it.
not ever supposed to say, oh, it's quiet.
Yeah, give me some vol.
Yeah.
We could use some volatility, you're right.
Yeah.
Well, we will be looking at some of the options behind low vol at 9 o'clock. Then 9:20, talking with Bat and Bat. They're taking calls. You guys are taking calls. If you got questions, Bats have the answers. So we would love to hear from you. That's going to be at around that 9:30 time frame. Or just drop us, because we have someone who was born after 1985 in the room. We also can take questions from the chat.
Yes, of course. My peeps in the chat, they're already, sounding off.
Right.
And the Bat and Bat support.
Yeah, what's up, chat?
Thank you.
Yeah.
But we got a great show. Let's get it going. You guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading
In
story.
today's
Breaking
headlines.
news. Top story. Just in.
In today's headlines.
Breaking news.
All right, everybody. Today's a fantastic Friday. It's September the 12th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
U.S. stocks roared to fresh record highs yesterday, fueled by
That was my
optimism.
roar.
Is that your roar?
Oh no, roar. Fueled by optimism around Fed interest rate cuts that could arrive just in time to keep the party going on Wall Street. But as stocks jolt higher, seeing new highs in the Dow, in the S&P, in the NASDAQ, whatever. But as stocks jolt higher, the bond market's message has been more grim. Do you agree with this headline? And what are you doing in the indices and what are you doing in bonds?
More importantly, did you miss this era?
Oh no, I was in, this was my
that
era.
was-
This is
yeah.
our,
What
this
was
is,
that thing called?
R?
I'm okay. I'm younger than you, so. No, this is my era. Like we used to call it
Yeah.
the fortune teller,
Fortune teller?
Yeah.
Yeah.
I remember
Yeah.
those things. Yeah. Those
Yeah.
were great.
and then you like open up the inside and
Yeah.
you play MASH. Like if you live in a mansion, an apartment.
Smash, did you say?
No, MASH. If you
Oh.
live in a mansion, an apartment, a shack, or a house, and then like how many kids you would have, and like all
Yes.
this other.
Bonds are down 16.6, 117 and change. I don't know what's so grim about the bond market.
Yeah, I don't know either. But I was like,
Yeah,
okay.
it's been on a tear. It looks like 0.5%. Looks like they're gonna cut. Quarter.
Are you doing
Yeah.
anything in the individual indices, like in the Russell or in the SPY, in the Hughes?
They're all at
Yeah.
or on all-time highs. So I mean, I don't know what's grim here. I mean, I guess you can look at it as how much higher can they go.
Sure.
If that's
Yeah.
grim. I don't
Yeah.
IWM was the underperformer for the year, and it's kind of caught up in the last,
Yeah. I mean, it closed.
pretty much yesterday.
Yeah, that was
Yesterday was a huge day, and
Yeah.
it's basically so everything's at highs.
Everything's
It's
nice.
like,
Everything's great.
We're
good.
Low vol.
What could go wrong?
Yeah, what could go wrong?
Your boy Ray Dalio suggests gold as a shield for U.S. markets at risk of heart attack. Where you been? The Bridgewater founder says gold might be a way to shield investors from unhealthy markets. He warned that the U.S. spends more to services its debts, and that squeezes out other spending. I just wanted to talk about metals. I don't really care what he says.
Yeah, I mean the best thing to do is ignore what these
Right.
say.
Yes.
Is usually because it's usually well after the fact. I mean, gold has rallied
Sure.
15%.
Have you been able to capitalize on that at all?
A little bit. I mean, I've been trading wide broken wing butterflies on the
Okay.
upside into this move. I mean, I didn't catch the up move here. It's hard to with volatility at 15% right now.
Sure.
We just had a 15% move, so we've had a year move in a week. It's unless you were positioned for that upside move, it's hard to now trade it.
Gotcha.
Like what are you gonna do? Take another 1-2% to the upside? It's just kind of a hard trade. So I've been
But
doing
that's good to put it in perspective because you are constantly bombarded by these headlines and you're like, how can you actually capitalize on this?
Yes. This headline is what we call exit liquidity. So
Hey, some good news, maybe not for you and me, Nikki, but good news for you, Bat. Social Security checks could increase more than 2.8% in 2026. Sad news is more seniors face poverty. The cost of living adjustment, aka COLA, has never been more than around, I think, like 2.6%, but it could be as much as 2.8%. That would be an average of around $54 monthly increase. Did you know 39% of seniors rely on Social Security for all of their income?
Yeah, I could see that.
Yeah.
I mean, that's the living dream, right? You work and work and work, and hopefully can live off of Social Security.
Yeah, but you can't live off Social
I know,
Security.
but the hardest thing to do, which they never talk about, as I am a rising senior.
yes. Do you get the? Oh no, you're 1 year away from the discount at like the theater. Like
Oh no,
matinee.
65. He's right in there. Like they'll start at 55.
Oh
Some
really?
senior discounts. Oh yeah.
Oh wow. Do you do that? Do you
Don't
take
look at me like that.
Do you take advantage of that?
I have not taken advantage of that yet, but I'm thinking about it now that you outed me to
Yeah.
everybody. I mean, you're younger than Nikki, I heard. I didn't say a freaking word about that. But the hardest thing about Social Security is when do you think you're going to die?
Sure,
Is really the big question as you get to this golden age. Because if you think you're going to die earlier, you take your money
Yeah.
earlier. If you think you're going to live later, you take your money later. What a conundrum.
It is.
Yeah.
It is.
Yeah.
Sad.
Yeah.
Yeah.
Do you think, Nikki, that we'll have Social Security by the
No.
time we retire? I
Not
don't
a
either.
chance. Not
I know
a
people are like, no, it's going to be fine. I'm like,
Nah.
it's not going to be fine.
It's going to be fine. It's going.
Whatever. As long as they have like a geriatric OnlyFans, I'm going to be all right.
I mean, there's a kink for everything. So
Swing
it's
low,
fine.
sweet chariots.
Yeah.
Hey, in other news, let's get to some earnings from last night. Adobe stock gains on earnings and revenue beat. Adobe reported better than expected results for the fiscal third quarter. The software maker shares, though, have dropped 21% from this year, badly underperforming other tech peers. Adobe announced revenue $5.99 billion versus $5.91 expected.
Yeah, Adobe's been a pig. I mean, the stock was trading in the middle of last year at 500.
Yeah.
It's been cut in half, so
I can't believe
it's up like
Adolf is
$10.
bearish on this stock for earnings, though. I mean, it's up.
I can
$10.
believe it. He couldn't hit a dartboard if it was the size of that TV.
Couldn't hit the water if he fell out of the
Yeah,
boat. Yeah,
yeah.
I get it. So he did sell some puts on the bat recommendation, which he'll make money on today.
Yeah.
Hey.
It's up $10.
Yeah,
But you're right.
They must have
it's
been
a-
really far out of the money though after the Oracle move.
Yes.
'Cause,
Oh,
like
my
after
God.
the
He was
Oracle
so
move,
scared. I
he's-
mean, you should have watched him press the button. He went like this. He went like that.
Yeah.
My hand.
Yeah.
Sure, well, he's
And
traumatized.
I mean, the tranche size has been. It's been
slapped.
it's like sickening
So
to
good.
watch. What a man of means is.
It's so
always-
good.
Ooh.
It's so good.
Yeah, it's
Figure Technology stock sizzled after their IPO as investors stay hungry for crypto deals. The ticker FIGR, stock up 24% in its first day of trading. At the closing bell, the stock stood at around $31 a share. The IPO price was $25 a share. It opened at 36 and traded as high as 38.05.
Yeah.
Yeah.
I mean, there's nothing to do here. You can either buy the stock or do nothing because a hard to borrow stock really
Sure.
can't sell it. So
Yeah.
it's
I love a good fig though.
You and
Actual
your dad.
figs.
I love a fig
He's a big
Newton.
fig guy.
I like a fig Newton.
Yeah.
Yeah.
I am a big fig guy. I love figs.
Yeah,
I tried
fig
to grow.
Newton. That's not fig.
Yeah, I agree with him. But I love a fig Newton
I like
too.
fig
Though. I mean,
Newtons.
I
Yeah.
won't throw any shade on a
You're
fig
talking
Newton.
real fig.
I tried to grow them here in Chicago. They just don't grow.
Yeah.
Like even the Brooklyn.
You put them
fig
at your
tree.
Florida house.
I could.
Yeah.
Not down there enough to do something with that, but
That's
yeah,
on
I
you,
could.
man.
That's a good. You know what? Maybe in a little pot someday.
Yeah, there you go.
Yeah.
There you go.
Might have to do that.
Hey, in other crypto news, we're going to have the Gemini IPO today. The Winklevoss-founded Gemini is reportedly pricing their IPO at $28 per share. That values the crypto exchange at $3.3 billion. One headline says that the IPO is over 20 times oversubscribed. Again, that is supposed to go live today. We will see what happens.
This is just a hot potato type thing. Everybody trying to get in on the initial IPO because you're going to get it at quote unquote discount.
Right, a pop.
Yeah, again, this is another thing. It's
Yeah.
hard. To
It's
say.
going the ticker GEMI. So again, but that should be later today. So,
Okay.
but it could put some pressure on Coinbase because Gemini
Ah.
does operate as a crypto exchange. So
Not yet. Up $3. Coinbase.
I liked the tweet that I don't know if you saw this, but they like tweeted out. They were talking about like something about crypto, and they tweeted out like the App Store, and they didn't have Gemini downloaded.
Oh no!
Like it said "get," you know, like
Oh,
in the
no,
App Store where it
instead
says
of-
like
oh, no.
"get,"
Whoops.
and they had Coinbase as like "update." You know,
That's funny. Whoops! Someone should
Yeah.
probably have double checked
that's
that.
good.
Yeah.
Throwing a little shade out there.
Yeah.
Hey, this is interesting. Last Friday, the S&P 500 slammed the door in Michael Saylor's face when it denied Strategy inclusion in the world's most prestigious equity index because they're saying, look, what you're doing is not really a business.
Yeah.
It's a scam, and you cannot be in the hallowed halls of the S&P 500. Good day, sir.
I don't think it's a scam. I think it's
But
just
is
the
the
fact
S&P
that
500 right, though, to like not
well, their
include
rules
them?
are based around revenue. I think you have to
Sure.
have 4 or 8 quarters of positive revenue.
But
And
it's a blow to
this-
other crypto treasuries, though, too. I think they're going to be
Yeah, but
like,
there is no revenue. It's just
Right.
the asset going up.
Right.
It's like
It's the churn.
that's not like you're not producing revenue.
Sure.
Like that's
You might be
that.
producing gains, but you're not
Yeah, the
producing revenue.
gains is not revenue,
Right.
and so that it's a pretty clear distinction. Like it's never going to be in the S&P or
Up
should
$2,
never.
328. MSTR says.
Yeah.
Hey, big news in the overnight hours. Microsoft and OpenAI reached a non-binding deal for a new relationship terms that would allow OpenAI to proceed to restructure itself into a for-profit company. It marks a new phase of one of the most high-profile partnerships to fund the ChatGPT frenzy. OpenAI says the non-profit parent will still own an equity stake in the company of over $100 billion. So that sounds like for-profit to me. What are you doing in Microsoft?
It's up $5 right now. 60
Okay.
Yeah,
pre-market.
506 is going to lead.
That's probably what's keeping
Street
the
likes it.
Nasdaq up right now. Because the Nasdaq, I mean, like the market was kind of unchanged all night.
Right.
Unchanged a little bit lower, right? I mean,
Yeah.
S&P is still down 3
Yeah.
and change. Yeah.
Yeah.
Yeah. Yeah. NVIDIA stock got upgraded yesterday. A D.A. Davidson analyst is keeping an eye on emerging competition, but says NVIDIA stock is a buy and the future looks even brighter. How do I get one of these jobs?
I don't know, but it's the best job.
Right?
There isn't a better job.
Just
Just
NVIDIA
come out with one of these every quarter.
and they back a Brinks truck up to
Yeah.
your house and just give you bags of money.
Yeah. All you gotta say, I'm moving my target to 180.
Yeah, just
Right-
on the
right
heels,
at the money.
On the heels
Right.
of
And then
Oracle
when the
going
stocks-
to the stratosphere,
Yeah.
like, hey, let's go, LFG.
When the stock's up 10 more bucks next quarter, you say, I'm moving my target to 190.
Why not?
And then you call it a
Nostradamus
day,
here.
go play some golf.
Yeah, it sounds great.
What are you guys doing, if anything, in NVIDIA?
IV rank of 1. In
Oh,
this,
gosh.
Directional, and it looks like it's up 50 cents, up small.
Yeah.
But it's at around all-time highs.
I got you. I feel you.
It's really had a rally last week or so from, about 10, 12 bucks from selling off about 10, 12 bucks, then rallying 10, 12 bucks back up.
Just always buy those NVIDIA dips.
And if you're not quick enough, you miss it.
Yeah.
The NVIDIA dips are days.
Yeah.
You got,
Uniform.
you got hours. Yeah.
Alibaba and Baidu have begun using their own chips to train AI models. They've started using internally designed chips to train their AI models, partly replacing those made by NVIDIA. Alibaba has been using their own chips for smaller AI models since early this year, while Baidu is experimenting with training new versions of its Ernie AI model using its Kunlun P800 chip.
Yes.
We're doing in Baba and
Their
Baidu.
own chips.
Yes. Wink, wink.
We see you a chip, raise you a trip.
Yes.
Bob
Yes.
had a big day yesterday on this, trade up to 1.
It's had a big week.
It is.
weeks.
It has
Has it
had a big
really?
week. You're right.
All the China stocks. have-
Okay.
Yeah,
have
up
been
about 20
moving.
bucks on the week or so.
Yeah.
Or going a little bit further out than that, maybe 2 weeks.
Yeah.
Yes, big move in Bob. It looks like down a buck this morning.
What's the IV in there?
31, not bad.
That's not bad. They're boost
as-
earnings.
As things fly, yeah,
Okay,
not bad at
something.
all. Yep.
What about Baidu?
Baidu's had a huge move too, and it's up like $5 or $6 this morning. I mean, it's gone from 90 to 110.
Oh, wow.
And now we're marked at 117 here in the pre-market. So,
Okay,
been a big move.
Yep.
Yeah.
pretty good.
Yeah.
Not bad at all.
Hey, the Federal Trade Commission said they're seeking information from several companies, including Google and Meta and OpenAI, that provide consumer-facing AI-powered chatbots on how these firms measure, test, and monitor potentially negative impacts of the technology. As I reported earlier, Meta had started making some kind of shady, like, celebrity chatbots, but they have, like, other ones. I saw one. It was like if you wanted to chat with strict but rich parents. There was a chatbot for that, and then others were like athletes or whatever. But then the chatbot could turn like really dark, and like next thing you know, Josh Allen is telling you to, set your baby sister on fire. I don't know.
Yeah.
Like it's so slippery.
It's a slippery slope.
Right? Yeah.
Yeah.
And these are impressionable kids, and they're talking to people that they idol. I don't know. I'm so scared.
Yeah. the kid aspect is a little tough.
Right.
It is.
The adult aspect, I think
Tough enough.
Well, I think, there's things out there. Everybody should be aware of like social media scams and whatnot.
Sure,
I get
sure.
emails all the time of like, is this, Tom Sosnoff in the WhatsApp chat?
Right. Tom Preston does not have a
Yeah,
WhatsApp.
asking me to send Bitcoin to some exchange in
Right.
Kazakhstan.
Right.
And I'm like, do you think so? Like, is
Probably
that,
not.
Yeah, it's probably not. So we all, this stuff, like everything moves 2x every year.
Yeah.
Right? Like it gets faster and faster and faster and so fast
Yeah.
that we like can't even keep up with
But
it
even
now.
with just the
You gotta
smallest
have-
amount of information, like a bot could recreate someone's personality,
Yeah.
tone of voice, inflect like it's so easy to
No, it's
get
crazy.
tricked.
you gotta have some street smarts.
But I would like to announce I am engaged to Idris Elba, so
Oh wow.
we're very happy. And
Very
no, I'm just
nice.
kidding. What are you guys doing in Meta?
Meta looks up about 50 cents or so, and Google.
Chop Fest.
Yeah, a little chop fest. Google looks up about 50 cents also.
Yeah.
This is a crazy sentence. Sometimes when I like read these headlines, I think about like my grandpa who was born in like 1929. He's no longer still with us, but I think about like these headlines and like, how would I have explained this headline to my grandpa? Perplexity AI is being sued by Encyclopedia Britannica and the Merriam-Webster Dictionary because of misuse of their content for answer engine for perplexity searches. What a wild time we live in.
It really is, isn't it?
Yeah. I mean,
They have a
gonna be-
case.
there's going to be a lot of companies that this is like their last hurrah
Sure.
of, to get the bag, so to speak. Because, I mean,
Yeah, but if you think about the encyclopedia, I mean, that is their own work and their research, and they've been an encyclopedia. And then if a large language model can just like copy and paste, then,
Yeah. Yeah.
that's not fair.
yeah.
Well, they didn't evolve. I mean, right? I mean, the encyclopedia just,
Sure.
stayed.
Well, there's Wikipedia, but yeah, sure,
Yeah.
I guess. But anyway, it's just it was just like, how would you try to explain this headline to your mom? Like
Yeah.
it's just a weird,
Yep.
it's a weird time that we're in. That's all. Hey, this is fun. Apple had their big event this week, announcing a range of new products, including Apple AirPod Pro 3s. AirPods live translation is going to be delayed in the EU, but it will work for Americans on vacation because of EU privacy laws. If you have an EU-based Apple account, you can't get the live translation. But if you are just an American traveling in Europe, you'll be okay.
Wow.
First 5 languages will be French, Spanish, German, and Portuguese.
Wow.
I think they're just trying to get us to travel.
another
That's what it is.
But this is cool. If you could just put earpods in and understand
So cool.
what someone's saying,
So
and
Yeah,
they're
it's
gonna
amazing.
they're gonna add more languages towards the end of the year,
for
like
somebody-
Mandarin and Japanese.
Yeah.
For somebody like me who, like, I don't get the language, like, it just doesn't come very easy.
Sure.
I get the math part. I don't get the language part. This is a game changer.
Yeah.
Game changer.
Yeah.
And that took 3 years of Italian. We all know I learned chiuda la porta, which means close the door.
Yeah,
Last
and
one
I
in the
mean,
room.
I've been very honest about this. I've exhausted all of my resources here in America. There's nothing left for me here. I need these AirPods. I need to expand my range.
What's the woman version of like the man going to like a Thailand or like
Oh no!
like what's the woman version of that? Is there a spot
Yeah,
like
what's
where
the
you go
version
for
of
like
that? Let us
I don't know.
where you get like a young sugar baby,
I don't know. Maybe like in the Caribbean somewhere.
Okay.
Maybe. I don't know.
All right.
Like how Stella got her groove back.
Good
Yeah.
answer. You don't know.
Yeah.
That's the good. That's the
Actually, I don't know. What are you guys doing in Apple though?
Yeah.
We had a research piece on Apple about what
Yeah,
they
Apple's been
normally
a take under lately. This week, unlike the other stocks, it's gone down $10.
Yeah.
So,
Wow.
230 and change, Ivy rank of 12. It has earnings coming in October, next month, October 30th at the end of the month. So
Are you gonna get the new iPhone? Are you gonna get the iPhone 17?
I need
I was
a
just
new
saying,
phone.
you help
Mine-
him.
mine
You
is
help him,
dead.
Nikki. Help your father.
Help me.
He got the 16-year-old.
I do. Yeah,
soon to be
15. But yes,
15.
yeah.
Yeah.
It's better. I'm Unk. I can't help anymore.
Yes, you
I'm getting phased out.
Yes.
You are beyond.
Yeah.
Right. You're right about
Hey, Tesla's robo-taxi plans for Nevada are moving forward with a testing permit. Tesla's preparing to launch its autonomous vehicle technology on public streets in the state. The testing permit allows the company to expand their autonomous vehicle ambitions. This also, though, comes on heels of news that the company's boring tunnels is shut down. There was a crush injury in one of the tunnels that run underneath Las Vegas. That's sad. What are you doing in Tesla?
Oh no, they should build some boring tunnels in Chicago so we can.
So you can get to the airport.
Yeah, so we can go anywhere.
It's called the L. It's called the L. That's right.
Well, yes, but other than going to the airport, if you have to go anywhere north, I
know.
They should have that helicopter service they got in
I know Blade.
New York. You might do that. I mean,
Yeah.
They should have something. They should
Yeah.
have something. Tesla's been a little bit of a tear here. Last 2 weeks, going from around 330 to almost 370, where it sits right now.
Wow.
369.
Tesla and Apple look cheap, price-wise,
Relative.
when you look at the rest of the Mag 7s.
In other IPO news, a company called BlackRock Coffee Bar has raised $294 million in its IPO. The coffee chain said setting the stage for a closely watched IPO. The Scottsdale, Arizona-based company sold 14.7 million shares at $20 a piece, compared with their marketed range of 16 to 18. The IPO values the company at $950 million. I've never heard of BlackRock Coffee.
Somebody who has an interest in a coffee shop that doesn't make any money, I would be very leery of this here. I think people investing in BlackRock, they just don't know what it is. I don't think
Well, it's
this
not,
is that.
it
Remember
should
that
go
sandwich
public
shop?
today. It should go public today.
But wasn't there a sandwich shop in like Jersey or something?
Oh
like
yeah, that was like by Bitcoin,
Yeah,
and
the
it got
Bitcoin,
it was a scam. It was a pump and dump
This
scheme.
has that stink to it. In my
Yeah.
opinion, I know absolutely nothing about it.
But maybe it's a competitor to Bros, BROS,
Bros,
which would be
yeah.
like Dutch Bros would be the only thing. Obviously, there's Starbucks, but
Yeah.
I think Bros would be the closest competitor.
Dutch Bros.
Yes.
66 and change, basically.
$8 billion market cap.
Unbelievable.
Yeah.
That's crazy. We're in the wrong business.
Yeah.
seriously.
Yeah,
I guess so. Hey, Paramount Skydance now wants to buy Warner Brothers Discovery. Slow down. They are working to prepare an offer for Warner Brothers Discovery. WBD shares closed up more than 28% yesterday, the stock's best day. Shares of Paramount Skydance closed up 15%. HBO Max says they're going to raise subscription rates because they're like, what are you guys going to do? You want to watch this stuff anyway.
Yeah.
I hate everything about this. There's just going to
Yeah.
be one media company.
Disney 116 down 50 cents.
Yeah.
Die, you pig.
WBD is Warner Brothers Discovery.
Yeah.
WBB?
WBD.
Oh, BD. I don't think I've ever traded it. Oof. Big rally yesterday.
Biggest day of its
Up a
life.
fucking
Yeah.
change today to a 7.
Paramount doesn't trade anymore, right?
P Sky is the conglomerate
Sky.
now. Yeah, P Sky. It used to be Para.
Yeah, Peace
now
Out.
it's P Sky.
Yeah.
It's out to you.
You got to think Netflix scoops one of these up at some point.
Maybe. Don't know what Netflix is
Like
doing,
live
but
streaming, stuff.
I mean,
Netflix
it's
is
Larry.
$1,200 stock.
It's
probably
Larry
true.
Ellison's son. So now they have more money than everybody now. So that's who runs Paramount. So he's well funded.
Yes, he's all right.
This is fun. Kodak has launched a series of toy cameras called Kodak Charmera. The camera, I hate that name. Charmera, sorry, like charm and
We
camera.
wouldn't know. We wouldn't.
yeah.
We wouldn't.
The cameras have already sold out since their launch earlier this week. And basically, it's just a line of 80s-inspired digital toy cameras.
Do like they
But they work.
work and
Yeah.
you can like
Yeah, but they're digital, they just look like they're from
New disposable camera, right?
Yeah.
From
80s,
years
yeah.
gone by.
But they're, yeah.
I like
Get it?
that.
Yeah.
They have blind box packaging, so buyers don't know what style they're getting, but they can take a gamble and buy a single camera for $29.99 or get the whole color set for $179.
So they're
Pretty cool,
they're
pretty
going with the
With the Labubu model.
Labubu of,
yes, the
like,
blind
yeah.
box, the drops.
Yes,
It's
yeah.
working because they sold out. So
Yeah.
I think
Good
this
for
is
them.
great.
Yeah. Yeah, that's fun. And I would say the actual they
You're
gotta
sitting
have
over there like in Tom's seat. You don't know nouns either.
yeah, you gotta have the
Oh, the sound.
Yeah, the sound.
Yes,
Like,
okay.
I hope it's not like a. I would think they still have the sound, the click sound.
Maybe.
Yeah.
But it's digital, so there's not like a mechanical
Of
shutter.
course, but they
So
have to imitate.
still make the sound.
You
Yes.
need to make the sound.
I gotcha.
Yeah. I wonder if you could do the flash thing too.
Oh yeah, with the flash cubes or the
Yeah.
sticks. Yeah.
Yeah.
That's fun.
Yeah.
Hey, Nikki, I pulled this story just for you because you got to know your audience. I think that this is hilarious. Public transit in America is so underfunded, they're relying on sports gambling companies. FanDuel subsidize SEPTA, which is Philly's train system,
Wow.
because the route that goes to the stadium just like wasn't running. So FanDuel was like, hey, yo, we got you. We'll give you $80,000. We're gonna put our branding everywhere, but we're gonna keep this train running to the stadium.
Wow.
This is America.
Yeah. I mean, tells you how awful the government is at
But they're not
managing
the
funds.
only one. They're not the only one. Transit everywhere is in deep trouble post-pandemic,
Yeah.
and maybe corporations gotta step in. And yeah, this train ride brought to you by FanDuel.
I guess it could be worse.
Yeah.
And if it makes it better, sure, go for
Yeah.
it.
Yeah.
Hey, if they can get rid of the smell on the L, that would be.
Hey, better than some stupid billboard that just sits on.
Right?
the expressway.
Yeah.
At least it goes to good. I don't have a
Yeah.
problem with this.
This
yeah.
is I don't have anything. I don't have anything against this, but I think it's funny. And then finally today, because I have the two bats here, I found the best video for you right on the historic street with some of Chicago's most iconic Italian sandwiches, because you guys are Italian. There's a new spot, and I want to get your guys' feedback on if this seems legit. Watch this.
Actually, just want to go back to Spain. We're on a mission to find the best sandwich in Chicago, and today we're trying the newest spot on Sandwich Row. We're at Bocadillo Market, and it's right across from Bari and D'Amato's. So the competition is fierce, but they're doing Spanish sandwiches, so they're really setting themselves apart from the pack. And we're trying their seasonal squash blossom and sobrasada sandwich, but first, the smoked lamb sandwich. This has carrots, cilantro, mint, and it's on a Spanish baguette. Wow. That lamb melts in your mouth. The seasoning on this is unreal. It has a tiny bit of heat going on with this sandwich. Just really meaty and rich, yet the sandwich still manages to feel very bright with the carrots and the green beans. But I think the star of this baguette, perfect. Got that crispy outside, tender inside. Great sandwich, 8.4. And now for the fried squash blossom sandwich.
love squash.
Got squash, goat cheese, some sausage, avocado, and a rosemary honey.
Ooh.
Oh, wow. The squash blossoms are like crispy little pillows when you bite into them. The avocado provides a little bit of creaminess. And then, of course, you have that sopressata sausage in here. Get a little bit of meatiness. It's just very well-balanced sandwich. Super interesting. And the honey provides a little bit of sweetness. I mean, if you want to try a sandwich that's super unique, this is your sandwich right here. 8.1. Actually, just want to go back to
There
Spain.
you
We're on
go,
a mission to find
Bocadillo
the
Market. Also, you guys
That's-
paying $19 for a sandwich?
That's,
It's this
That's a
A
economy.
little gross.
Yeah.
I'm not gonna lie. A little
What
gross.
are your thoughts? The Spanish
I
inspired.
have only one thought on this subject. You gotta get Tori on this. Can you send her that video?
Yeah, that
So
could
we
be
can get
good.
this for lunch one day.
we should have a couple for lunch.
We are
today.
not getting approved for $19 per person sandwiches.
Yeah.
Tell her it's 9. We'll just erase it.
Yeah.
Fine.
Yeah.
Fine. She won't know.
So what are you going? Lamb, squash blossom?
The lamb one kind of looked like banh mi.
Oh yeah,
Like it
yeah.
had that like vibe with
Yeah.
the cilantro and stuff. I'd probably go with the lamb, smoked lamb.
Yeah.
That sounds.
Nah, I go the blossom.
Sopressata and the
I'm a
squash
blossom.
blossom.
I'm a blossom.
There you go.
But they both sound amazing.
And
I
then
have to try
go
them.
to D'Amato's for the cookies.
Yes, yes.
Make a
Very
day of
nice.
it.
Yummy.
Anyway. All right. Well, thank you, Bats. What's coming up next?
We're gonna take a quick 90-second break and come back. We got more Tasty Live after this with confirm and send. Nikki's gonna answer these things right this time.
I'm gonna try.
We'll be back in 90 seconds. This is Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live as the E-mini S&Ps are down $4. Buy the dip.
Oh, of course. I mean, if you don't buy them today, they're more expensive on Monday. Come on.
It has, I think this will be the
careful.
7th or 8th day in a row. Yeah, if you bought the opening and sold the close, it worked. As you can see here from the right side of the screen, new highs. NASDAQ up 18 and change. Russell down 9. Russell, the weakest group, Dow down 101. I kid about buying the dip or selling or buying the opening and selling the close, but that is just the facts these days. Volatility in under 18 now to 17.99, down 2 or 3. Yesterday, volatility was very, very weak. I would expect it to stay a little bit bid today with this mixed market that we have right now. We'll see if volatility continues to uptick a little bit, maybe giving a little pressure to the market. If volatility continues to go lower by 30, 40 cents, you will see new highs. Bonds down 23, 1708. Sounds like a big move, and it is a little over half a percentage point, but from recent highs, you can see here over the last 7-8 days, bonds having a monster run to the upside. A foregone conclusion of a quarter point. It's only the question now of a half a point. Or quarter point. Notes down small also. Bitcoin catching a bid here, 115 and change after flirting with being under 110 just about a week ago. It's gained around $5,000 or more over the last couple of days. Trading up to almost 117. It's backed off there to 115 and change. Ethereum basically unchanged, down $5. Also has caught a bid over the last couple of days, but the futures are up 90 cents. You can see here a little bit easier to look at. Oil up $1.18. Man, I did an oil directionally long, small directionally long strangle yesterday on my option trades today, my podcast, as you can watch every Tuesday and Thursday. But it hasn't come in. Volatility creeping up a little bit. Maybe it sits here for the day.
Volatility not high.
Not high at all. No. I was searching for something to do, and I just went really wide.
Got to look at the micro crude, MCL.
Yeah,
the Mikey favorite. You buy, you like do a cover call almost. Yeah, it only uses like 12, 13, 1,400 bucks.
Yeah, because strangle uses like 7,000 or something like that.
Yeah,
so, you're 100% correct.
You got to be more directional. And the options are not great. I mean, if you do a cover call type position or buy micro crude and sell a call spread in
CL.
in CL because of the span
Synthetic
margin.
covered call.
You get like a synthetic covered call, and it's a little bit juicier and a better markets.
I agree.
Bid ask spread. So you
I
can
agree.
do that too.
I agree. You bring up a great point. Good job. Good job out of you.
Try.
Gold up $6.60. Silver up 33. That's a much bigger move. Look at silver really rallying the last couple.
Got up to 43 in the overnight session.
You're right. You're right. Just a skosh over, as Mr. Tim Knight would
Yeah.
say. Let's go to confirm and send. We're talking about viewer emails.
Yes.
Questions from viewer emails, I should say. Friday, September 12th. You want me to read the first one?
Sure.
How often do you think you see an earnings trade where the realized move was well outside what was expected? Also, how do you defend those types of situations? I mean, obviously, Oracle comes to mind here just the other day.
I would think over a period of time, it probably works out to be just in line with the probabilities. So I would think that, the moves that you have in Oracle in the moment.
A 2% move or like a outside the expected move.
Yeah, that was like a 4 or 5 standard deviation move. But I think, for every one of those, you'll have 6 to 10 that are inside the expected move. You think of like an Adobe where, Adobe's expected move yesterday was about $40-ish, 37 and change, and it's moved 11. So, that's for every one of the Oracles, there's going to be a handful, if not more, of the Adobes. And so the amount of times where it's outside is probably right in line with the probabilities. So I don't know an exact number. I don't think you'd have to be selective.
You're probably going to have to go back. I mean, since earnings are only 4 times a year, right? They're quarterly. You're probably going to have to go back quite some time to make those numbers work when you get a 4 times the expected move here. But that's why that's why options are priced. Everybody always asks, well, man, these options, $100 out of the money with no time left to go in the day or trading for dimes. It seems like free money. Well, it's not free money because you can get these kind of moves. That's why all options.
But it's not outside the probabilities. If you look at if you look at the entire earnings season, I'm sure it's distributed relatively normally. I mean, you might have a skew to one side or the other, but of 100 trades that you do for earnings, you should expect one of them to turn out like Oracle.
Yep. Next question, please.
All right, so another one. Do you believe in gap fills? For example, Oracle gapped significantly higher following earnings. Would you ever establish a short position just on the belief the gap will be filled?
I mean, our research shows that the stock usually goes sideways for at least a month or two after these big gap ups. Now, eventually, does it fill the gap? I mean, statistically speaking, it probably has a 75% chance or more of filling that gap. So, yeah, it may fill that gap, but I don't play for it or establish a short position. In fact, I would Oracle with a good IV rank of 51 and horrible markets would be the reason why I wouldn't probably put on the trade. Would be something that I would be looking to sell premium and not be directional. That being said, Oracle traded down to 307 after trading up to 340 or so. But Oracle does have an expected move over the next 35 days of around $30. So inside the move right now.
Yeah.
But no, to answer the question, that's something I do. I mean, unless I have a directional bias.
Yep.
Anything to add? You good?
No, I think that's good. I mean, better to short it after the gap than before, right? I mean,
I will give you that.
When you see something gap up 30, 40, 50%, my first thought is like, okay, I want to, get a little bit of short dollar.
Sure.
So, I think I lean contrarian into those.
Sorry. We've seen a number of IPOs this week. What are your thoughts on buying IPOs? Do you think they are worthwhile to own stock? And then when the options list, usually about a week to 2 weeks afterwards, they've been coming a lot sooner these days than they used to back in the day. You can either sell a covered call or transition your position to a synthetic one.
I don't trade a ton of stocks, so I would say it's not really my forte, but all of these IPOs have been, 2-3x wins in a couple hours, if not days. So as a short-term trade, I think it's certainly interesting.
Yeah, so you have to, it's funny how you get on these IPOs. I don't know so much today, but back in the day, you had to be in on every IPO.
Yeah.
So you would go to a JP Morgan or something like that, or Merrill Lynch back in the day, or EF Hutton, and you would say, I want to be on every IPO, and that you would put you in a fund where you would get fractional or marginal shares depending on how much money you put in the account, and you would get the crap ones and the good ones. I did it once for a couple of years. It was neither here nor there. I don't remember it being anything great. I don't remember it being anything bad, and I took my money out of that because it just didn't seem like it was useful for capital efficiency, at least for myself. In theory, when you have a market that's making all-time highs, these IPO are wonderful.
Yes.
And if the market's lower, these IPOs are not as stellar. So I like your thinking here. It's sound. I love the way you went one step further on making a synthetic position after that to use less buying power. You've got it all here. If this is something you like to do, go right ahead. If you think you can get in on it, it'd be awesome.
Agreed.
Next question, please.
All right, so I was assigned on a deep in the money put today. However, expiration isn't until tomorrow. I thought I couldn't be assigned until then. Am I wrong about this?
It's funny that you were assigned on a deep in the money put because usually, remember when you sell a put, the person who you give them the right to sell you stock, put stock to you at the strike price, which is obviously, if it's deep in the money, it's a quote unquote losing trade probably because you want to sell a put, you want the stock to go higher, stock went lower. Maybe it's part of a strangle or anything else like that. It could be a winning trade. It makes no difference, but they could put stock to you. That happens a lot less, especially and in dividend paying stocks. It rarely happens because nobody's going to put stock to you that you can collect the dividend on. So if you did get put stock, and it certainly can happen at any time, so you are wrong on this, it really just becomes a cost to carry. As we were talking about in the last email question a moment ago, you are getting put stock, you're using more buying power. That buying power costs money. Either you're not having it to use someplace else, or you can't put it into a BIL or someplace else like that and get 5% on your money. You are now using that money. It might cost you nothing. You might have the money available, but you're now using that money in your account to hold this long stock. So it's really just a cost to carry thing when you put stock. It's not, nobody's doing anything to, try.
It doesn't change anything.
Doesn't
about
change your position
risk.
or anything else
So
like that.
it's generally pretty rare to be early assigned unless your position is so far gone that there's no value left to it, extrinsic value.
Yep.
So not a thing that we worry about.
Yep.
Next one, please.
Next week is a quarterly expiration. Is there anything we should keep in mind heading into triple witching?
Well, we had a good segment with Thomas the other day about September seasonality.
Not my Thomas.
No, my Thomas.
Your Thomas.
Mr. Westwater.
Mr.
Thomas
Westwater.
Tuesdays.
Yes.
Also Taco Tuesdays. But it was talking about like September seasonality, and it is typically one of the weaker months of the year. That said, haven't seen any seasonality this month yet.
Yeah.
I mean, come on. It's been straight up. So I don't know. I think a lot of that is noise. I think a lot of like looking back, is kind of a bad exercise. When you look back, like, you see all the analog charts, all this and that. It's just not an exercise I do.
Some things are good to know. Some things make you money. This is kind of on the borderline for me. It's certainly great to know. Put it in, your list of why I would make this trade or why I wouldn't make this trade. But no, I'm with you, son. There's nothing I do for quarterly expiration.
You got expiration, obviously the triple witching. You got FOMC next week.
Yep.
And there's a lot of stuff happening next week, and there's no vol right now, so telling you nobody's afraid. Nobody cares.
Yeah.
Next one, please. Last one. So is there a significance to an IPO trading below its IPO price shortly after going public? Is that a directional indicator? Everybody wants to know about the IPOs.
Yeah, well,
Because there's volatility.
Yes.
These things are moving.
They're seeing these stocks go up 4,000%, 5,000%.
IPO at 30, go to, open at 60, go to 90.
Open at 8 and go to 90, or sit at 8 forever and go to 90. Yeah, no.
That's why I'm saying it's just like, if you're trading them, trade them.
That's right.
I don't think you're.
I mean, significance. Sure, if you long them, it's a great significance.
Yeah.
I mean, you're not going to be short them because you can't short these products.
Yeah, there's
no options to it. They're hard to borrow. You have to locate the stock. So there's no short squeeze here.
Yeah.
This is just a game of hot potato. Like, who's going to be last, buy it so you can sell it higher is really the game here. And then it usually dies out.
Are more interesting than the SPAC era of, 2020 and 2021.
Mm-hmm. Yep.
These are much bigger companies. But if you look at any of those stocks, they're all dead.
Yep.
Like all the Chamath stocks are all gone.
You are 100% correct. You are 100% correct. But you know what it's time right now to do, son? Well, it's time to take a break because even the S&P is about to go positive. In a moment. They're down $1.50.
Praise be, the dip was bought.
NASDAQ is up 25. Russell is down 8. Dow down 81. Volatility in by 4 cents. Bonds down 24. We'll take a quick 90-second break and come back. We got more Tasty Live. We've got Jamal coming in. We're going to talk about this week in stocks. We'll be back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Here's what your buddies mean when they say to catch a falling knife. Ever seen a stock make a huge move lower? And maybe you had the thought, I'm gonna buy that stock. But then it just keeps going down. That's a falling knife. A falling knife is a stock that makes a big move lower and then continues to move lower. The contrarian trader has the idea to go long that stock in the hopes for a bounce, catching that falling knife. But you gotta be careful trying to catch those falling knives.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Rise higher, ye Taurian markets, I will thee ride. Oh, let the horned bull now be thy guide. Increase the yield, as the longs have long planned. Be not inert in flowery field like Ferdinand. Reward the longs their bulldog-like persistence. Like Lord Michael of Jordan, soar beyond resistance. Reward those who see upside positivity, as if in some ill-advised Pamplonian activity. Trip thy hooves o'er trading streets most stony, cobbled with the confidence of masters Tom and Tony. Climb with ease the line of Tim Knight's profit chart, and with thy rise make proud Slim's technical heart. Gore the matador of pessimism with thy horn. Let red capes of resistance now be torn. This market yoke to wagon now could pull to follow up the thundering of the bull. In market glory, let us be arrayed. Oh, hear this exhortation now from Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Nicky, we are back, my son. You know what that means? Time for a little bit of This Week in Stocks with Jamal. How are you, my friend?
Great, fantastic. How you guys doing?
Doing good. So's the market. Even the S&P's just turned green, as foretold. So.
Yes.
Yeah, I mean,
cancel crash. 4-point cancel crash.
Yep.
That sounds just like a lot like what's going on more recently. As we pull up let's pull up the slides, pull up the title.
Yeah, let's go. Let's go.
Everything is big.
Aptly named for this week for sure.
And it's not just stocks, it's bonds, it's gold, it's silver, you name it. A lot of things.
It's good and better right now.
Yeah.
Just buy.
Yeah, exactly. Let's go to the first slide. This was actually a really busy week. When I was putting this together, I was like, man, there's one of the few times where I felt like there were things that, we try to cover things that have happened throughout the week that are interesting, right? There are things in here that I couldn't even fit in once I started going back and taking tally of the week. It's pretty interesting. So Dow, NASDAQ, and S&P all notched new closing highs. Of course, we had inflation numbers this week. It was kind of weird because PPI went down, market went up. CPI rose, market went up. So it didn't really matter what happened. But it was an interesting week marred by a lot of these inflation reports. Mm-hmm. Huge move from Oracle this week on earnings. 30% move, or more than that even, on after they had this great revenue forecast for AI. And they had this huge contract backlog, which means they got a lot of work coming up too. We also had an ECB meeting, kind of flew under the radar on that one, but they didn't really do anything. They're still a little bit worried about what tariffs and how they're going to affect them. We also heard this week that Trump was pushing the EU to come up with 100% tariffs on China and India to influence Russia in some way, shape, or form. So a lot going on there. Gold and silver, they just continue to hit new highs. Bitcoin, though, is kind of stuck in the mud. Under 120, might still be under 115K. I just put 120 for safety. I'm not sure where it is this morning.
Yeah, we're wrapped around 115 right now.
Yeah.
But it has been
But you are right. Bitcoin's down $10,000. I mean, that's almost 10%. Well, 7.5%, 8% move.
Certainly not as risk on as the market has been.
No, and these other products.
Gold and silver are now risk-on assets.
Yeah,
I mean,
right.
It's like 10%.
More assets, risk-on assets.
Yeah.
They're just assets. To whatever.
Yeah.
I don't get it, but my friend Frankie in the chat gets it.
Frankie's smarter than all of us.
Frankie bought gold from me, like gold, like
physical.
Bullion.
Physical, yeah, and coins and stuff like that for decades.
Yeah.
Decades.
Well, I got his address. You think they're buried in the backyard?
He probably carries it on him.
You think so? Like a leprechaun? Like he got like a gold pouch?
Like a little leprechaun.
Yeah, like he got a gold pouch
Vertically
attached to his...
Is that what you're saying about Francis in the chat room? That was mean, son. That was mean. He supports you.
I just figured he was like an Irish, or in that realm, of descent.
Jamal,
I'm sorry, Frankie. I'm sorry.
Jamal, continue.
Frankie, I'm sorry. I didn't mean anything.
No, I love it. Matter of fact, I was going to say he supports Nikki, but I never know if he's talking about like Darling Nikki, Nikki Sixx, or Nikki Batiste. I'm really never sure.
Yeah, it's questionable. Yes.
Funny.
If the VIX finishes under 1471, it'll be the lowest close in a month. That roll market of Sep to October is well over $2. So big time contango there.
Yeah. I think that's helping with the buy the dipping.
Oh, yeah, for sure.
As you get this kind of vol compression, natural drag.
It's true. Mm-hmm. It's true. This is a chart of VIX futures contracts. We are... it's funny, I'm talking about bid, but this is sold. There's a lot of speculators here. There's a lot of sold contracts here in VIX. This is the most shorts in VIX futures since 2022. What do you think about that? Mm-hmm. See that?
If it works, you keep doing it. Maybe.
Yeah.
Right.
Yeah,
You
yeah,
know?
yeah.
For them, yeah, right.
Yeah,
I mean, we don't
yeah.
necessarily do this, but for them, bigger, larger players, if it's working for them, a lot of them are looking at volatility being low and saying we're just going to stay short it.
Yeah.
I when I see this, I think if we do have a drawdown and volatility pops, right, it's going to pop pretty hard, right? And we've seen that a lot when volatility is pretty low. If we get below 14 somehow, and we're in the low teens, that's when you see 14 to 20 somehow, right? That's kind of how that happens sometimes.
Yep.
We do get the move.
Yeah, if there is a God, we might see a 14 to 20 VIX move. Give us some opportunities here.
Yep.
Let's move to the next slide. I personally don't mind an environment where vol's in the teens, but there's a lot of stocks moving. You're getting a 30% Oracle move. You're getting the huge move in SS. What was it? SS Synapsys, I think the other day. S&PS to the downside. I'm not exactly, and I know it's earnings. I'm not exactly sure where Adobe and Restoration Hardware, are this morning, but those are huge. Some moves. So I kind of like those moves. I kind of find it interesting, especially if there's gold and silver. It also means to me at some point we will have something happen, because there's no way you can't have the gold and the silvers of the world moving the way that they're moving, and the market's on all-time highs, and all of these big names like Oracle 30% earnings, and not have something happen eventually.
You would think so. It's just it can't happen at much higher prices. You gotta just trade what's in front of you.
Yeah, I always say that. That's
just
my mantra. Trade what's in front of you, not what you're thinking about. You can have an assumption on what's going to happen, but take advantage of what's in front of you. Right now, you have very low implied volatility.
Yeah, and you could start that. I mean, you can get some short delta, a little longer dated. I mean, vol is low.
Mm-hmm.
You can get some diagonal spreads, big wide butterflies, stuff like that.
Yeah. Mm-hmm. The bond picture is interesting because we got both ends of the curve rallying, which in this case is leading to a pullback. A little bit of an inversion in the top of the curve there in the 10s and 2s. And it's basically because the Fed is stuck, is because inflation is high, of course, and then the job market is starting to struggle. We're going to start paying attention to initial jobless claims on Thursday again. Don't be surprised when Becca and Illich starts talking to you guys about jobless claims. I warned you. I'm telling you now, it's coming, okay? But the truth is that they become important again. And that's how some of this macro data is, right? Like, nobody cares about inflation reports until all of a sudden and there's inflation in the market and we're starting to watch them. So, but it's interesting right now. To see this pullback, right, in the 10-2 curve only means that both of them are rallying right now, which is kind of fascinating. Let's move to the next slide. I like this one. This is from our friends at the SIBO, but this is a 3-month skew in both SPX and RTY. And so skew is up in SPX. Of course, SPX, for those who are, I think most of our people know, but skew at 25 delta put minus 25 delta call. Skew is up in SPX because it seems as though participants have been buying puts in SPX. Skew is down in, I put SPX, geez, in RTY is the gray line. Skew is down in RTY because most people are buying upside in RTY. A lot of people are playing Russell 2000 to the upside in this environment where we're supposed to be cutting rates. So kind of interesting to see that dynamic there.
And you could look at it as a
catch-up trade.
As a catch-up trade, a disparity as the Russell had been the
dispersion.
Yep. Thank you. As the Russell has been underperforming over SPX. But skew is pretty much mid-range-ish, right? Like 147 or something like that, 150 something. So it's not near its highs of 180 and then not near its lows of 130. I think this is more about the directional trade here. I would imagine this is going to close up pretty quickly right here.
Yeah.
Yeah, good point. It's skew itself for SPX is in the middle of range. It's not like as high as we would think it would be at all-time highs.
Yeah.
Let's move to the last slide. So we had a bunch of IPOs this week. Klarna, Figure, and Gemini is supposed to start today. The Winklevi. I met those dudes once at SIBO when SIBO used to have the big. They started with the Bitcoin futures and they were using the Gemini exchange. Interesting guys. I didn't say anything to them, of course, but I always found it funny how they were never really happy about their portrayal in the movie. When
the Social Network. Yeah,
Oh, good one. Good one.
Yeah.
I never would.
I want to be like, oh, I loved you guys in that movie.
Yeah, they creep me out a little bit.
Yeah.
They look like robots. Like they're so tall and like they look the exact same. And they're always together. It's like oh, this is like a little creepy. Like it's got like a it's got an ick.
Yeah.
Open Door, huge move yesterday. And the OPE and of course ticker traded the third most option volume in the whole entire market yesterday. That's not nothing. 3.8 million contracts. Only SPY and SPX were above them. Pretty crazy.
Coming like a meme stock, right? You never know where the next meme stock looks like. Open Door was under a buck in mid-July. We're only in mid-September right now, and it's $10 and change. It looks down 50 cents today at $10, but still elevated relative.
Yeah.
Big FOMC rate decision coming this week. It's expected they're going to at least do a quarter-point cut. We also got policy meetings from Bank of England, Bank of Canada, and Bank of Japan. This is a fascinating week again. There was a lot of stuff that went on this week, but this week, you got a lot of inputs. Like I said, these Fed meetings, but then you got VIX futures expiring on Wednesday, right? Sometimes we see a lot of things happen after that. It's also a quadruple witching expiration coming up on Friday next week. So we could see some fireworks. We'll see. And research this week in OJ, controlling what you can. Check it out.
Very nice. Very nice. Yeah. Controlling what you can, not what you have to, should probably be the last part of that sentence. Great job, Jamal, and a nice recap on this week in stocks. Really appreciate it. Everything is bid is spot on. We'll take a quick 90-second break and come back. We got the opening bell next. We'll be back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
We're going to go to New Orleans. I got to be in New Orleans. What's up?
Y'all three guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. Is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up, so make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nicky, we are back, son. How you doing over there? I know you took a bathroom break on the last time you were here.
Oh, you know what?
You were here fine now. You okay? You gonna be able to sit all day? Your back all right? Everything okay?
No, my back is not all right.
What is this?
And it's just old age, you know.
Is this why you mentioned the girlfriend earlier this morning? I'm trying to put two and two together. Is there any
All right.
relation?
It's, you know.
No?
I'm not going to go there.
You're
It's
not
a
gonna take
kid's
the bait?
show.
You're not going to take the bait?
Yeah, that's a kid's show. It's a kid's show, okay? Family show. Family show.
All right.
No,
If you
I'm
say
not
so,
going to go
if
there.
you
But
say
yeah,
so.
I'm good. Had to take a bathroom break. Had my 2 cups of coffee. I'm feeling good now. You know.
That's what they said on the internet. The coffee hit hard.
Yes.
That's what it was.
Yes. You know, I don't have the catheter set up here. I think that's a little gross.
Days to come.
Yeah,
days
to use Tom's here.
Well, we got about 2 minutes here, 2 minutes plus before the market opens. Even the S&Ps are down $2. They were just up small. They had a very tight range of about 20 handles. If you're wondering where we get the daily expected move, it's right there in parentheses on the E-mini S&Ps, $16 expected move. I like to look at the /ES and not look at, let's say, SPX. Today, it's going to show SPX up with a $22 expected move. That's because the E-mini S&Ps move overnight. SPX is pretty much stagnant overnight. So you want to look at /ES for that expected move if you're wondering which one is the one to look at. That's the 0-day. That's the 3-day. If Tom was to ask me or Nick was to ask me what's the expected move, for the rest of the week or till the end of the quarter, I would just look to the end of the quarter and get those expected moves there. NASDAQ up 26. That's the bucker with the other 3 indices lower. Russell down $6.70. It had the big move yesterday, taking a breather right now. That market's basically unchanged. Dow down 63 and subject to change. Volatility in by 4 cents. Very tight range in volatility also this morning. Something that hasn't had a tight range. Well, I guess 22 ticks is a tight range in the bonds. We could take a look at what the bond expected move is. It's just under a point here at 0.31. Remember, 0.32 would be a full point. So we're inside the expected move there in bonds. Bitcoin hanging out at 115,000. Oil up 88 cents now. It did trade over 63, flirted with 64. 63.98 is the high. I guess oil is one of your larger movers on a percentage basis, unless you're going to look at net gas. Gold is up $13, and we're set to open here in about 15 seconds or so.
Yes.
You thinking a complacent day today? Go ahead.
I think it's going to be a nothing burger of a day. I think E-minis pin 5,600 into the weekend. We get some nice
6,600.
6,600.
Yes.
Not 56.
Not
56. 56 would actually be right near Tom's Q3 guess.
Oh, is that where he is?
I think he's at 55.
55?
I think he's somewhere around there. I can pull that up. I'll have that for fast market.
Full 1,000 points?
Yeah, he's close.
He's closer than he's usually been.
I mean, there's a chance.
I mean, 600 point expected move for the rest of the year from now for next quarter. I guess.
I mean, so he needs a 2-3 standard deviation move. We'll be close.
Yep.
He was close for Q1 though.
He was close for Q1.
Got a little dip there.
Yeah, I don't think as close as I was.
Ooh.
You don't look at how you dad.
I will.
Right?
I will.
You can get
I
that.
will put up. I
You
will
can get
put
that.
up.
You can get that on next break.
Yes.
Let's see what's moving the market so far today. We'll go to the downside since 3 of the 4 indices are lower. RH is down $10. ANET down 6 or 8,000. Home Depot, there we go, down 2 and change. Meta down 3 and change. Carvana, I passed the Carvana last night. They're full of cars, down $2. Carvana has earnings coming on the 29th, by the way. Oracle down $1.85 or so. Baba down $1.40. So pretty much a nothing burger to the downside, as you would expect by looking at the futures. APP. AppLovin up $4.50. Tough markets in AppLovin to option markets to trade there. Tesla on a tear, up another $4 here. Tesla's really caught a bit over the last 10 days or so, up around $40. Ivy rank is still relatively low, 12. Microsoft up $3 and change. Coin up $2.75. A stock that seems to be absent from this leader list is Apple again. Apple only up 33 cents.
It was selling off like $3 ish, and I don't know if there was something around like 7:30, but 7:30 it dropped from 2:30 to 2:28. 7:30 Central, an hour pre-market.
Oh, gotcha.
They had
in Apple, you're saying?
Now it's
I did not see it, but certainly not too much of a movement right now. Oil up $1.10, trading at 63.46. Gold up 13. Pretty much. Much to do about nothing. Tom bought back his putties for a penny in Adobe ADB.
Is he doing that on the plane?
He's doing that on the plane. Yes.
Is he flying right now?
He is. Yeah, he's in the air. Oh, yeah.
Oh, okay.
Yeah, he's in the air.
Nice. Hope his Wi-Fi stays up. Don't forget your computer, Tom. Remember,
this is a public service announcement.
Public service announcement. Yes.
I will have to tweet that out to him.
Yes.
So,
yes.
Because he creeps on Twitter. You know that, right?
Yeah.
I mean, he's not on Twitter, although he has a Twitter handle. He just creeps on there.
He's always watching. Big old nothing burgers from the earnings. RH down $3-4. That was another one where there was like a 30-point, 40-point expected move there.
Yes.
Adobe as well. It's actually down 6. It was up 10 or 12. But big old nothing burgers. Going back to the question we had on, these Oracle earnings, that one is your 2-3 standard deviation. You wake up today, you got 2 that are well inside.
Well inside the expected move.
So, that's how the math works out.
Mm-hmm. It does.
We're big math guys, if you can't tell. me and
well, we haven't used that yet, but we're gonna try.
Yeah,
we're gonna try to use our math skills here today. Looking at Tom across the board here, I mean, as you've been saying all morning, a pretty much of a nothing burger. I just went through his whole account, and the P&L one way or the other is pretty much de minimis. Buying power usage pretty low at around 15% of the overall portfolio.
That's what happens when fall is slim pickings.
Yes.
I mean, there is not much. I put something on in CCJ yesterday for our 3 trade ideas just because it had an IV rank that was like 29 yesterday. It's at 21 now. So, and you're getting a little bit of a pullback. I mean, it might even buy in that risk because it's this thing has moved. I mean, the uranium stocks, if you look at Oklo, another one that's been, they're not, the IV ranks are not high, but they're volatile stocks. 70, 80, 90% implied volatility. So, when you're itching
looking for something to move, even with a low IV rank, just by its nature, it's going to move a couple of handles, couple of points because it has such high implied volatility. Unlike a Coke that we were looking at the other day, which is going to be like paint dry.
Yes, even with a high volatility.
Yes. Even a thing like IBIT has been a slow.
ETH too.
What's that?
ETH is another one.
Yes.
Where if you're looking for volatility, these you got some. in these.
Very much so. Very much so. All right, my friend. NASDAQ up 9, E-mini S&Ps down 2. It really is a pretty quiet-ish day so far. So let's take a quick 90-second break. You want to? We'll take a quick 90-second break. We'll come back. We got more Tasty Live immediately following these messages. We've got Fast Market. We're going to use Tom's money.
And they better have some SPX for us because I want to do something in SPX. Maybe a butterfly for the upside or like a wide iron condor or something. Hopefully we get something like that. Because I think we got a nothing burger today.
All right, beautiful.
Nothing. Chop fest.
Okay, let's take a quick 90-second break. We'll come back. We'll do that right after this.
Cool.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. Yeah, that's gonna. There's a spider on my desk. No, kill it, kill it, kill it, kill it. Oh my god, oh my god.
Where is it?
It's on my microphone.
I don't see it. Not from there, you won't.
Oh no, oh god.
Spiders don't bother me at all. Just the big ones.
No, it didn't bother you at all. From where you were sitting, you had no problem with it. Man, let me tell you something.
Thank you,
I don't want you to throw me a life preserver. That's never going to happen.
Thank you, Bat, for coming to my aid.
You're welcome. You're welcome.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event.
I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son. That's right. The, Tasty Live Next Generation Takeover right here with you, son. Filling in for Tom Sodnoff, who's in New York. Let's hope, you mentioned on the break, you brought up a good point. Let's hope he doesn't forget his computer.
Yes.
In New York. This time he has a...
Very forgetful in his old age. It's really sad.
I think
sad to watch.
He's San's handler. I don't think Britt is with him. So I think...
How's he gonna eat?
Eating's
get
not
no
a problem.
reservation.
It's getting to and from.
Yeah, I know, and the reservations.
Yeah, he
can't do that.
Get a car. He can't.
Yeah, he's Milord is so used to his helpers that if he doesn't have them, I feel like he's like a lost puppy.
Yes.
Sad.
It happens.
Yes.
Oh well.
Yes.
Well.
So if you see a Sosnoff wandering in NYC, please bring him home. Make sure he's safe. Okay. Thank you.
On that note, all four indices are red ever so slightly.
I mean, we do that in the office. Sometimes you see Sosnoff wandering and you
turn him around.
Yeah, we'll be like, "Hey, Tom, you got to go this way.
You ate lunch already.
Tom, you ate already. Tom, you have a meeting in 5 minutes." Like you just see him kind of like just walking around. Yeah, he grabs a basketball, like throws the basketball. He goes one of these, like just kind of looks around.
Everything.
He like does, yeah. So
We take him, we turn him around, we bring him where he's supposed to be, we put him back in his seat. Yeah, you're 100%.
Yes.
NASDAQ back up 4, but it does look like a nothing burger right now. Volatility down 7. I closed my IBIT trade that I had on from I think from the 28th or so. It was just a little covered call in IBIT. I sold the 60 put and the 65, 68 call spread. I think I did it for around 325. I think I closed it for around $1 or just under, maybe 99-cent profit or something like that. I'm just looking for things to do, closing some winners. Still got a problem in GDX. Oil's working out a little bit better now that oil's only up 97 cents instead of up $2. It was a bullish strangle, but volatility expanded a little bit. Now it's contracted. I think maybe it's a 50, 60 cent winner. So hopefully it'll continue being a winner. Other than that, all quiet on the Western Front, right?
Yeah, I'm doing the same. Just like looking at stuff that is, marginally profitable.
Yeah,
like nothing huge. Like
sooner.
I just bought back puts in SMR. It's one of the nuclear stocks. I took like 40 cents out of that put. I traded at $1.75-ish. I'm closing it here at $1.33. I took off
SMR or
SMR.
SMR. I'm so sorry.
So it's one of these like higher volatility stocks.
Yeah.
It's a mover. Markets are pretty liquid.
This is an example of what you said a moment ago. IV rank of 10, quite low, but a monthly implied volatility in the 80s. At least you're going to get dollar expected moves, $4, $5, $6 expected moves instead of 50, 60 cent expected moves like you would see in a product that has a 20% or 30% monthly implied.
Yeah, I had an ETH short put spread that I took off for 80 cents as well. That took, that was another 50. It's 50 cents the hard way.
It is 50 cents the hard way. You're right.
That's what I'm looking.
All right. Well, you know what? Let's take a look at what's going on here with Fast Market.
Woo! Your trade ideas.
There we go.
Fast Market.
Fast Market. Viewer supplied trades here. I'll put them through. So I'm going to need a little bit of help from you deciding what we do with here. I will put it through on Tom's account and go from there. But let's see what the first one is.
All right, 6E. So the euro, choppy for 3+ months in a tight range at 30 IVR, maybe a delta neutral iron condor or a strangle Jason. He's trying to set us up. I don't know if it's Boner Lake. I'm going to go Boner Lake. Indiana. Bonner? I don't know. Hey, this is a setup.
Boner?
I'm going with it. 6E.
Tom already, you're brilliant minds think alike from whatever lake you happen to be at.
Tom, and whether it's aroused or not.
Tom is short around the 20-ish delta strangle here, the 115 puts and the 121 calls. That position is up small this morning. So we have this position on, and for that reason, I'm gonna not add to his position. But good thoughts out of you. Tom is thinking exactly the same way as you. So we'll abstain from this trade. We already have it on. So next,
Yeah,
please.
I'm gonna lean a little bit short and do the 120, 121, 115, 114. So you're a point wide, which is $1,250. I did it at a 300 tick credit here, so it gives you about 1/3 the width of the strikes, $400 in total value. I'm also short the euro via the FX products, very small, Tasty FX. So I like it. It's one that we've been looking at and trading a lot of. The euro has been relatively volatile relative to itself, as you can tell in the IV rank, but again, 7% implied volatility, not exactly screaming at you.
No, but nice, good close, good close on you. I like it. Let's,
new position open.
A new position on you. I
Yes.
apologize.
Yes.
Good new position on you. So, beautiful.
All right.
Let's see our next one.
So we got SPX. Here we go. We needed this. So SPX, no big events on Friday. Rate drop is priced in. You would think so, but last time we had our Fed meeting, this market was up to 100 and something. Market should stay tight. What about a larger 35 Delta Iron Condor with 25-point wings? This is what I'm talking about. Brad in Flagstaff, Arizona.
Let's take a look here. SPX. Tom has nothing in SPX. So what are you doing here? No big event. A larger 35 Delta Iron Condor with 25 wings. And he's obviously talking about the 0-day options here, correct? Let's see, 25 Delta wings, 25 wings. Where are you going to go with your short strike? I could put this in. We'll go around
yeah, 6,600 maybe.
Yeah, 66
you're kind of
even.
in between. Yeah.
We usually go $20 wide. So I'm going to do the 66 even, 66.20. On the downside, you're looking at what, 65 or 65 60? Let's go 65 60 and go the 40s on the puts. Looks like it's trading for around $3.50.
There you go.
Let's see if we can get filled there.
I'm doing an upside butterfly.
Okay.
Long the 65.90, short the 65.95, short one of the 6600s, and then long the wing 66.15. So it's like I did this at a 10-cent debit. I'm taking like a little bit of nothing downside risk, but it's a shot.
Sure.
It's a shot for somewhere between 65.90 and 66.05.
Got filled at 350. Must have a small little uptick or something like that. That's exactly what got filled at, is 350.
Yes, E-mini's only down 3.
Got it. Beautiful. Tom, close some Oracle stranglers. Put easily out in there.
Yeah, Oracle down to 300, or was at 300.
Got it.
Still at 300.
Still is.
Beautiful. All right, 2 for 2.
2 for 2.
GDX. Let's pray it stops going up. Strangle the 64 put, 78 call in October. GDX currently at 69.81, IV rank 37, so relatively high considering the market here. Yes, this has been a 50 to 70 move the last month and change.
Yeah, GDX is my worst trade of the last 2 months. I'm sitting with a short delta strangle. I added an extra put to try to pick up a little bit of long delta. Helped ever so slightly. Horrible trade right now. Out a couple of points. I mean, I think it had expected move for the month of around $7. It's moved like $10 already since I put the trade on. So let's pray it stops going up, right? So strangle 64.68. What do you think about that?
I mean, when you're looking for volatility, you got some here relative to, the IV rank. 64.78. I'd probably move it into like this 65.77 and do it at $2.
Tom's got short calls, naked short calls, the 67s, which are now in the money. Obviously, he sold them when they were like a 30 delta, and the 70 call. So he's thinking the same way of you. I'm going to leave it as is.
You sell the 65 puts and flatten them out a little bit?
No.
No.
Let him get whacked like he deserves, and if he does,
Well, if he was here, he'd sell the 70 puts, and then he had.
No, if he was here, he'd sell more calls probably, but I'm not going to do anything. Sit with it.
Oh, all right.
Don't sound so disappointed.
A little bit. Sorry, Mike in DC.
Sorry, Mike. Let's see what else we've got. Whoa, what is this?
When Kava. So we're going Wendy's pairs trade with Kava. Okay. So we going like junk versus sort of not junk.
Wendy's is on its butt, $9.75. Go ahead. What do they want to do here?
Wendy, wow, $9. That seems
Kava.
So American Eater wins again, of course. Very optimistic on Wen after last earnings call. And the Italian is overrated. Kava is not Italian. Is that what they're trying to say? Kava's Mediterranean.
Yeah, that's the point. Kava's on its butt, too.
Yeah.
I mean, these are both on their butt.
So they want to do they're selling the 20 to 30 delta Wen put and then selling a 20 or 30 delta Kava call. So we're trying to do a strangle pairs trade here. Long delta Wendy's, short delta Kava, assuming the ratio is determined on the price alone, as the option prices already account for the difference in IV November, December expiration. So
I would go correlation here too to the S&P, just trying to look a little bit because this is pretty abstract here. And
this is a story more than
a real pairs trade here. Wendy's has a 0.14 correlation to the S&P. Kava has a 0.43, so Kava's a little bit more with the S&P than I'm going to abstain from this trade completely. If Kava was high and Wendy's was low, I would put this trade on. They're both moving in conjunction with each other. I think
there's just nothing to do in Wendy's. I mean, you can't. You can't sell 20.
I would have just used stock.
You buy 100 shares and not.
But I don't see that kind of disbursement trade.
Yeah.
No.
Interesting story, though.
Interesting story. I love your story. You should be a writer for us. I love that.
And if you say Italians are overrated again, Roberto, on the south side of Chicago,
you'll be dead to us.
You might be out of here, buddy.
That's right.
Okay.
But we appreciate your support.
Yes, thank you.
Next one, please.
Open had a huge move today, slightly bullish, but want to sell premium around this hype, selling the 11 straddle in October for 566 credit. Upside break even at 16 and change is bold for a month. Jake, Sacramento, California. I'm surprised Tom has not got himself in a pickle in Open yet.
He has no position in Open. $9.84, down 70 cents. Slightly bearish. I hope you put this trade on yesterday. What are they going to look to do?
Here's what you do. I got this.
Go ahead. Good markets. I mean, decent markets.
Well, it's one of the most. It's trading. Trade 100 million shares of trading today.
Yeah.
I mean, come on.
Yep.
It's like.
What do you got?
All right. So this is what you're going to do. So you're going to do an upside call ratio spread. This is a Tom trade.
Okay. This is in October.
Yeah. You're going to buy the 10 strike. You're going to sell one of the 15s, and then you're going to sell two of the 20s.
Okay, sell two.
So you're naked two calls.
Sure. No, I get that. So you sell two of the 20s. You can do that for around a 78
cent credit. This is right in Tom's wheelhouse. If Tom was here, he would do this trade.
Oh, 100%. Let's take.
Yeah, break even at like 25.
Yes. This is actually.
A little short delta.
This is a little short delta, obviously, but this is actually too complex of a trade for Tom to figure out. He would never have. I mean, he would have liked it.
Okay, so then here, if you want to make it.
Oh, no, I'm putting the trade in. I can't get filled at 78.
You could do it 1x3. You do the 10-20 do the 10-20 1x3.
No, I like
for a 29 cent credit.
I like your little out of money wing there. I really do. But I'm not filled at 74 cents. Mid price is 78 cents. Natural bid is 53 cents. So there, I just got filled at 73 cents.
There you go.
Mid price right now is 75 cents. Obviously, if it goes higher, you're going to get filled at a better price. If it goes lower, you'll get filled at.
You get a down tick. You buy the 20 calls back. You got a $5 wide spread.
Yeah. No. I like it.
Very nice.
Yep. Omnidirectional kind of trade.
A little bit of everything in there.
Yeah. I like the way you came up with that. Good thinking.
All right. Thank you, Jack.
Thank you, Jack.
Sacramento. We got another Jack. ETH A. High IV rank, and it's been range bound. Sell the 1 standard deviation strangle in October. Jack in Philly.
ETHA. Let's say up 86 cents. He was basically neutral, so we're going to make this neutral. Maybe we move the strikes a little bit. What do you think here? He's looking at range bound, sell a 1 standard deviation in October. 1 standard deviation, what are you looking at? 27, 28 puts? Where you go?
I was gonna move it a little bit. I like to go to a 20 delta. I want to collect $1. So that's usually what I'm looking at an option.
So in October,
I do the 30-40. You lean slightly short delta. 5 short delta.
30-40. I was looking at the 29-42.
Yeah.
It's a $1.50. It's the same thing.
Sure.
I'll go. No, son.
I just like the round numbers.
I'm a bat lover here, so I'm gonna do the.
You are a bat.
I'm gonna do the 30-40. Mid price is 208.
Yeah.
I got filled at 208.
Cool.
Yeah, filled right at the mid price.
Beautiful.
Interesting. 612 was the natural bid, natural offer. That really is mid price in ETH. So okay, beautiful.
Nice.
Good one.
Next one, please. Starbucks. We're going against the what was that? BlackRock.
BlackRock, I believe.
BlackRock coffee. And going against the Bros coffee as well. So buy Starbucks near 80 before it's too late with 3 exclamation points. Just got in October. The 80-85 call spread for a 50-50 shot. Sean in Hong Kong, all the way around the world here. Beautiful.
Yeah, Starbucks down another 17 cents here.
Mm-hmm.
So,
it's
Ivy
reverse the entire move it had to the upside, from the lows.
Mm-hmm. Remember, slow moving here. I put it in at 240. Let's see, where's the stock? So this would be just under a 50-50 shot.
Yeah.
247.
I like it. It's an engagement trade.
Yeah. I'm working 247. We'll see what goes on here. If I don't get filled, I don't get filled. I'll be okay with it. Starbucks.
Very nice. All right.
Let's see. Next one, please.
Baidu, neutral to slightly bearish in Baidu, getting close to the 120 resistance. 110, 130 strangle in October. This is Jeff in Miami.
Let me see if Tom has a Baidu position here. He does not have a Baidu position. Baidu at Ivy rank of 43. No earnings looming. They want to go neutral. What do they want to do in here? Neutral.
110, 130 is bullish. So.
Well, yeah, and the stock's up $2 right now, right?
Yeah.
Yeah.
Well, 110 puts right at the money.
Yeah, 110 puts are right at the money. 37 delta today with the stock higher, and the calls are 23 delta. So this is really
bearish.
Or
bullish.
Sorry,
they want
bullish
to be bearish.
Delta. Yep, bullish delta. And they want to be more.
So I think if you want to be bearish, you do like.
Ivy rank of 43 is pretty good.
You do like the 125, 100. You lean. It basically the one they have here is 15 long delta. So if you want to be 15 short deltas, this is
Sure, or you can go neutral. You'd be the 0530.
Yeah, sure.
Now remember, you're a lot closer on the put than you are the call because of the nature of the skew. This stock has been on a monster run.
Yeah, that's why
the upside. So maybe we do lean a little bit bearish here. There'd be 5 silly deltas.
That's what Jeff wants.
Yeah, we'll do the 125, 105. I'm with you here, Jeff. Let's see if we can get filled.
You gonna do the 105 or the 100? I was saying the 100. Then that leans you.
I was going to do
the 105 is flat. I mean, you get 5 deltas.
Yeah, 5 deltas. I'm going to do the 105, 125. I think volatility expands on the way up here. If it.
Okay.
You want filled at 245 pretty easily. So maybe you can work it.
Beautiful.
Mm-hmm. Next one, please.
All right, SPY. So the S&P running ahead of the other indices. Time for a safe bearish position. Thinking the 256, 260 October, November put diagonal. I like it. Ryan, Denver. Okay.
So November and SPY is basically going to change up 9 cents. And in November, he wants to buy what? Give me the strikes.
He'd be buying the 660.
660 is in the money.
Yeah, slightly in the money.
Okay.
And selling the 656. So
in October.
In October. This is really more like a calendar spread. So if I'm doing if I want a little short delta, and you can see it from the delta, your delta is basically nothing here.
5 deltas.
Yeah.
Basically nothing. Then you're paying $5-6
which is more than the width of the
strikes. It makes it a very hard trade here. You look at the volatility in November, it's 16 and change. The volatility in October is 15 and change. You're almost at that 2-point vol differential that I don't like to do, but go ahead.
Yeah.
Continue. And
So
Tom does have short delta already, but go ahead.
Yeah, if you're looking to use, roughly that amount of capital, I'd want to go out of the money. I usually go to a 40 delta for the long option, 20-ish delta for the short option. I think here, if you want to be more close to that, like $5-6 debit, you could do something like the 655 put in November, which is right at the money, slightly out of the money, and then sell the 465 against it in the October expiration. You do that at a $7 debit, a little bit, more expensive, but this'll give you some short delta. If you want to make it, more towards what I usually set up, like the 650 in November, you go into October and you sell the 635 against it. It's going to be that same sort of $7 debit, but you get a little bit more positive gamma exposure.
I completely agree with you with your strikes and the way that you should put on that trade. He already has short delta.
I'm sure
in his overall portfolio, so I'm going to abstain from this. Instead, I went out and closed my oil strangle I had on for $1.15, taking 60 cents overnight. I talked about on the podcast what would be my target in that. I said $1 for 48 hours. In less than a day, making 60 cents. I'm gonna take it off. It was a silly little strangle and something that doesn't really have high implied volatility, directional bias, and you got 1.5% move in the direction you wanted. What else you waiting for? I'm gonna take it off.
Yeah, I went with it. I did the the 50-35. So the 40-20 delta. 40 delta for the long, 20 for the short.
Nice.
November, October.
Nice.
So I'm with you. E-minis down 1. Crash.
$1.
Yes, $1. Next one, please. Last one. Oracle. Chance of another 35% Oracle jump before November is slim. All right. How about a 20-point wide iron condor? Looking at the 280, 260 put spread, the 350, 370 call spread.
Oracle, Tom does have a slight position. He has a strangle on. He needed this move lower. I
think everybody needed this move lower.
Yeah, he's got a crappy strangle. He's got a real crappy one tight. He'll probably end up closing it. How are the markets in Oracle? Let's take a look at that. They're not bad. All right, what's he want to do here? I can do this.
This one,
47.
This one actually is. It leans long now with this move. If you want to move this to more delta neutral, I'd probably go like 340, 360 on the call side, and then
so you move down 10. Yeah, go ahead.
I'm moving down the whole thing. I'm moving down 10.
What's the put side?
270, 250, and this is a pretty neutral delta wise. You have more room to the upside because of the call skew.
Yeah, about a 62% pop on this. I like it.
1/3 the width of the strikes.
Yeah.
I'm just adjusting for the 10-point move that we had today.
Mm-hmm.
They sent this in. Austin sent this in.
I like it. I went in at 707. I could not get filled. I'm going in at 705 and see if I get filled. No. I can just walk it down. It seems like mid-price is not indicative of where you're going to get filled in here. If I don't get filled at $7-ish, I will. There we go. Worked it down to 702. It looks like the mid price is around 705, so about 3 cents off of mid price. Not bad in a $300 stock that's moving $10 at a day, right?
Yes.
Awesome. Listen, let's see what we did here. That was the last one, right?
Yes. Here we go. Look.
Give me my recap.
John, did we make this easy or what?
Very easy.
I know. See, that's good.
I love John.
Got a bunch of them. 8 of 10.
Not bad.
That is a Batista pass if I've ever seen a Batista pass. That's about as good as it gets. It's the highest, percentage we've ever had.
Yes. Well, that's only because of our viewers.
Yes.
Doing this for us. Giving us these. Even the S&P's completely unchanged on this nothing day so far. Volatility in by 15 cents. Cancel crash, I think.
Yeah, I wish there was. Tesla's really the only thing that's moving from my list. Tesla, UNH, Bitcoin, Ethereum, those are kind of
Tesla to the upside, right?
Tesla up $17. Yeah, we're approaching 400. Yeah, Vanetta probably not happy out there.
No, probably not. Probably. Let's take a quick. You want to take a quick 90-second break?
Sure.
Come back. We got more Tasty Live. What comes up next, son?
We have a market measure.
That's right.
As always, I know the schedule.
I know you do. You're good at it. We're going to take a quick 90-second break and come back. We got more Tasty Live with market measure next. Back in 90 seconds, Tasty Live.
4 option strategies in quiet markets.
Ooh, for you, that's what we have. Quiet market. Back in 90 seconds.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring
okay.
the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazlon bingo! I won! John, can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner!
Pounds and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
We are back, son. You know what that means? Time for a little bit more Tasty Live. That's right, with a market measure. Even the S&P is down $1.50. Ooh. Down goes Frazier. Do you know who Frazier is?
Of course.
Okay.
Joe Frazier.
Smoking Joe Frazier.
Yeah.
That's correct.
By the way, I have the SPX guesses. You were not even close, Q1. 62.51. That was a little ways off.
62.51.
Yeah, because we had the sell.
What did Tom have? Oh, I had yeah.
Tom had 57.27. I remember.
I just remember I was significantly closer than Tom. Is that the way we should say it?
On Q2, you were.
Oh no, on Q1 I'm significantly closer. I'm 62. He's 56. We had to be closer to 62 then.
Oh, we had the sell-off in April, dude.
Oh,
March,
right,
April. We got down to 54. We were 54, 55. I will tell you. Your Q3 guess, 64.26. We're close there. Not the closest. Oh, they have the slide. Okay, there you go. You got the next slide for us, too, because we show the whole team, because I want to give a shout-out to our very own, from Option Trading Concept Science, Miss Katie McGarrigle.
Well, she just got married. She's lucky. She's right there.
65.65. We're 20 points off. End of the month is SPX Guess the Market.
End of this month.
Yeah, you got 20 days. So we chop around here. You're pretty close. Tom, about, 1,100 points off. Won't say we've seen down moves. So.
I mean, this was so easy. Even you could say even Scott's almost close at 59. I mean,
know.
He's never close at anything.
Scott is always bearish. Scott's always bearish. So yeah, we're there. Yeah.
Tom with his Q4 5,300. Oof.
5,300.
Oof.
Into Santa Claus? Come on.
Look at that.
Yeah, what up?
Looking good. I'm with Katie, so I must be in good hands.
Yeah. We got the team. The team is wrapped around here.
Yeah.
You got Mikey shooting for the moon and maybe maybe some naughtiness of the 69.69.
Go big or go
Get a
home.
little horny, get the blank out.
Hey, I just closed the SPX trade for 10% profit. Just one. I mean, we only sold it for $350. I mean,
Yeah,
so,
beautiful.
Yeah, nice
Beautiful.
little scalp.
Nice, nice. All right.
Beautiful.
Market measure.
Yeah. Market measure.
Sponsored by the CBOE.
Sponsored by the CBOE is 100% correct, son. Good job out of you.
4 option strategies in a quiet market. What would be your 4 guesses? Because I looked at the slides, so I don't want to.
4 options.
And these are trade ideas too. There's trade ideas baked into this, which is going to be
diagonals.
Okay.
Calendars. Directional verticals.
Yes. Debit spreads. You talking?
What's that?
You talking directional debit
spreads. That's right. That's right. And the 4th one. Are they going to go iron condors? Are they going to go that direction?
Well, you got 4 there. Okay. Calendar, diagonal, long spread.
Yeah.
Oh, yeah, you have both the spreads. Yeah.
I was going to go iron condor. That was going to be my 4th one, but I don't know.
Over the string? Well, I think you might be right.
Oh, let's see.
Let's get to it. First slide, please. So while the market hovers near all-time high, implied volatility has dropped quickly below the average to 15. It's now at 14, I think is what I was looking at in the VIX. What's the VIX at right now? 1471. Ew.
Yep.
This creates challenges for options selling strategies, as we continue to have over the last couple weeks here.
This is correct.
So when IV is lower, we'll jump to the next slide here. When IV is lower, risk increases due to having less credit received. You obviously have less premium here for anything you're selling. Shorter break-even distance, so you're getting closer to at the money. Those deltas are closer at the money relative to when you have high volatility. Those become further out of the money. So you have less cushion for the stock to move. Vulnerability to IV expansion. Obviously, volatility, when it gets low, it has a tendency to cluster and it kind of stays low. And then you have that pop in volatility. So you have potential volatility expansion risk there when volatility is this low or near the lows. Despite these challenges, there are 4 effective ways traders can utilize to navigate low IV markets effectively. So let's get into it. A couple trade ideas. So the first one here, debit spreads. You're right on the money. Yeah, you've done this before. Done this trading thing a couple times?
Once or twice. Once or twice.
1, 2, 3 times.
A couple of 2, 3 times.
So here's a quick little guide on when we would use these. So these are directional bias trades. We did one in Starbucks earlier this morning. Did you get filled on that? Yes,
I did. 247. That person is dead to me right now because it's trading at 244 or so.
Sorry.
Yep.
3 cents. Oof.
Yep. That's okay. That person who's my new best friend who scalped the SPX. Made up for your loss.
Make one, you lose one. It's okay.
That's correct. That's
50-50.
Net, you want to be positive. That's all you want to do.
So for the debit spread, you got the call debit spread is a bullish trade, put debit spread bearish. The pros of these, you have less sensitivity to IV. You can even bucket put spreads or call spreads into this. I know those are short premium trades, but synthetically the same sort of thing. It's just where you make these trades. We typically trade credit spreads out of the money, debit spreads at the money, or as like kind of 50-50 shots. So obviously they benefit from a directional move. The credit spreads, higher pop, and they benefit from IV contraction because we're doing those out of the money. The cons of the debit spreads obviously are that they are 50-50 shots. Like these are slow moving, 50-50 shots. You got to get the move right. There's not much management. There's nothing sexy about them.
There's nothing sexy about them. You can't do anything against them. You can, obviously, you can do whatever you want against something, but small amount of buying power used up front, 50-50 shot. It's like being long or short stock.
Yes.
Nothing else you can really say that.
Yes, totally.
Yep. Next slide, please.
So the example they're putting in is, research team is bearish on Google here. It's off Google currently. Where are we trading at right now?
Google.
239, down $1 and change. So they're looking at this yesterday, or the other day whenever this was on. It was at 234 and change. So you'd be doing a long put at 240 and then selling the 230 put. So it's a 50-50 shot. The way you'd set this up now, if you were doing, you could do like the 235, 240. So you're buying the 240, selling the 235, 50-50 shot. The 230, 240 is kind of a little bit less than a 50-50 shot, but the stock has rallied here. But the point being is that you're doing this right at the money.
Yeah, you
one
always
strike
adjust.
out of the money, one strike in the money. Depending on how wide you want to go, if you want to go 2 and 2, 4 and 4, whatever, it doesn't matter. They're all going to be 50-50 shots, essentially, if you're looking at this sort of setup.
Classic tasty trade mechanics.
Yes, and just the key point here is that this is a strong directional play. It's defined risk. You don't really have much vol exposure to this position.
You have risk exposure.
You have risk. It's directional
risk. Thank you.
Next one, please. Time spreads. So we bucketed calendars and diagonals together. Makes perfect sense. So when to use these? If you have minimal directional bias, expect slow moving in that direction. So these are a little bit less directional up front, but they do have positive gamma to them in some fashion, especially in the diagonal spreads here, where you have different strikes and different expirations, calendar spreads being the same strikes, but different expirations. That's a true long vol trade as a calendar spread.
Yep.
A diagonal spread is a long vol trade, but it also has some delta exposure to it. So with the time spread, most of the time you have very low risk. The diagonal spread, you can add a little bit more risk because it's going to be a larger debit. The calendar spreads, low risk, low reward, low pop. They're just kind of nothing trades, very much engagement trades here. With the time spreads, they benefit from IV increasing or IV being realized. So if you have a big move in your direction, you're going to benefit from those positions. You have flexibility with your expiration combination, so you can do them shorter duration if you have more of a short-term directional bias. You can do them longer term like we did with November, October SPY, the put diagonal, where it's kind of like just a general IV play with a little, you're playing for duration too.
You are playing for duration.
It's just kind of, if you were doing a 0-day trade for like a Adobe earnings, you would go into the weekly expiration. So there's a lot of flexibility here.
A lot of flexibility. I like the pros over the cons here.
Yes, and the management, I'm glad that they put this in the cons, or I don't know if this is a con, and you could look at this as a pro as well, is the complex management. There's a lot of variables.
Yeah.
So like people ask, what do you do with your diagonal spread or calendar spread if it goes your way? How do you make more on it? If it doesn't go your way, how do you manage it?
Define risk trade to begin with, so it's kind of a step above vertical spread that we just talked about with the management. Go ahead.
So you got flexibility there. I mean, if you're getting a move in your direction, you want to roll that short put a week out to collect more premium and kind of maintain that position. That totally justifiable.
Sure.
If you get a move against you and you want to buy back that short and just lean more directional into that move, that's you're buying in the short premium. That's going to add more directional risk to your original assumption. That's totally fine. You're getting more delta at a more advantageous price. So there's a lot of flexibility there with the time spreads.
I like it.
Which I think is a pro.
Yeah, I think it's a pro too. Any complex trade,
it's less easy. Like with short spreads or short premium, it's an easy, management in terms of like what the mechanics are. You just roll it out in time. You roll the untested side. Like those are easy things. You can apply that to any strangle or
doesn't take a lot of thinking.
Yes. These ones, you got to kind of make your bed with them. You got to, decide on if you want to be more short at higher prices or more long at lower prices. Next one, please. All right. So they're looking at a put calendar spread in SPY, which we actually did. We did a very similar one today. I mean, they're looking at the 650 calendar spread, November Oct. So you're long November, short October. We always do the long further out in time so that you're not naked in terms of your risk. If your short option is further out in time, you're synthetically naked. So this is pretty much exactly what I have on with the diagonal spread that I did with the 55-45. What did I do here? Oh no, I did the 650 long in November. I did the October 635. So I did the diagonal spread with this same strike. So it's looking, and the reason they chose this strike for the calendar is because it's around the 40 delta. So you have a tiny bit of delta to the downside.
Very good.
I like it. Key point here, profit from time decay differential with limited risk. Got a little bit of positive theta decay, at least in the short term.
Keep going, son. You're like butter. You're on a roll.
Beautiful. So the next one, poor man's covered call. So this is very much, you could bucket this in the diagonal spread situation, but this is a more directional trade. You have a higher delta, a little bit less exposure to volatility. So when to use is when you're bullish, low IV, limited capital, you're replacing stocks. So this is really about the capital, the advantage of being able to use less capital here. So the pros of this, and you're obviously selling the shorter dated call, it's a synthetic cover call. Pros, lower capital relative to buying shares. You have higher return on capital because you're using less capital, and it benefits from an increase in implied volatility. And that's because you're really synthetically long a put. That's your extrinsic value that you have in that long call option. So if you get a pop in volatility, that'll help you as well.
Absolutely. Absolutely. Good job. Good job.
And the difference, obviously, with cover calls, you get the dividends. And
you must have had an amazing teacher.
Tom, thank you so much for everything you taught me. No.
I can't.
We all know we all know, Tom, he's the wallet.
Yes.
You are the applicator of the teachings, of the trading. You are the true talent of Tasty.
I was. Now you're going to be the true talent.
Yeah, thank you.
Yep. Next slide, please.
So we're looking at poor man's cover call and Lulu. This stock is an absolute dog. 161. Did Tom trade this for earnings?
Mm-hmm.
Gone from 400 to 161 here. So they're looking at buying the January 155 call. I don't know if
he's traded before. He didn't trade it for earnings.
I don't know if you're going to be able to put a 126-day option in Tom's.
Yeah, no, I don't think he'll be able to do that.
He'll probably I don't know if he'll be able to understand that one, but I like it. So you're buying the 155 call in January. Just to give you some context, it's about a 61 delta. You're going out to the October 170 call. You're selling that at about $4 and change, which gives you, around 25 long deltas. But that delta gets bigger as time passes because you're selling a 36 delta short option. So again, it's a directional play. It's synthetically a covered call type setup, much cheaper from a capital perspective than just buying shares.
100% agree. Good job. Keep it going.
Tesla up 23.
Yeah, Tesla's been on a tear. To the upside. And you've got Microsoft up. It doesn't look like this. I mean, the market's not going anywhere. Well, we'll talk about the market in a minute.
Microsoft up 6.
Yep.
So last one, wide iron condors. This is important because, with a short premium, you're looking for high implied volatility. When volatility is low, those wings are cheap relative to volatility. And so it offsets that short premium, short volatility that you have. So we prefer selling premium when IV is high, obviously when it's low and you're looking for opportunities. Iron condors, wide iron condors, they give you that long vol exposure. They help give you a little bit of a buffer if volatility expands. The benefits of wide iron condors versus tight iron condors, obviously you're going to collect higher premium.
Sure.
Fact, you have a higher pop. You have smaller tail risk here because you're buying that wing to cap your risk.
Good job.
Next one, please.
Just the takeaways, I believe.
The takeaways, yes, because they didn't want to give us the wide iron condor. They're afraid of Tom because Tom would say, no, can't do that. But you're buying IV.
Yeah,
IV
you're
with the
buying
wing.
IV, you're selling IV. It's a directional.
You got to do
trade,
something. We can't sit here and do nothing.
Yep. It's a directional trade, just like any other.
Yeah,
I agree.
non-directional.
Yep. You just want to
which
be
is directional.
inside the expected move.
Takeaways: when implied volatility is low, premium selling strategies like credit spread strangles and iron condors become challenging. Alternative strategies perform better in low IV. Debit spreads, time spreads, poor man's covered call offer a low risk and benefit from IV increasing and that realized implied volatility as well. All strategies still collect time value, so you keep traders engaged and profitable while waiting for richer premiums. Volatility will come back at some point. We don't know when it's going to come back, but it will at some point.
Yeah, you're 100% correct. Good job out of the team. Good job out of you. Good job out of the SIBO for supporting that. I need you to support us while we look at this market in just a quick second. We're going to go to phone calls right now, 855-238-2789 or 855-BE-TASTY. You could be the first on your block to be first on our lines right now. We would love to hear from you. If you want to come see us in New York City, you can do that on Friday, September 19th at Work by 11 with my friend Tom Sosnoff and myself coming back home to our hometown. Doors open at 8. The show starts at 9. We talk to you for an hour, one-on-one, just standing in the crowd with everybody else. Talk to you for an hour after the show is over.
You know, who has the
one-on-one.
bigger crowds?
What's that?
The bigger.
And I do have bigger crowds. We've seen the pictures.
I've seen the pictures. There's Tom
was
of
so
evidence.
quiet. He was on his phone.
Yeah.
So please, if you can't make New York, you can call us right now, 855-238-2789 or 855-BE-TASTY, or talk to us in the chat. We've got Nick Manning, the phones in the chat room. Let's take a quick look at the market before we take a quick break here. You got Microsoft up 6 and change. You got Tesla up 22, you just mentioned. Apple Lovin up 10 and change. Apple up $3.70. Even the S&Ps are down $1 and change. It looks to me, with volatility in by 17 cents, Oracle's down $10. Netflix has been on a downward slide here last couple of days, down another $9 and change. But it looks to me this market's got some wings to it still. Take that off. Sorry, got some wings to it still. It looks like the market is going to catch a little bit of a bid here. I don't know what's lower. Lulu down 5, Reddit down 4 and change. Much to do about nothing, but it seems like cancel crash to me. But we'll see what's going on with the overall.
Certainly does.
All right, let's take a quick 90-second break and come back. We got more Tasty Live. What do we got coming up next? Your phone calls, 855-238-2789 or 855-BE-TASTY. Please give us a buzz. We'll be back in 90 seconds. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
If you missed the live show, here's our cherry on top weekly recap.
You just mentioned AI a moment ago. Would you like to see some of the evils of AI? All you gotta do is look at this picture. You got the evil of AI.
This was very disturbing. So this is you and me as a mashup? I don't know who did that, but whoever did that should be fired.
Well, maybe you can get to it.
Please make that go away.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Damn!
Wow.
Long live the trader nerd!
Man, you're a turd.
Trade junkie!
Hey, it's fun, see? Tom and Tony in the morning.
Nikki, we are back, son. You know what that means. Time for a little bit of talking with Tom.
You almost said it.
I almost said it. No.
And that's the second time. The last time we were together, you did that to me. You said, Thomas, we're back. And I was like, excuse me.
14 years, and now I have a new Gamada. I mean,
All right.
It's a tough one. But we got talking with Nick and Tony. Give us
the bats. Talking with the bats.
Talking with the bats. Well said. Easier, too.
Yes.
Talking with the bats. 855-238-2789 or 855-BE TASTY. You think Tom is like Miss Chloe. Wait until you hear from my son. He's even better. Let's take a quick look at the market. Even the S&P is completely unchanged. NASDAQ up 62, Russell down 17, and the Dow down 170. Volatility in by 20 cents, just about as low as it's been all day. Bonds, that's the canary in the coal mine, going lower by about 24, about 4 ticks off of their lows.
Yeah.
Son, what do you think here going into the weekend?
I will say, somebody was saying from the market...
The bat phone. Banter with the bats, the bat phone.
From the market measure that we just did,
yes.
Why would zebras not be on there? They certainly can be on there. Those are synthetic stock. Like that's a true 50-50 shot. The debit spreads
is a true 50-50 shot too, but not nearly as much delta. I mean, you're talking about almost no delta.
And the cost. It's not like zebras are generally expensive.
Yeah.
I mean, they're cheaper than buying the stock in terms of buying power requirement.
Sure.
But when you're looking at trades, you don't have a positive extrinsic value on those trades.
That's correct.
You're buying.
That's correct. Stock substitution, though, you like to do them a lot when you get, somebody just wrote in bat droppings. Yes, we could call this show that. We could call this show.
Droppings.
Little play on words
Yes,
there.
yes.
Like dropping the wisdom, dropping the poo-poo. Who knows? Could be either one. 855-238-2789 or 855-BE TASTY. Give us a call while we wait for the calls to come in. How about, you got anything there from your peeps in the chat room?
Yeah, so we got Some people talking about where's the VIX? It's dead.
Where is the VIX? The VIX is dead.
No volatility. Some people looking at Tesla. If you're interested in trading Tesla here, it's up 20, trading around near 400 here.
390 up 21, a big move.
Volatility not really going anywhere, but I think like if you're trying to.
I got my friend Jason who's been telling me to buy Tesla for the last 3 or 4 days. So he's spot on there. A nice big move today, 6%. On top of 6%.
I did put on a Netflix trade too. I Tesla, if you wanted to look at like a broken wing butterfly or something on the upside, that might be kind of a play that's sort of omnidirectional.
Netflix getting wacky poo-poo. Volatility though is finally creeping up here on the downside. Netflix IV rank of 22 as earnings on October 16th. What'd you do in Netflix?
So Netflix, I did a short put spread right around the expected move in October. So I did the 1090. I did it at 226. It's marked right around there. I mean, you got.
Yeah, I mean these markets are a little bit wide. Yeah, got it. Not bad.
I love that. Tesla, but what about like a wide broken wing butterfly? Would Tom approve of such a thing?
In Tesla?
Yeah.
Yeah, we can do something like that.
I was thinking like, so you got Tesla. The high is around 52-week high at 488. Expected move up at 440. So you're getting close.
You want to do a call broken wing butterfly?
I'm thinking.
Oh, I would do a put broken wing butterfly.
What, into this move? I'm thinking Tom would want to be short here. This is sort of an.
Oh, in Tesla. I was in Netflix. I apologize.
Tesla, the put.
Yes.
I agree with you.
Okay, so yeah, go ahead. Yes, Tesla, sure.
Tesla, I think you do the 425.
He hates Elon, so this will be right up his.
Yeah, this will be right up his alley.
Yep, buy the 425s.
Sell 2 of the 440s, so you're right at the money.
Buy the 445.
Or right at the expected move.
Buy the 445 call?
No, you're buying the 425, selling 2 of the 440s.
Got it.
440, right at the expected move. And then you buy a wing at like 490. This is how I would have to do it because
Sure, using $3,100 in buying power kind of thing. You get yourself a little short 7 deltas. You got to break even right at the expected
in a Sosnoff type account, you could do the 425, 450 ratio. That gives you a break even right at highs, around 480, and you do that at $5 credit.
I will get that. I will get that done for you and let you know where I get filled. Thank you. Just a quick little second here. I'm going to go to Eric in Arlington, Texas. Phone lines are open. Give us a buzz.
Yes, Eric. Will we see you October 12th?
Yeah, you will. I'm going to be in Dallas to see you.
Awesome. Thank you, Eric.
I got a ticket already.
They need all the help they can get over there. So please, how's it going?
I'm good. You guys are awesome. I've been watching you since February, and if you guys can teach a dummy like me, you guys are awesome.
You give us too much credit. We're dummies too.
We're only as good as the people who watch us. So thank you.
Dr. Jim's the best. Okay, I'm sorry.
The good doctor.
Yeah, I've been doing this SPX. ODT Iron Condor at a 20 Delta.
Okay.
The Iron Fly was eating my lunch too much, and I started just putting an order to close the credit spread at 10% because that's the one that always breaks my strikes on my losers. So I close that one first, and I leave the put spread to expire or get 50% out of it. You guys think that's a good way to go about it?
I'll go first. Far be it from me to tell you that if it's been working for you, not to do it. It's not what I would do, and let me explain why it's working for you. Market's been going higher. You're getting rid of the call side, and you're leaving the put side on. So I like the fact that you're watching the trade and you're managing it, and you're doing what you want to do. You see the market getting bid and going higher, so it's working for you. So if you're watching the market, keep going with your instincts. They've been spot on, so good for you. I prefer the 20-ish delta and managing a lot quicker, like we did today at a 10%, 20% of credit received. But please, don't stop what you're doing.
And you got low volatility in the market as a whole. It's been a grind higher. If you think that continues until some sort of volatility event, maybe just put on the put spread.
Sure.
Like that's okay, and just manage the put spread a little bit more aggressively now that you don't have the upside risk, right? So if you've been trying to get 20% on the trade as a whole, target 10% and just do the put side.
Yeah. Yep.
You know, like and then you're net making the same amount, but you don't have that upside risk. You don't even have to worry about it.
I think my son gave you even a better answer.
Okay, thanks, guys. I'm just trying to squeeze as much out of it as I can.
I hear you. You don't know how much you miss vol until it's gone.
Yeah.
This is true. This is true.
Oh.
Well, all right. I'll see you in Dallas, Nick. Thanks, man.
Thank you so much. Really
Thank
appreciate
you,
it.
Eric. Appreciate
Thank you for all your
man.
continued support. 855-238-2789 or 855-BE-TASTY. I got a couple lines open. Love to hear from you. Let's go to the chat room.
Yeah.
You got something there.
Oh, well, we got a couple people commenting, obviously, on the 0-day stuff. Is that you got to keep in mind that it's not going to work every single time. It's been
the perfect environment.
It's been the perfect environment, and it can continue for months and years. I mean, we had the 20.
I hope it continues into perpetuity.
Yeah, but I hope it works forever.
Sure.
It's great all around, but you have to keep in mind, and size. It always goes back to size. Size kills, and you got to be able to have that outlier move if you're doing these sort of trades where you lose your max loss, and that's not a big deal.
And I think people had it yesterday. I follow a couple of people who I actually saw in Chicago coming out.
Our man, Jack.
A
legend.
Jack came out. James came out. I mean, a lot of people came out to see us that do these. Eric came out and does these 0 days, post everything on Twitter. Really cool. But yesterday wasn't a great day for it. But you're gonna have to have those days to have the volatility and have the options be priced the way they are.
Yes, for sure.
Go ahead. You were saying something.
E-minis. What do you think the range has been? The overnight range, 20-point range.
Yeah, on the E-mini S&Ps. Yeah.
So you're making money to my SPX peeps out there making money today, no doubt.
Yeah, expected range is $11 for the rest of the day. It was $16 this morning. It's in by 30 some odd %.
Yes.
That's why that's all working.
Yeah.
Anything else from the from
the peeps in the chat? Scrolling through here.
I know it's hard. It's hard to see. Phone calls coming in now, so I get to you.
All right.
In a second. Even the S&P's up small, 75 cents for a nothing day. Nick, you really did a great job looking for trades today and getting a couple of trades in. I got filled on that Tesla trade.
There you go.
At around $3, with Tesla up around 19 and change. You probably can do it a couple of pennies better right now with the stock back up $20 and change. So Tesla continues its rally.
Did you get that open door trade in too? The 10, 15, 20? Did we get filled on that?
Filled. Let me see.
Because I think we were looking at like 80-ish cents.
73 cents.
Oh,
yeah, I did get filled on that. I hope I pushed it through because it's down around 60-ish cents right now. So yes, I did get filled in open. Oh yeah, I put it through there. Yeah, 73.
We got some people saying that you got to get in the WBD puts, short puts.
W what?
Warner Brothers, WBD. This goes back to Vanetta's segment. What are your thoughts on the puts here?
Give me the symbol one more time. I apologize.
WBD.
Warner Brothers numbers.
Yeah, Warner Brothers.
So good.
Tom would look at this and
I would not be selling puts in here.
He couldn't.
I can't. But I get it. I get why you are. I do.
Yeah. You got any interest in Micron? Getting some short delta there?
I can't make a dime in Micron.
It whacks me in both directions every single time I trade it.
Yeah, I'm with you there. Hey, let's go to Toronto. Ibram. Thank you, sir. Appreciate it. Sorry.
Hey guys, thanks for taking my call. I just stumbled upon your channel recently, and it's too bad that Tasty is not being offered in Canada anymore. I hope in the future it changes, but the context, the content I've been watching is just completely different than anyone else, and I've lost a lot in the past, and hopefully I'm trying to turn my life around with this. I was just wondering, I've seen some rising stars There's like few of them that just I connected a lot with. There's a lady and there's I think a pain physician that just doing this and learned this on the past. Is there possibly Nick can do a session where you can teach us those trades that they're trying to do, or they do if we can just sort of learn and mimic from a newbie's perspective? I would really appreciate that.
Not the first person to ask for this. I get.
I
mean, get this all the time.
So it's all a derivative of what we talk about every day. I mean, these, people find their little niche of what they trade. Like we had Jack who called in just before you that talked about, his SPX iron condors. They're not the exact thing that we do, but it's a derivative of the strategies and the concepts that we have. And so, I think rather than trying to do what they do, because you don't know if they're, they might have their own parameters of when they trade it. It might not be every day. They take vacations, whatever. It's not the same thing every single day. I think learning the concepts and understanding the concepts and being able to apply those in ways that fit your risk tolerance and your directional assumptions and your assumptions about the market as a whole is how you get to that rising star point, right? Like that's how they got there. Is they stumbled upon the net
little by little.
Yeah,
how you get there.
They stumbled upon the net. It's the same story every time. I found you randomly on YouTube. I watched some segments. I did a couple trades. I kept watching content. I had some successes. I had some failures, and now this is how I trade, and it works for me. And that's the story. And it there's
takes a little time.
It takes a little time, and there's no perfect trade. There's no paycheck trade. It's all you gotta figure out what.
You were looking for that when you first started trading.
Everybody is. Where's the free money trade?
Yep.
So,
but you've learned how to take risk.
Yes. So I think it's about taking risk. It's understanding size and how much risk you have on and realistic expectations. I think those are all parts of it. But it's the first thing you got to do is make a couple trades. So that is where I would tell you to start is. Find a handful of stocks that you're bullish on, a handful of stocks you're bearish on, sell some out-of-the-money call spreads, out-of-the-money put spreads, do a couple iron condors, strangle if you can, if you have the capital for it, and start going, and you'll pick it up quickly.
Would you do DTE by chance?
30 to 45 days is how I would start.
Okay.
Just be mechanical. Okay. It's not as quick as the 0-day stuff. It's not as sexy, but once you learn and you understand how options move and the pricing and
you can go closer.
Then you can start doing other things. But that's how I would start.
Gotcha. Thank you so much, guys. You guys are doing a great job.
Thank you very much. Appreciate your call.
I have a phone call next. I'm glad you're calling in because I meant to email you. I haven't heard from you in a long time. Thank you so much for calling. Rob and Maria, Daytona Beach. What's up, guys?
Good morning from Daytona Beach.
How are you, brother?
Long time.
We have to catch up.
Yeah.
Yes. I thought, listening to the last caller, I thought I should say that my wife, Maria, and I did not know what a put-in call was in 2020 after COVID started. We stumbled upon the channel like everyone else. We spent a lot of time watching Mike and his whiteboard. You can search it and see what it is. Listening to Mike and Nick. Oh, and by the way, Maria wanted me to say, oh, look, there's the two Batistas on the TV. It's the good-looking one and his father.
Thank you, Maria. Thank you.
I've met Maria. She's got good taste.
Yeah.
Got good taste.
So what we did is we started trading, and we did this basic strangles, 45 to 60 DTE, close at 50% or 21 days. And we did great. And Tasty says don't use more than 40% of your buying power. A lot of times, never more than 20%. I used to be a bookie, and Maria was a banker, so we spent a lot of time working with odds and money management. And we decided to use 80% of our buying power, which was awesome the first year until there was a black swan. And then we lost everything. And it turns out there's a reason why Tasty has the rules that they have. But for new traders, I would say just watch as much education as you can on Tasty and learn how to do it, and then grind it, right? We just grind it. and we've been grinding it. We've been selling, we like everyone, we started with stocks, then we went to options, then we went to futures, then we went to futures options. Our bread and butter remains the NQ, just selling puts. But again, I never use more than 25% buying power. Maria might use 30% because she does some covered calls. But bet small, bet often. Again, there's a reason why they have all these crazy sayings. They actually work. But I wanted to give you just a quick update on what has been successful for us recently. I thought AI was a big fad, and Maria started using it, and she now uploads every trade into AI before she does it. She uploads her current positions just with a screenshot into AI every morning and throughout the day. She used to ask me for advice on something I did not know. What she says is she really likes using AI because it has the right answers. In addition, we have started doing a lot of back testing to verify what we think might be a profitable trade.
Mm-hmm.
And then what we've done recently also is I did 20 or 30 trades a day. I used robots now and then trading right around 150 trades a day.
Wow.
And what that allows us to do is to go much smaller, much faster, and get far better spreads than anybody else that we've ever done before. We additionally, I'm trading sometimes at 15:51 East Coast time, so 9 minutes before close, which turns out to be one of my most profitable trades. But there isn't a day goes by that we don't back test and causes us to change our orders and our trading strategy. You might remember we did the Maria shoe trade for years. If you haven't seen that, you can go to a website created called mariashoetrade.com.
There's some foot pics on that website too, if I remember correctly.
There's a lot of pictures.
And those
of
are
Maria
free
and her
for my
shoes.
feet people out there, okay? This is a free ad for the Maria Shoe Trade foot.
It's a good looking foot.
I've seen it in person. That is a great looking foot. Very beautiful foot.
Well, we're not trying to sell anything. We don't want any money. You can talk to us directly on the website if you want, or email us or text us.
I can attest to
trading.
that. I can attest to that. I've met you, and I can attest to that. Yes.
So, but I wanted to close by saying that when we have had troubles and black swans, we have used, I think what goes underreported about Tasty is the customer support. And while Marty is our go-to guy who will help us with our trades, and most of our calls with Marty go like this: Marty, it's Rob and Maria. He goes, let me bring up your account. Long silence. He goes, oh my God, what did you do? You need to do this, that, or the other thing to get out of this mess.
You be careful with Marty. Don't give him Maria's phone number.
Yeah. Marty used to be a hound dog back in the day.
Marty,
I'm not gonna lie. I can attest to that too. He'll steal your shoes.
The other thing I wanted to point out, and when you start doing a lot of trades, one of the things that Tasty, I don't think you make a big deal about this as much as you should. A lot of people are concerned about commissions. Tasty has the best commissions. But where you really make money is on the slippage, because say your commissions are $1 a trade, on an option. But if Tasty can give me 5 cents better slippage on a trade, that's really $5.
Sure.
Yep.
So people that are trying to find, go to a different broker to see if they can get maybe for an introductory rate 2 cents cheaper, it makes no sense. It's all about the slippage. And let me tell you, I've traded on every platform out there, and Tasty by far is the best slippage. And I don't think you guys push that enough. I think that is a crazy great feature about Tasty Trade.
Thank you, my friend. I appreciate it. You were not paid for this advertisement either, were you?
Not yet, no.
No.
Check hasn't cleared.
I am paid by the lower slippage. And by just anecdotally, before Oracle earnings, about 2 o'clock, Maria said, what do you know about Oracle? I said, it's a boring stock. It never moves. You're wasting your money. she talked to AI. AI said, this looks pretty good. She went in hard. I mean hard.
I've seen her. She could do that. She could do that. I've seen her.
Oh, my God. I never heard the end of it.
They're a better species than us, my friend. They're a better species than us. We should listen to them all the time.
Yeah, that AI is really something. I just can't say enough good things about it.
Great call, my friend. Thank you so much for calling
Appreciate
in. And thank you so much for.
It's good to hear from you.
all the
Stay in
kind
touch.
Please
It's
stay
been a while.
in touch.
All
Please
right.
stay in touch.
Thank you, guys. Say hello to Scott Sheridan.
I will.
I hope his back. I hope his back feels better having to carry Tom and Tony all the time.
Get out of here, you knucklehead. We're going to take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next. Peace.
That was a tomahawk.
Yes, it was.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign. #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Welcome to the Liz and Jenny Show. My name is Liz Deerking, that beautiful brunette in the German hat. Are you going to start yodeling? Is Miss Jenny Andrews yodeling?
Tiki-taki, tiki-taki.
Oi, oi, oi.
Are you ready, Liz? Are you ready? Next week, we will be in Munich live from the RMC.
I cannot wait. So let's let everybody, the cat out of the bag. Jenny and I are leaving on a jet plane this weekend. We'll be traveling a little bit next week, and we will be in Munich. So our normal show is not going to be aired next week. We will be live on Tuesday from Munich, but that's it.
Right. So Monday, you'll watch, I'm not sure what they'll play. Maybe an Amazing Rising Star or some kind of VOD, not quite sure. Liz, you'll still be in the air on Monday.
I will.
And Tuesday, live from the RMC. So don't miss that. Tuesday will be on our regular time, 10 to 11 Central Time, live from the RMC. So that's going to be a lot of fun.
It's 5 p.m. in Germany, so I'm hoping to do it with a stein of beer.
Yes, right. Good idea. And if you want to see us on Wednesday, you've got to come to Munich.
So I'm going to trade my computer in front of me for a beer this big and see if I can drink it within the hour.
So that'll be Tuesday. Again, if you want to see us Wednesday, you have to come to Munich. We'll be presenting at the RMC. And Thursday, we'll be on a jet plane flying back home.
That is true. On a jet, and then correct. And then I actually will not be there Friday. So I think, hopefully, did you talk to TP yet?
I'm hoping that I'm securing TP for next Friday. If you're listening to TP, I'll text you after the show. I'm hoping next Friday I've got TP on. And that's it for the week. It's going to go by fast.
It is going to go by fast. I can't believe it's finally here. It's going to be fun.
Oh, I'm so excited to go.
I know. It's pretty funny because your son lived in Munich for a summer.
Last summer.
Yes. And your husband goes there quite often. So you're very versed in Munich. And in an ironic turn of events, I went there last year right before spring break. I haven't been to Europe in years. And I decided to go to Munich.
And I don't think it was last year. I think it was this year. I think you were there in May.
Well, that's my question. It was, but it was last May. This May would be this May.
No, but I mean, you said last year. Like, we're in 2025. You were there in 2025.
Yeah, true. I mean, calendar year correct, but I did go last spring break.
Yeah, last spring break. But this year. Otherwise, if you went last year, it would have been in 2024.
So in the calendar year, that is correct. Calendar year, you are factually accurate.
I mean, you were just there. You were just there in May. So you are going to be just fine. When you get off that airplane and you get into your cab line, you're going to say, this looks so familiar.
I know. And I'm so glad I am getting in the cab line because, oh my gosh, you got to see what Mikey put on Twitter. But yes, I'm not getting on a train. Because I would be taking a train to nowhere. So.
But we're gonna
this. You got to go straight to Twitter because I love what Mikey did.
All right, let's go to Twitter. I'm gonna go top down here. Hang on. I love Conan O'Brien. So
I do too. This is super funny. This is the best.
All right, TK,
that's at the Hofbrau house.
What?
That looks like it's at the Hofbrau house. I have on it right now. That's where I bought this.
That's the Hofbrau house. I mean, I'm pretty sure that's the Hofbrau house, unless it's someplace in New York or something. I'm not sure where they were filming this.
That is so funny. It looks like it.
Yeah. Gosh, so when you were there, so many things were closed because it was Easter.
Hofbrau house was open though.
Yeah, but like Hofbrau house, I don't consider that like, and I'm not gonna say like I don't consider that good real German food, but it's more of a tourist place.
Oh, that's tourist.
But I was going to take you to a place with like very good German, real authentic German food when we're there, if we have time.
If we have time.
Yeah, because the Hofbrau house is fun to go and like have a beer and watch a game, but to go eat there.
So what I found crazy is that wherever we were, not a lot of the places had spetzels, which I found nuts. And when they did, it was like covered in cheese, almost like a macaroni and cheese. The only place that did have the spetzels that I love, the ones, because we used to work at a German beer garden, the traditional spetzels with like the gravy was the Hofbrau house. And every time I would order more spetzels, they would bring me a pretzel. Wrong or fast. And so Annabelle kept being like, "Did you order another pretzel?" I was like, "No, but just leave it. It's fine."
So I will say, I know we say we worked in a German beer garden, but actually it was Austrian. So the beer soup is Austrian.
Which makes sense because when I was in Austria, I could get pretzels, but not in Munich.
Yeah, the beer soup was not German, even though we like to say we worked in a German beer garden. It was Austrian. They were all from Austria. The people like Klaus who owned it, they came over from Austria, and they opened this restaurant, and it was Austrian, even though we say it is German. But
We do say German because the tiki taki.
Oi, oi.
Is that Austrian or German? Because they do it at the Hofbrauhaus.
I don't know, but you know, and I know how close they are, right? You can get on the train and go right to Austria. And
story, true story, Jenny Andrews.
But I will say the guy is when we were, and this is no lie, we were 18, 19, 20 years old, servers at this beer garden. And I'm not going to say German now that the cat's out of the bag, and it was Austrian.
The Austrian beer garden.
And the singer, the entertainer there, Peter, the entertainer, is
Cedric the entertainer. What do you mean?
Is still there. He's still there. He's still the entertainer there. If you go on a Friday or Saturday night, he's still the entertainer there. And if you have ever been to a casino and played the German slot machine where the guy on the top is, playing the accordion and singing, that's our Peter. That's our Peter. He was paid to make the video for the German slot machine that's in the slot machines across the world.
Yes, he is.
Yeah. Yeah.
He really is.
So mad. He is so mad that he was paid $600 to go film that video. And he's on every German slot machine across the entire world.
Yeah, he needs royalties.
And he never got them.
He needs royalties and he never got them. That's crazy. Crazy.
Oh.
Anyway. Speaking of our Munich trip, one of our viewers, Fabio, emailed me this morning and I said we would talk about it. Can we please jump into the platform and take a look at our IWM trade? He was almost going to drive to Munich to come see us because it's only 5 hours away, but he's got a business trip. So I was like, Fabio, we'll talk about the IWM. You do not have to come see us in person.
IWM has to drop 20 points, 18, 28, 38, 20 points to get back to the center of a butterfly. So when we put this on, IWM was trading at 218. So 39 days ago also was 218. What a move in how many days? What did I say? How many days?
9 days ago.
39 days ago. So 39 days ago, we were 218.
Is it a symmetrical butterfly?
Yes. It was a spiked lizard where then we couldn't afford the naked options in IWM. So we took those off and just left the butterfly.
Got it. Okay. Yeah, I remember.
So we would need to fall down to here to come back to the center of the butterfly. Do we want that to happen in the market? Not really.
No, but it's something that we can leave on because it's a butterfly. So when we risk, your risk is defined at order entry, a butterfly is a truly defined risk trade. And I think we paid a couple bucks for it, $2 for it, $3 for it.
Yes. Now the risk that we'll have, but I'll be on Friday. So no fear, I will take care of it. If it's
never fear, Jenny's here.
Risk that you would have if we left it. If we just said we're just going to leave this, we're going to Germany, we're not going to take care of it. The risk we would have is if IWM is between a couple of our strikes, and I'll go to the analysis page here to show it. So if IWM is between this long put and the short put somewhere in here, what would happen would be this long put would be, if it's at least a penny in the money, it would exercise. It would exercise. And so this long put would make us short 100 shares of IWM. And if these two short puts were out of the money, they would expire out of the money. So then we would come in like Monday after Germany and say like, what the heck? Why are we short 100 shares of IWM?
I'm going to guess that we're going to know where the market is. And if IWM falls to 219, we'll kind of be aware of it.
I'm bringing my computer. We're trading from Germany. I am on with TP next Friday. So I'm not going to touch this, Liz. I'm not going to touch this or do anything to it because I'm on the show. I'm on next Friday.
Yeah.
So there's no reason to close this for $178 loss because the chance of that 227 put coming back is 16%.
Yeah. I mean, but honestly, that's this is something that we would leave it as a butterfly. That's why we haven't really addressed it, because it was very, very, very defined risk. And we've got a downside. We've got downside for 7 days. Now, I will tell you, sometimes when we both go out of town, things go a little bonkers.
Again, do I want to do him back to here? No, because my portfolio has long deltas and it would hurt a little bit if we came down to here. Would it be good for the market and bring back vol? Yes, because we've got, so that's a bearish position we have that could come back. Then our SPY would come back. This Delta Buster would come back. And then our UVXY is also next 7 days. Maybe that would come back. So we have 3 bearish positions that would come back if we had a big fall, but I am not expecting it.
I'm not expecting it either.
Yeah. Not expecting.
Hey, can you do me one quick favor? And I don't think this is going to work out because I'm looking at it live on air. Take a look at the natural gas position. We had a broken wing in there. Can you unbreak the wing?
Oh, okay. So here's our 295, 285.
270, wasn't it?
70. Yes. So to unbreak the wing, we'd have to move the two. Now, I don't want to burst your bubble, but we can't, because you have to take in a credit. You have to take in a credit to be able to unbreak the wing. So you have to put this on for a credit, and then you use the credit to make it a symmetrical butterfly. But we actually paid for this.
Okay, then no. Okay.
Don't you remember we paid 20 cents for this?
I do. It's just so funny because my positions, I always think about that when you natural gas is up is when I can actually make adjustments on mine. So we did pay for it instead of taking it.
Right. Yeah. If we took in, like, let's say we took in a 30-cent credit, then we're going to move the 270 to the 275, which would be, selling out that 270 and buying a 275.
But if you took in a 30-cent credit for it, you could do it.
Yeah, but we paid for it. And it's what, 90? Yeah, $90. So it still would be, even if we took in a 30-cent credit, it's still far, not close enough. But I did this to mine. So I have a very similar position on, and I like it. You see, anywhere to the upside, we're making some money. And we kick in at 295, and we're not far. So
how many days are left? 7 days? 14 days.
Oh, it's the following week.
Yeah, it's 14 days. I'd like this if it was 7 days. That'd look real good. But no, but 14 days, fine.
Hey, so you know what? Our only risk is at this 260 level. So
yeah. I don't mind it. The other elephant in the room, DraftKings. Take a look at that. Let's get rid of that or do something with that.
So DraftKings, we have a downside ratio spread, which, again,
why? Downside ratio spread. What do we collect for it? 80 cents.
It's so narrow. It's only 50 cents wide.
Yeah. I know. Never mind. I was going to say Stub is going public either today or tomorrow, and Stub has nothing to do with DraftKings. I was thinking it was that StubHub is StubHub, not anything to do with gambling.
So I'm curious. So DraftKings is down today. Is Penn Gaming? I don't know. I mean, I used to trade Penn Gaming, but I haven't. It's down a little bit today. What do we want to do with DraftKings?
So let's talk about this. When you have a downside ratio spread on, your risk is as if you had a naked put. So we can close the spread and roll the put out in time. It's DraftKings. I mean, I know it's a 6.8 rank, but we've got a bullish position, or we turn it into a zebra. Do you want to continue a bullish position in DraftKings? Sure.
Sure. Let's take a look. But we could, we're going to get $1,000 in capital back to close this. So we could turn it into, since we put this on DraftKings is down, we could turn it into you said a zebra or a diagonal or something else.
Diagonal will outlay a very little capital. Put this in with a diagonal. So like sell the 14-day or do a long-term diagonal in DraftKings.
I'm just going to close this one and then put the diagonal on so we can actually see what we're paying for the diagonal and the distance and the width. Otherwise,
we're getting $919 back. That's the one thing we're going to put in. Put a pin in that. So we're taking a loss on this trade. We know that it was
downside ratio spread is kind of a bullish trade because you're playing for your credit. I don't know. We didn't have much room at all. A 50-cent wide. It was very close. I think maybe we thought it was $1 wide when we put that on.
Probably did something. But that's fine. Just close it. I mean, it is what it is. This is where we're at right now, right?
No, I just keep trying to pay up. I went for 35, 45, 50.
Ugh. Because you're getting wide markets there. Let's look at our new diagonal. Leave that. We'll make sure we get filled on it. Give it a second to fill. I don't care if you pay $252 for it. Just get out of it.
I'll let that work for a minute. And then
you can look at this, Jenny. If you were going to put in a long-term diagonal, it's actually kind of almost an earnings setup diagonal because you're going through the earnings cycle, which I don't mind.
Yeah. So okay, so let's talk about this. The 42.5 has $2 extrinsic value, or the 45 is just out of the money. But maybe
I would go 45 only because it's trading 44. It's trading 44.21. It's closer to 45 than it is 42.
All right. Well, yeah, let's compare, because I was going to say I'll go 42.5 to give ourselves more profit potential. Okay. But we'll compare. So we'll look at the 45, and in October we would sell the 47.5 probably to get at least $1.
Yeah.
So here we have, but it's only 250 wide.
Yes, but the only reason it's doing that is because number one, it's long term. Number two, it is an earnings setup diagonal, right? So the one farther out in time is in the earnings cycle, so it's going to have either the same or more volatility than the one that you are selling. But $1 for it isn't bad.
No, I know. Usually we look at diagonals and say we don't, we don't want to pay more than half the width of the diagonal. Where like a 250 wide, we'd want to pay $1.25, or a $5 wide.
Oh, 250 wide. I was thinking it was. I'm sorry, you said 250. I was thinking it was $5 wide. It's not.
Yeah. No, this is only 250 wide.
I don't like that at all.
So I'm going to leave this short here, and I'm going to see about if we make it a $5 wide, then the $5 wide we're paying $350.
You have to keep in mind too, you have rolls built in, and this is the earnings trade. This should continue to go up.
Or if we make it a $750 wide, we're paying $5.
Oh, I mean, go with the 42.5. Pay the littlest extrinsic value. We'll have something bullish in to ride us through our Germany trip.
Yeah, it's bullish. If DraftKings go up, this will make money in 35 days. This is $5 wide. At least we're guaranteed money. If this is $350 and it goes up and this is worth $5, we at least know we've made $150. Basically made back what we lost on the ratio spread.
For sure. Ship it. And we'll make sure we get filled on that other ratio spread too.
Okay, so we got filled right away in the diagonal. Let me get out of this.
Yeah, that's weird. Just get out of it. You know what I mean?
I know. It's annoying.
There you go.
So that gave us some buying power back. For sure, we got $900 in buying power back on that, and we only spent $350 on the diagonal.
And I do the setup here. We went long term, the 35-day, 70-day, which is crazy because it's exactly 50. It's exactly 50% of them. 50% of the.
Curious to see. I just am curious to see how much the zebra is.
It's going to be $800. $700 there.
Yeah. I mean, the diagonal was the cheapest version of putting on a bullish trade.
Yeah, we'll make some money back if it goes up in there. If not, we've got some premium in there. It's good. The other thing you and I both want to talk about, Jenny, is this morning we both did the the SPX put spreads.
Okay, so as I put it on, basically, I put on at 9:05. I don't know what time you put yours on.
9:05.
Okay. So, and what did you do today? Let's talk about this. What did you do?
Full disclosure, I'm going to be in full transparency. I don't push my personal trades out, but this morning at 7:30, I put on the E-mini S&P one first. So I put on the S&P one and I went $20 wide, which is actually $10 wide, and I collected like $4 for it in the morning. I got out almost before the open, which was amazing.
Yeah.
So that was the mini S&P. So I put it on at 7:30 and I got out probably like 8:31 because it was a slight little uptick, but I just did the put spread. And then I waited. So 8:30, and then I waited till about 9, just after 9. I turned on my computer at 9, so probably 9:05 as well. And I just sold a $10 wide put spread.
Okay. And how much did you get for your $10 wide?
What did I get for it? $360.
Oh, so you brought it right there.
Yeah. I brought it right there.
right, right up to where we're trading or whatever.
Yep,
Yeah.
yep. It was the strike just underneath the line. That's what I did.
And at 360. And I brought mine down one strike because I got 260. I got 260 on a $10 wide. So you were probably one strike up. I was one strike down. And I'm going to ask Jacob to do a study.
I got out of it, Jenny, in 10 minutes.
Oh yeah, I got out. I mean, we probably put on at the same time, and then the market had to pop up. I put in my GTC for 30%. So I wanted to make. So if I got 250, I wanted to make at least $75. So I put my GTC in for 30%. So I got $75 out of it. I don't know what percent you put in.
I didn't put in a dollar amount.
Okay. Okay. So I want Jacob to do a study because as I sold that $10 wide for $250, what's very important to keep in mind is how many wins do you need to make up for one loss, right? Yeah. So if you have one full loss, how many wins do you need to make up for one full loss? That's why I wasn't even happy with taking $75 out of that because I thought if the full loss is $750, I'd have to win 10 times to make up for one full loss. I'm tempted with these. I want him to do a study. On these $10 wide, if you leave them, because I know he's done studies on leaving them, and some of the times it doesn't work out. But if you're collecting so much and you're doing a put spread just right there, right at the money or just out of the money, if you leave them, what are your results? Because if I collected 250 and just left it, only 3 wins, will make up for one full loss.
So what I think is interesting too about that is that is what is so enticing about the $10 wide iron fly where you're collecting $850 because it only takes one win, 2 wins to make up for it. So it's a high probability trade. And I know what we did yesterday said the calls as standalone trades didn't really make much money, but together they did.
Wait, what do you mean?
So I know the study we did yesterday, and the boys did again. The one we did on Wednesday said that the calls standalone, just selling the calls, did not make money. But you got to keep in mind that when you put them together, when you put the put and the call together, it increases your credit and it decreases your drawdown. So there is something to be said about both sides as well, right? So I know what you're saying there, and that's my apprehension. That was my apprehension about just selling the puts because you get one loss, you're just like, I'm gonna have to do this 10 more times in order to That's another reason why, Jenny, I brought mine all the way up because I liked collecting almost $4 for it because I was like, all right, well, then I'll only lose 6.
Well, and that's why I brought my GTC up to 30% instead of 10 or 20%. And I even was tempted to put my GTC in for 50% because you have to figure out, if I have a full loss, how many wins do I need to make up that full loss? And so I almost want, if I do a $10 wide for 250, I almost want the full 250 because then 3 wins will cover one full loss. And so I'm going to ask Jacob, let's ask Jacob to do a study just on put spreads and comparing, 50 delta or 50 delta or 40 delta. And if you let it go, if you take 50% or 30% or let it go till the end of the day, because I'm tempted to let these go. I know we always say manage your winners, manage early, but if you're collecting so much, I'm tempted to let them go.
I think it's worth looking into. I still think I'd rather manage because we're in Jajun territory right here. When you bring it up to right where you're putting it, you're one strike away from Jajun. You shift everything up one, you're Jajuning it. Do you know what I mean?
I know. But if you think if we go back to managing at 10%, if I would have collected 250 and I managed at 10%, that's $25. If I managed 20%, it's $50. It's not enough. I need way too many wins to make up for a full loss.
I'm telling you, I want him to do a study on the Jajun trade. They're wrapped around the at the money debit spread where you don't touch it. Because then you're only risking, then it's one win for one loss.
Right.
You're not going to touch it, wrap it around the at the monies.
Yeah. So I think we need to.
1 win to 1 loss. It's 1 to 1. Jacob, I hope you're listening. I would like a study about the Jajun debit spread.
We need to phone a friend, and that's you, Jacob, to get, and when we come back, next week, we're not going to be on with Jacob's study, but when we come back after Germany, I want to study on that, just the wide put spread or whether you do a put spread or call spread, it doesn't matter. If you're wrapping it around or you're right there collecting 50% or collecting, 300, a third, or collecting a quarter. Yeah,
so,
let's change.
What's interesting, so we always did the call spread, but now that I'm thinking about this, if you're going to let it go, stick with the puts.
Do the put spread.
Stick with the puts. If you're going to close it, call spread's fine. But if you are going to let it go, stick with the puts, because if your fruition comes to if it happens like you want it to happen, then there's no exercise and assignment, right?
Like here, if you do wrapped around put spread, you're getting about $4.
No, take it to $5 wide. So
$5 wide.
Yeah, see what I'm saying? So here, this is a low drawdown. If you're going to let it go and what you want to happen, I would stick with the puts, because if you get the pop and it's above, $59.95, there's no exercise and assignment. Where the call spread, even if you buy the call spread and you get what you want, you have exercise and assignment on both legs.
And you might say like, oh, well, it's going to come out a wash in the end because half the time it's going to be up, half the time it's going to be down. But with all of our recent studies, it looks like, maybe this would be way more than 50%.
I'm thinking. Are you thinking what I'm thinking?
I don't know. So, yeah, because the problem with Jejun when we were doing it, we would put it on for $250, but we'd only take $50 out of it. So
And
then
you're doing it every single
loss,
time.
you need so many winners to make up one full loss. Here, you need one winner to make up one full loss.
Yes, one winner to make one loss. And I would argue, and this is what the point was some of the times, is that it's not going to be a full loss and it's not going to be a full win every single time. But if it is, because when you lose, I think when you lose on these, you lose full loss.
But I was fine with my $250 on a $10 wide if I could keep the full $250.
Yeah, but don't you think when it goes down, it goes down? It's not like it goes down $5 usually.
Right. That's why I think how often would I keep the full $250, and not that often I'd lose the full $750.
Yeah. Well, Jacob, you got your work cut out for you, kid.
Instead of calling Jacob, I'm just going to send him a link to the show.
He's going to be like these two fools, one in a German hat, one wearing a dirndl shirt.
Okay, I'm going to pop into Twitter, and then there was something else I want to look at. And I want to make sure we get to everyone. I'll go tap down, and then I'll scroll through to the bottom, to the earlier tweets.
What's crazy about that is I know Conan O'Brien is really tall. I didn't know Andy Richter was that tall.
I don't think he is, but he's got a hat on.
No, but I mean, he's got to be a tall dude, because I think Conan O'Brien's like 6'6".
Yeah, but look at his forehead. It only goes to like Conan's nose.
It means he's at least 6'1". Do you know what I mean? I just thought he was shorter than that.
Wait till you see Liz and I in Munich. If you bring your heels and I've got my flats, they're gonna look like these two. I'll be a little shorter.
Be a little shorter than this. That's pretty funny.
Okay, so this comes from the Drunken Chef from YouTube. Thank you, Frank, for sharing our YouTube viewers with us on Twitter.
Jenny, are you the Drunken Chef?
Hey, I used to when I cooked, like have a glass of wine while I'm chopping and cooking. I eliminated that. I don't anymore.
You don't cook anymore. You didn't eliminate the wine. we can put a pin in that right now because
yeah. All right, what's the highest IVR where you'd use a debit spread? You could use a debit spread whenever you want. Again, if you're using a debit spread, it's risking less. So why do we say when IVR is low, use a debit spread? Because you're cutting your risk down, because you're risking one to make one. And so that's the whole point of debit spread when IVR is low. It's risk less when IVR is low.
You're cutting your drawdown in half. And we just kind of had that. We just literally just had that discussion about the wrapped around the at the monies versus something a little bit farther out of the money. So like when you're out of the money, that's why you're taking more risk when the implied volatility or the IVR is higher. That's why you want to have more risk of loss on the table, and it gives you more room to be wrong. You're getting paid to take that risk.
Okay, look, Scott Somers coming in with an earnings setup calendar idea. 245 strike, earnings setup calendar, sell the October, buy the November. Do you have rules if you want to pull in down the long November leg and create a diagonal? So what underlying?
I don't know what underlying.
245 strike.
So it's okay, but and Scott's good. He's watching, so he'll let us know. Oh, yeah, look, it's down. It's down too. It's either Google or Apple.
Okay. Yeah, and you talk about the I pulled up some quotes on these two stocks and noticed 24-hour note on it. Does this mean Tasty offers 24-hour trading on these stocks?
Maybe, possibly.
You'll see. We will all see.
You know as much as we do. He's our international man of mystery. I love it.
in Germany, your show is on at 5 p.m. Yeah, right.
That's why I said I think it's socially acceptable for me to have a stein of beer during the show. We'll see.
5 p.m. in Germany is 10 a.m. here. So when it's 10 a.m. here and you're watching us and Liz, we've got our steins, know that.
Liz is 3 beers deep. Know that it's okay.
And when it's 10 a.m. here and we say it's 5 o'clock somewhere.
Yep. And Jenny looks at me, she goes, tiki taki, oi, oi, oi. And then I chug the beer.
I'm going to bring some cowbells.
Yes. We have to have fun. Do you have any cowbells? I have cowbells. I'll bring them.
I have cowbells, but my suitcase is going to be jam-packed. I don't think I can.
No, I am going to bring them. I'm glad we've talked about this because my dog's name is Will Ferrell. And one of his most famous SNL skits is you got to have more cowbell. So when we first got him, everybody brought me these little cowbells. I'm going to bring them for us.
and we'll sit there on the show and play Edelweiss with the cowbells.
I like it. I like it a lot. Okay.
All right. I'm going to look at earnings setup calendar. Well, I mean, I know we mentioned Apple and Google here. Let's see if that's if maybe Google, because yeah. So that's the price. That's the price of Google.
Okay. There you go.
Right?
I think it's the price of Apple.
Yeah. He says 245 earnings setup calendar. Can you make it a diagonal? Sure. If you like, and let's be aware of, and I'm just guessing Google. I don't know. But be aware of your spread width and that you're not paying more than the spread width. So if you did like 240, 255, $15 wide for 1136.
Yeah, sure. Now that's the earnings setup diagonal. Can you pull it to the calendar just so we can show how much that would be?
Yes. So 245 here. 582.
Yeah, so that's the calendar versus the diagonal. And our international man of mystery is very versed in this, so he knows what he's doing.
Yeah. I mean, I haven't gotten into Google since the crazy run. I've been a little like gun shy to get into Google after this big run up.
Oh, I'm in the Goog. I've been in the Goog.
I used to be, but I'm not now.
Okay. When I say I'm in the Goog, it's embarrassing what my position is. It's because my son bought a handful of shares. I bought a handful of shares just so I have the price in there. That's it. So when I say I'm in the Goog, have I participated on the rally? Shockingly, yes, in a very, 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 very small amount of shares.
I used to sell puts in here. I liked selling puts in here, but now I'm not.
Stepped out in the Goog.
Yeah, I don't know. I'm gonna wait. But yeah, what do you like better here, Liz? The calendar or the diagonal?
I prefer the calendar because we're going to get in and out in 10%. $58 is not bad for an earnings setup calendar.
Okay, so that's what I'll say. That's what you'd make about $58. There's a lot more profit potential in the.
But that's what I was going to say. I like the calendar because it's only $500. But I do believe that if you want to, calendars are great, but this is a long-term earnings setup calendar. And do I think Google's going to stay around this range? I don't know.
And you could give yourself more profit potential. Just it'll cost more. So like here's a $20 wide for $12.50 where you have $800 profit potential.
Yeah.
I like diagonals. I do like diagonals. But what happens is like if the stock runs up and you're not at expiration of your short yet, you're not making your full amount. You're not making, if you have $800 in profit potential and we're at your short and there's still weeks to go, you're not going to make that full profit potential of the diagonal until we're at expiration here.
Wait, and kind of springboarding off the last person that asked a question too. So keep in mind, so a diagonal is nothing but a calendarized call spread, right? So let's break that down too. So if you did do a call spread, like a wrapped around the at the money or any type of debit spread, you're also not going to make full profit until nearer to expiration as well with this. So just keep that in mind. That's one of those things where these don't. It's a calendarized call spread. So even if you were going to keep it within the same cycle, because this is okay, this is the same thing, you're still not going to make full profit until closer to expiration.
That's true. And look at how much cheaper this is. So you're paying $5.50 instead of $12. And if it runs up between now and expiration, you still got to wait the 35 days to make the full profit.
Make the full profit. Now you can get out but keep in mind with that, so everything's kind of got a relationship, right? That calendar was $580. That debit spread is $500. And what would you want to make out of them if you're risking only $500? $50, right? So they
Not
all
out of a call spread. Like the calendar, yes, a calendar is a low we have to take profits quickly on a calendar because it's a low probability trade because you need the stock to stay right there. Where the call spread, if the stock goes up, it doesn't matter where it goes up, you're making money. So it's a higher,
call spread won't make as much money because if it gaps up wildly, yes, 100% you can make a lot more money. But if it stays right there and then your long becomes the at the money, your short becomes the at the money. That's the one that is kind of the problem. That's why it's keeping its value. Because if you're buying a call debit spread and then the short becomes the at the money, like take that all the way up to the 55, right? So buy that, sell at 55.
Yeah.
If Google goes up and stays at 255, your short becomes the at the money, and that's loaded with extrinsic value. That's why you're not getting out unless it gaps up wildly or time goes by.
Or any time would go by. But if I'm putting on this call spread, I'm not playing for $50.
No, I agree with it. I agree with you there. But so I don't mind this. I'd rather this than the calendar. Let's pop it up.
That's where, when we talk about then TP and we were talking about over trading versus active trading. We take winners quickly on the show because we're constantly putting on trades and examples and we don't have a lot of buying power and we're taking things off quickly. But if I put this on for $550, I'm probably leaving it for a while. I'm leaving it. I'll put in, if I'm paying $550, I'm going to want maybe $250 out of this. And if your max profit's $900. And
Okay. I am glancing at the chat, and Grumpy Mike, I actually just laughed out loud. So it just says clearly it's not Red Shirt Thursday. Is it Medieval Friday thing now? Because look at us. Medieval Friday. I'm with it. I love it.
Oh my gosh. No, we're leaving for Germany. We're leaving for Germany, and so we're getting ready. We're getting ready. I don't know if I have room in my suitcase for this hat. And there is a feather in it somewhere.
There's a feather in your cap.
I don't know what happened to it. I don't know what happened to my feather.
All right, so let's go back to Twitter.
I think our call spreads came off, and I didn't leave it for the full 250. It'd be a loser now.
Which call spreads? Oh yeah, no kidding. That's insane. That's what I'm saying. That's why it's very hard to not take your profits in those 0 DTs.
Okay, Eric, happy Friday. IV rank is boring. Yes. At 10.7, nothing exciting, just threw a $20 YOLO on. So yeah, it's interesting. Like when the IV ranks low and you're not getting a lot. Yeah.
Yeah, I agree. I agree, Eric.
I like the YOLO trade.
I did too. And I wanted to get to Chad because there we go. I was going to say I want to get to Chad because I knew he's up.
So he had a couple. So here, 0 DTE, 4-lot iron condor, 14 delta with $25 wings. And then here, these are opening trades. 2-lot iron condor, $20 wings. So good. Chad's getting in on the action.
Woohoo! I love it, Chad.
Ashfin overnight. And Chad, just a word of warning. Nothing we say or do is a trade recommendation.
No.
Yeah.
I just clapped for the Ashfin's trade.
And it's overnight.
I love watching our viewers win. So I love a $35 winner chicken dinner. Congratulations, Ash.
And I like this, another iBit winner. Let's take a look at our iBit.
We did get filled in iBit yesterday. Unknown caller. The toll-free call calling me. Sorry about that.
Unknown caller, Liz.
866. Should I answer it? It's a toll-free area code.
No. All right. So we're going to leave it. We've got our GTC for 50%. We're up 30%, but it's not going through the call spread. So we're just going to leave this.
Yeah.
We're going to leave that. I wanted to show you or look at this. I went to SIBO most active, and of course SPX is on there. That's always very busy. But sometimes things stand out to me like...
Look at that, 75,000 shares of that have traded, of the 6,600 strike.
Yeah.
So that's a big number, 75,000.
75,000. 6,600.
6,600 calls.
SPX, 6,600 calls today. Here it is. That's the volume, 75,000.
Wow. That's the whole volume. That's everybody. So Jenny.
Yes.
Did you buy it or sell it?
For $1 with SPOOs down to It's a tough one, Liz, because I am not going to sell a naked call in SPX.
Oh my God, no. Did you use $197,000 to get a dollar? That's a bad use of capital.
$130,000 for a dollar. I can find a better way to make a dollar.
I don't need a dollar that way. I would, if you press that button to sell it, I would be sweating the entire day.
Yeah.
Uh-huh.
Yeah, 6,600. And spoos are down.
Do you know what I wish? This is just a wish. In that SIBO is most active, that they put a price that it was traded at.
I think your wish is our, what is it? Your wish is our command. I'm almost positive you can see
what price it traded.
I think there's a way. I think there's a way. Someone's going to know, but there's a way. I'm pretty sure.
Someone give me the genie blink. Give me the price on that.
I wanted to look at Upstart because
that's new.
This jumped out at me. This 13,000 call spreads in Upstart.
No, it's a diagonal. Look, it's two different expirations. It's the 12th and the 19th.
Oh yeah.
Yeah. So it's today's 65 and next and Mondays. Is that Mondays? No.
Let's take a look at this. I just wanted to look at that trade.
That's unique.
Right? So
it was today's 65 call.
And they bought the 64. So they bought the 64 for next week and they used today's 65 to cover some of the cost. Or it's a roll. It's probably a roll.
It's got to be a roll out to the next week. Yeah, there's your 14,000 right there.
Right? So like, let's say someone had long calls in Upstart. I don't know if it's long calls or short calls, but let's say someone had long calls in Upstart and they're rolling them. So let's get on the long action in Upstart. This is one of my longs in my account, Upstart.
7 days, $198. Get it. I don't care. I'm in.
I want to see how much puts are here. Yeah, they're expensive.
No, I would rather use $200 the other way.
$200 for the 64.
Hold on. Let's only because we've been talking about this. I don't necessarily know that's a good thing or a bad thing. Let's just do a wrapped around the at-the-money debit spread for 7 days.
Sure. Or we do, you know what, Liz, you're not going to be here in 7 days. Let's go to the fourth. Let's go.
But you see what I'm saying? That they think, I mean, we're looking at this. This is a way, you've got a 6 rank in here. You want to make a bullish trade. There's nothing wrong with this. I want a low drawdown and I don't want it to have to go up $2 in order for me for me to start making money in 7 days.
But because you're not going to be here next week, let's just go a little bit further out in time.
Okay, wait, can you just go the 7 day again real quick? Because we're not going to be here. So let's say I wanted to do the wrapped around the at the money. Say I wanted to buy the 62 and sell the 65. Okay, so here I'm spending $1.48 and it's exactly where it is. If what I wanted to happen, this is kind of like, I'm just springboarding up what we were talking about earlier. If I have an idea like this and I'm bullish and I'm not going to be there, I would take that and shift it all over to the put spread. Because then if what I want to happen happens, I don't have to do anything.
So you're short this put spread for $1.47. If it goes up, you keep the $1.47. But when I say if we're not here and not paying attention, if this is in the money and this is out of the money,
I totally agree with you, but I was just saying, like, just springboarding off the discussions we were having earlier, especially with the 0 DTEs, if I'm going to leave them, I want it to be where if what I want to happen happens, I just don't have to do anything.
Right, that you don't pay any exercise or assignment fees, you just leave it.
Yes. If what I want to happen happens, I just wanted to kind of drive home that point too. That's why you can use calls, you can use puts, but I mean, if you think about it, that's not a bad way to be.
Let's do like, so I'm just thinking like wishful thinking. If we pay $350 for 14 days, because we're both going to be here. And then in the 7 day, put it somewhere so far where we think, oh, it's never going to go through there.
And in full disclosure, you'll be here next week.
63, 68. But here's a situation where if it runs through 68 and we get assigned on 68, then we're short 100 shares at 68, but it doesn't matter because we're long that 63 call. So like we won't have that risk of having 100 shares, just having like willy-nilly 100 shares.
So what would happen is our capital would change, but our position wouldn't if we were a call-off scenario.
Right.
I don't mind being long Upstart. Hit it.
And then hopefully the 868 expires and then we're left with this.
So are we coming into diagonal season? Because we seem to be just leaning towards diagonals.
263 is cheap. Like I may get rid of. I have so much Upstart stock that I may get rid of my stock and just do diagonals because it's way cheaper.
Well, diagonals are always going to be cheaper than having the stock. Your profit returns.
$3,000 for 100 shares of stock versus $200 for that diagonal.
Are you pushing everything through?
No, I haven't pushed one thing.
Okay, well, good, because I haven't looked at the other side. So do it now and I'll look at it.
Activity today. DraftKings. So we made our adjustment in DraftKings. We've got a diagonal and Upstart. Honestly, market's at all-time high. Vol is low. VIX is low. Diagonals are okay because they're defined risk. Like Upstart keeps falling, we are out $260. DraftKings keeps falling, we're out $300. They're very defined risk trades if you want to catch the ride going up, but you want very low risk going on the way down.
Yeah, I mean, that's why a lot of times with zebras, I will jump back and forth between zebras and diagonals because zebras have more risk, but they're both defined risk, right? If you want to participate on that up move. But that was an interesting catch in Upstart.
Well, I only noticed it because I have a lot. I mean, when I say I don't know why I've been accumulating Upstart because I'll sell puts, and then I'm getting put out the stock. So I have Upstart, and I know it because this hurt this day.
Oh.
Ooh, that hurt. So that's why I know I have it because I went through this day. Then it's been choppy and recently a little painful.
Yeah.
That's why I know. Well, you know how you know like your one's losing more than your one's winning.
Oh yeah. You always know your losers more than your winners. But you know what? It's interesting. It's kind of like anything, it's kind of like, okay, I'm just going to use a children metaphor here, but the child that needs the most help is the one that you focus on. The one that's doing okay, you're just like, okay, go ahead, do your thing. You know what I mean? It's like you're only as happy as your least happy child. You're only as happy as your least happy.
Your worst position. And honestly, like, I don't mind. So, and I do this. I talk about some people don't want to sell out long stock that's made a lot of money because they're holding it to have like long-term gains taxed on it instead of short-term gains. Well, Upstart, I don't know. I think I'm down money in Upstart. So if I'm down on the stock and I've got stock and it's using a lot of buying power, I don't care if I close it all at a loss and then switch it to something else. Maybe I'll switch it to diagonals.
I think that you're going to get a gold star there, Jenny Andrews. I think you should switch that immediately following this show.
I'm going to get out of moment. Okay, so I want to make sure we got to everyone. We're running out of time, and we better do one last check through the account. Jack Tucker, 3 tranches.
Woohoo! $16,400 in premium.
Okay, I just want to do the math, Jack. So you've got 10, 80, 55, $25 wide here. And $25 wide on these. 10, 10, 10. So you've got 30. And let's just say, $25 wide, 6, 5, 5.
Let's say 5. He's got $5 in collections. Just
But maybe a little less than 2,000 risk. Let's say 1,900 in risk times all of them. Okay, $1,900 in risk times 10, 20, 30. You've got $57,000 in risk on. So when my husband tells me like, why don't you just do what Jack Tucker does?
Well, I mean, so here's what I like about this is Jack Tucker and Blue Wackadoo and a lot of people on here, they're very consistent. And I love that they're showing us. And I love the actual, this is a real-time thing. This isn't like Jack Tucker being like, I made $16,000 in premium. He's going to take less than that because he's going to take a percentage of it, right? But he's very transparent with everything that he does. There's real risk here. But he's been doing it for enough where Jack Tucker is probably playing with the house's money.
You can see right here, P&L at expiration, $16,400.
Yeah. Right now, his theoretical P&L is he's up $3,446.
With $57,000 in risk for the day.
Yeah.
Just so people are aware, because I know people see this and they're like, geez, we even have market makers on the floor, Jack, who come up to us and say, who's Jack Tucker? What is he doing? Like, I want to do what Jack Tucker is doing. Well, there's a lot of risk. There is a lot of risk in his trades. It
is funny because there is a hush over the floor and they'll watch our screen when this comes on.
Yeah, when Jack Tucker's on, people listen. What is that? E.F. Hutton? Or what was that? Like when so-and-so speaks, people listen.
Oh.
You remember that old commercial?
I do, but I have no idea.
All right. Any final? I'm opening this and I'm gonna look for 7 days. Archer.
Oh, you know what was very bizarre? In my Archer, I have my puts are bigger than a breadbasket. I got assigned on a handful and not all of them.
Did you?
Yeah, isn't that weird?
That's weird.
Which means I must have gotten hit by a wheel, but
I mean, that's weird. I don't know.
roll the
I can it's wishful thinking and who cares? Like if we come in long Archer, it doesn't matter. I can roll this 10 put. Should I just roll the ack?
roll a
Okay.
10. Roll
Yeah.
a 10 straddle. I don't care because we had the call too.
No, we were long the call.
Oh, well, that's interesting.
I think we had like a deep
Yeah, leave the long call. If we come in long Archer, it's over 10. That's a good day.
Yeah, we had the long call. We didn't have a short call. Okay, so Archer's rolled. AI 7 days. This is a zebra. We got to move it.
You got to move it out in time. It's fine. I mean, we're down $60 on it, but let's move that zebra out in time. Yeah, do 17 and a half, 15. You're fine.
Or do we just buy 115?
Do that. Band-aid over a bullet hole, buy 115, hit it.
Yeah. And we're actually getting a credit. And AI, I don't know what to think about AI, but I feel bad. Alan's in it. I know Alan's in it.
Alan's fine. Alan's doing a great job.
Okay. AI, BRKB.
That's a residual option.
Oh, yeah. Leftover. Coin, 35 day.
DraftKings close. EA close. I'm just going to go forward for you so you don't have to open all of them.
Wait, let me put in a GTC for this. This was buy a $10 wide call spread, sell a $10 wide put spread. I'm going to close this position for $3 credit.
Sure.
How does that sound? So like $300 winner?
Sure. I think that's wishful thinking, but hopefully it'll hit,
Hey, you never know. Okay. It would be wishful thinking for like, well, no, it could happen. I think it could happen.
It is. When EF Hutton talks, people listen. That's my thinking.
All right, DraftKings, EA. Should we close this EA?
Yes.
What do we have here?
Diagonal. Close it.
Or do we want more money out of it?
Just close it. We're leaving.
All right. Sometimes the EA markets are a little wide. That's in. End phase.
Close it.
I just have to put in a GTC. Right? I just have to put in a GTC.
Oh, it's got 35 days left, sure.
Yeah. I just want GTCs in, so if the market's moving, we can get hit on some GTCs. Etha.
Close it. No, just close the.
Leave this. I'm going to go really fast here. Put spread, GTC, 50%. That's FIG. Gold, one short.
Oh, yeah. Our gold versus silver. Close that. I mean, it just shut it down. It's very little.
GTCs.
I think we have our GTC in. Intel. Jade Lizard.
It's a strangle. No. It's a strangle around a zebra.
Why don't we close our strangle?
Yeah. Okay. And we'll move the zebra out. So we have a strangle around a zebra. I'm going to close the strangle, which we made money on the strangle. I mean, not much, but we did make some.
And then do exactly what we did. Just buy a long call.
Yeah. Or I'll roll the zebra out. Move it to October.
Honestly, just buy the 25 call or buy the 24 call we're giving up $1 extra.
Yeah. Here, I'm giving up.
Yeah, that's fine. You're getting a credit.
Yeah. Okay. And I'm going to get tried to.
And close
I want to close that strangle. Okay. So we just have one long call. Fine. We know we break the rules all the time.
Okay, that's our butterfly. We'll keep an eye on that. Joby we put in yesterday. Kroger we put in yesterday. Okay, close those.
Well, I want GTCs. We're out of time. Here's what I'm going to do, Liz. Here's what I'm going to do. I'm going to go through this when we get off, and I'm just going to put GTCs in for things. So if we're gone and they hit, they hit.
Perfect.
Steve Jones, thank you so much, Steve. When E.F. Hutton talks, people listen.
This is you went back in the archives for that comment.
Can we hear it?
No, I can't hear it.
Now that looks like a very interesting situation. My broker's really enthusiastic about it. What does your broker say? Well, my broker is E.F. Hutton, and E.F. Hutton says... When E.F. Hutton talks, people listen.
That is fantastic.
Down. Oh my God. I can't even turn it off.
All right, well, it's 11, so we are done for the day. We will put GTCs in. We will see everybody live on Tuesday.
Auf Wiedersehen. I don't even know how to say goodbye in German. Is that it?
Yeah, no sprechen Sie Deutsch. All right, everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you Tuesday. Unless you're in Germany, we'll see you sooner.
Goodbye.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, definitely not the Chicago Bears, but whatever else. Come hang with us for the next hour of the day, my favorite hour of the day. Spend it with my buddies, Mike and Thomas. Thomas, good morning, sir. How are you?
Good morning. I'm doing good. You know, it was a good weekend after, we're getting through the week now after the short week last week, but it feels like we're going. So, got some nice weather here in Chicago.
Fall is here.
Yeah.
It's nice.
I've got the rubber legs going on today because I went and did a hike out at the Indiana Dunes with my son.
Oh, nice.
Did a nice 4 mile, but it was mostly sand. So it's doing it. Then I came home, I felt fine. I haven't done a hike in a while like that. And so I'm like, I'll do my kettlebell workout. So I did legs. I'm like, I already got the legs warmed up. Did it the next day. I was feeling it. Today I'm still feeling it. So walking funny.
Being sore, this soreness is a good feeling, unless you're too sore, then you're
yeah. And unless it's perpetual and it's your lower back and you feel like
here we go
blowing your brains out of it.
Here we go.
It's like, what the hell? I didn't know I got so old so fast.
It sneaks up on you.
Yeah.
Time flies.
The expiration or the
your warranty.
My warranty has expired, as my chiropractor would say.
Cartilage is wearing thin on us.
Really sad. I hear John laughing at me out there.
I can hear him too.
Yeah.
I love it. It's one of my favorite things.
Yeah, thanks, John.
I mean, we're still youngins compared to some generations. They're probably sounds like we're complaining, but
just a little.
Oh,
Yeah,
come
just a
on,
little
John. It's okay.
Did John win his fantasy matchup? Is that why he's so cheerful?
Ooh, maybe. That's because I'm not in the league anymore.
I won big.
Ooh,
nice.
Ooh, there we go.
Yeah, I won all of them except for.
Very nice. Very nice.
Yeah. The Bears, I have some deep concerns about Caleb Williams' passing ability after last night.
There's a lot of concerns. We're just gonna ignore it.
Yeah.
And just
Hope for the best.
Hope for the best.
Yeah.
You know, we'll just say it was jitters. It was just first game under new system. But yeah, it's.
But next week,
gotta put the clown makeup back on and go to work. Be like,
DeAndre Swift revenge game, 2 touchdowns.
oh, we got the Lions next. Is that a primetime game too?
I think it's 3 o'clock. I think it's noon.
I know we have like an absurd amount of primetime games, which is also just not good.
Scary.
Yeah.
UNH up 6%.
That was a big move.
Love to see it.
Yeah.
For those that have been buying the dip, hodling.
Yes.
Feels nice, but yeah, big move there. Rest of the market doing nothing. The
Chop fest.
0-day Iron Condor thesis is working.
Did you put another one on this morning?
Yeah.
Did you take it off already?
No, not yet.
Probably
I put it on
can.
too late. I put it on at like 9 a.m. But it's still up 60 cents. We're pretty close. We're like 30 cents off of my GTC order for 90 cents. But
You do it 5 points wide? $5 wide?
5 points wide, yeah. $1.80, $1.90, just nice and simple.
Mm-hmm.
Nice and small. And yeah, I got Vecchio in last night. I guess I was on overtime, and I was like, this is what you do. And he did it this morning.
Cool.
So he's out.
Awesome.
He got like 75% profit. So
Good for him. Good for him. That'll help fund his new deck and railing and repairs on his
stuff.
I feel like he has every single week. He has like a new tree. Like,
Well, it's funny. I was in Minocqua over Labor Day weekend, and I learned that they do the same thing. They have a person come out and cut down like 10 trees a year, because if one of those trees topples onto your house, you got problems.
Yeah.
Yeah. So you might as well pay the fee of getting the trees out.
Yeah.
Versus risking it.
Yeah. But he was saying this morning that
not a-
there's some gray area in whose tree is who.
It's tree law.
It's like on the landline.
That's what we have. My dad was saying, like, it's just, you have your property line, and anything that goes over is yours, and you chop that part off. Chris was saying that's not that easy.
Yeah, I think state to state.
Yeah.
I know there's like a big Reddit sub, tree law, where it's, very nuanced and spirited debates, but
Tree law Reddit.
Yeah, the 2,000 person Reddit thread that they have for tree laws. That's
it's like bird law.
Yeah.
Birds are spies, so there's nothing else to know about.
No, they're robots. They're robot. Birds are fake.
Birds are fake spies. They're robot spies.
Yeah.
The perfect vector for.
Really?
They really are. When's the last time you caught a bird?
It's true. I don't really try all that often. I mean, they're rats with wings, so I try not to touch them.
They're just little bubbles of air filled with computer stuff on the inside. Yeah.
What a rabbit hole. What a rabbit hole.
They do have T-shirts. Birds are spies T-shirts. They do have them. I've seen them before.
Yep.
Bumper stickers, all that. You can deck it out.
But yeah. What else is moving here? I haven't done anything in this portfolio except for the 0-day Iron Condor today.
Nothing much is moving. The E-minis are down 3 right now. They've been chopping up around a 5-point range. 6,500 has kind of been our magnet today. In terms of the overnight session, we've had about a 34-ish point intraday range. So very much in line with yesterday. Not seeing all that much movement. You did get a little bit of a bid in volatility this morning. Volatility up 10 ticks right now. It got up to 1676. So it was up like 30, 40 ticks at one point. But it has since come in with the chop fest that we've seen today. NASDAQ up 2. You got the Dow up 31 and the Russell bucking the trend here down 19. That's actually a really big move in the Russell, considering everything is basically unchanged here. In terms of single name stocks, I know Mike mentioned UNH. That's helping the Dow today, as well as the E-minis as well. That's a big move to the upside. The big tech stocks haven't really been going anywhere. I think Amazon's been basically unchanged all day. Apple is down $1 or $2. Meta has been chopping around. Netflix has kind of had a nice little bounce here. You got some of the smaller stocks like Palantir is up $5 and change, but it's been a very choppy couple sessions here to start the week. Oil catching a little bit of a bid. It was actually up about $1 and change earlier this morning. 63.67 was the high of the session. Some things happening in the Middle East. Maybe that's why we got the little bit of a bounce. That was a shock.
Purple flash.
Purple flash. Bonds down 14 ticks. Big move in bonds, but they've had just an astronomical move over the last week or so. They're up about 2.5, 3 full points in just the span of a week here. So this is just a minor pullback. Maybe the reason that the Russell is kind of the weakest today is this move in the bond market. Gold up $9. We're at 36.86. We got up to 37 handle. 37.15 was the high of the session, up about 35.40-ish. So huge move in the metals. Silver giving it up a little bit, down 50 cents, but it too is just off of highs. It's been a massive move in gold and silver. Bitcoin was up earlier this morning. It's now down. Futures down 1,200, spot down 800, and Ethereum down $17 here at 4,200 and change. So choppy market is kind of how I would describe this.
Yeah, and we do still have some futures move in. Someone in the YouTube chat,
yes,
Bob, pointing out live cattle down 2% today.
Oh,
it's the profit-taking move. I mean, the feeder cattle are down too. It's pretty interesting because I don't want to touch this until it gets down to its probably the 100-day moving average, somewhere around there. It's a big move. So
probably
we said the air would eventually come out at one point, and when it does, it's going to be a big move because you got all those speculative longs that have built their position that we've talked about in previous weeks. Now is the time where they're taking out their positions.
Is the screw worm still a problem?
I think so. The last time I checked, it was, but I think this is just profit taking. It's had a really good run. You know, it's outpaced the S&P by a lot. So this is just a place to take profit.
Yeah, makes sense. That is a big move.
Yeah, it looks like there's still screw worm stuff on the internet. So.
Still happening?
Still happening.
Yeah, some of the other bigger movers like the currencies, you got the euro down a little bit today. The dollar itself has just been super weak across the board here for 2 or 3 weeks. So some big moves in the currencies. I think I had a euro short that I might be able to take off here.
Yeah.
$15. Yeah. Might hold it a little bit. I still have the call spread on from the Iron Condor that we put on like a week or two ago.
Yeah, the short euro dollar trade is what we're in. But yeah, it reversed its whole move from yesterday. Still on the upper end of that range though, so I think I'm going to hold mine too. And then the long dollar yen trade coming in today a little bit, but bouncing off of the lows. Right in the middle of that channel. So we'll see what Glenn says tomorrow. How about
yes, we'll have Glenn from Tasty FX on tomorrow to put us in a couple more positions.
I've got the Cherry Picks newsletter pinned in the YouTube chat. If you want to join us on YouTube, we're streaming live there. Just go to Tasty Live. You'll see this video streaming live, and you can throw in your trade ideas and questions along the right-hand side chat that we will get to shortly. But first, let's talk about some futures stuff. We can pop over to the slides and knock that out real quick and get back to your questions and trade ideas. September poses risk to a rally. Ooh.
Yeah, so I mean, I was going to talk about this last week, but we weren't on air for the start of September. I think it's still applicable, even though, we still have a few weeks left in this trading month. It's particularly important right now because we're going into the contract roll. And I believe it's Monday from the U to the Z. So starting, maybe tomorrow, you're going to start seeing that roll activity impact the indices, and that's when you could get some heightened volatility. And this roll comes at a time when we're getting PPI data tomorrow. We're getting CPI data Thursday. So when you sometimes see this higher volatility on these rolls, especially with PPI and CPI right now, with the backdrop of it affecting these Fed rate cut bets, I think that could be a potential trigger for some more volatility to come in, maybe some downside action in prices. So I think it's really good to be cautious throughout the next few days, at least until the end of this week, with this data coming out.
And that roll is triple witching. So next week you have all the expirations of the futures, equity, and indice options all expiring on the Friday. Quarterly expirations, so big, usually a big one of the bigger there.
Yeah, and so, the roll is contango now. We're priced about, I think, 55 something higher in the next contract around there.
Yeah, about 54. That price is in the dividend too, so that's part of it too, and some of the carry. But that can change with rates. Like that's another thing that's coming up next week too. So that's Wednesday of next week, I believe.
I think so. Yeah.
The FOMC meeting. Yeah.
17th Wednesday, 1 o'clock Central.
1 o'clock.
So that's another
Chicago time.
So there's a lot of events next week.
Yeah.
That's kind of
and
no vol. We have no vol.
No vol. You got PPI tomorrow, CPI Thursday, retail sales Tuesday, Fed decision Wednesday, jobs Thursday. That's it.
And then you got expiration.
Okay. Yeah. So we got some stuff.
Yeah, certainly.
We got some stuff. But yeah, let's check it out.
Yeah, so I mean the PPI tomorrow we're expecting I think 3.4% year over year. That's 3.3% last month, so a little increase. I think if we hit 3.5, 3.6, that's going to send some warnings to the market. Definitely might start off whatever selling we've been seeing over the past few years. So this chart is seasonality. I just did it since 2020, so capturing, the recent market dynamic that we're in. But if you look back 20, 25 years, September is also a down month. But just looking back the past 4 years, we look at that September, it's 3.61%. So that's the biggest downside move by far. It eclipses April, which is the only other seasonal down month that we've had since 2020, which is 1.4%. But 3.6%, it's a big number. So for this month in ES to date, we are up 0.44%. So we're counter trending this seasonality so far. But that brings it even more into the spotlight that
the bigger move
south. It's not necessarily saying, this isn't saying it's going to go down. This is just looking at history.
Past performance not indicative of future returns.
Right. So it's something that warrants caution, and especially like we talked about these event risk we're going into starting tomorrow all the way up into the Fed meeting. This is going to be big. And now there's people calling for a 50 BPS rate cut, which, if you do that, it's typically not a sign of confidence from the Fed that they've not fallen far behind the curve. So I think there's a pretty good argument right now to say the Fed has fallen behind a little bit, and you can especially see that when you look at the moves in bonds that we've seen over the past 2 weeks. I mean, they've just ripped. Anyone who's been long ZNZB, you've done very well.
Yes.
At the same time, I think that's a lot of what's holding this equity market up right now. Is we're in an environment where these rate cuts are finally coming. The one thing where you have to be wary of too is it could be a sell the news event. All right, the market's been expecting these rate cuts for a while. We've rallied up on the expectations. Now you actually get it. Is it going to be a sell the news event, and people are going to start saying, all right, the party's over, rate cuts have started, especially if it's a 50 basis point cut.
Yeah.
So
I've seen, and Tom kind of mentioned it too, the argument of just doing the 50 basis point cut just to be done. Instead of just play the charade for the next couple months, just do 50 and just be done and call it a day. You think it would be taken as more of
I think it would be taken as the Fed seeing the equity or the labor market deteriorating faster than they expected, and now having to price this in to their policy.
Okay.
So we had the annual revisions data for the BLS, the NFP reports. It's like -9.11 something. It was expected to be a downward revision.
Yeah.
And they do that off like tax data and stuff. It's not the final one. I think the final one comes in February or something. But this is, it did support rate cut bets. It pushed up those odds for even, that 50 BPS cut.
That's actually come in a little bit today. So looking at the CME Watch tool has it at 8% versus 10% yesterday, which is.
So outside chance, I don't think we'll get that. So it's, does this inflation data come in hotter and kind of suppress that 50 even more? Because if inflation's going up, labor market's going down, then you're in a tough spot of which side of the equation.
You can't do too much because you gotta, you gotta kind of stick to the one.
You do a 50, it injects, some more confidence in the market. More people are getting jobs, spending more.
Yeah.
People are more confident in the labor market. They say, I'm more secure that I don't think I'll be laid off. That way we're going to make this big ticket purchase that we've been holding off on.
Mm-hmm.
Home buyers could say, all right, let's jump into the market. And actually, we've been waiting for 2, 3, 4 years in some cases.
Mm-hmm.
Let's jump in, buy that home, and then, do stuff like that. The good thing is, if you want to be a dip buyer in September and you do get this pullback, say you get a 2, 3, or even 1% pullback, you could look at seasonality October and November very strong. You're going into the end of the year, you get this rate cut, you think, all right, the labor market's going to recover, corporate profits are going to continue to expand with, earnings season starting again in a couple weeks. It could be
easy money,
Yeah, it could be a good dip buying. And, let's go to the next slide. This is the percent of the moves aggregated by if they're over 2% up or down, going back to 2020. So if we look at September, the down moves over 2% are actually the highest also of any month. Up moves, which is the bottom bar, green, it's on the lower end, but it's still not the lowest. So you still get these big up moves, but you get these bigger down moves. And if we go to the next slide, we'll see how that affects the VIX seasonally. In September, we go from August where the VIX is trading 17-ish. You go to September, it's trading above 20. And then volatility continues to expand in October before dropping off into November where you get that really big seasonal up move. So that makes sense how volatility works. So if you're trying to be a dip buyer and you're waiting for this pullback this month, maybe you're waiting for it to happen on CPI, maybe you're waiting to happen on the Fed, you get better volatility. So if you're doing things like selling premium or something, you could get a level that comes down in the S&P. You could sell something like a put spread. You get that, extra volatility. And then you're expecting prices to increase October, November, and then get that volatility decrease also. So if you're doing something like 45 to 60 days out, that strategy kind of aligns with the movements of what you're seeing in pricing and volatility.
It's cool to see the VIX from going from August through October. It continues to increase despite October being that really, it kind of the most bullish part. If we can flip back to the first slide just to talk through this quickly, because it's that the range from September through November, that is volatility. Like you're seeing it in both directions. And that's why that the VIX tends to stay elevated despite it being, net upside. And that's because that range, if you take any other, 2, 3, 4 month period, it's relatively tight. And that's, what is typical for volatility. Here, you have that big wide range where you go from, down to a big move higher. That's volatility. So it's interesting to see in practice.
Yeah, and what we're talking about with a potential pullback, I think, is even more interesting with the big bid in gold. Because this gold move has been insane, and it feels like it's coming from a place of we don't know how the market's going to react with this rate cut. Let's just move things into something that we trust more, like gold.
Yeah, and I think it's really being driven by rate cut expectations and how the Fed's going to handle policy, because we have the trade stuff. It's kind of calmed down a little bit.
Yeah.
You had a pretty good earnings season, so, you know, some relief from our corporate profits continuing to expand, things like that. So, I mean, the underlying economy, it still looks good, but it's how are the rate cuts going to impact inflation? How are they going to impact the labor market? So we're getting into like an inflection point or a period of uncertainty coming in here. So say we get PPI, CPI, they're actually good. They're at or under expectations. Maybe that will, you know, take some of the weight off of selling. But if it goes the other way, regardless, I still think we have to wait for the FOMC and see if that is a sell the news event. I think, I mean, personally, it's not quantitative based, but I put like a 50% chance on us selling off after that and just, you know,
Just
people
because.
taking it off.
Yeah.
You know, so that's I'm going to be trading pretty risk averse up until that event, but I still want to be watching to see if volatility expands and then putting trades on to take advantage of that once it does happen.
Do you feel that's consensus? Because like I feel like that's, you know, like people are waiting for a dip.
Yeah.
Like I feel like that's what, you know, we all kind of had that same thinking. Like we've had this great rally up, you know, rate cuts are coming. We've chopped around at 6,500. It's everybody's, you know, all the targets are getting raised. Like it feels like, you know.
Yeah, and I mean, so look at gold, like Mikey was talking about. Look at bonds. They've been moving big. The equity market hasn't really been, you know, doing that. So is it, you know, equity traders, are they holding on? Should they listen to what the gold and bond market are saying? Because gold's acting like, you know, rates are definitely going to come down. Deficits are going to go up, you know, and, you know, they're both moving like that, bonds and gold. So I think when that happens, you have to definitely be aware of, you know, why are those moving so much? And the equity market has just really done very little.
Do you think there's a similar sort of downside in gold too? Just kind of the fact that it has had its move. Like,
yeah, I think
kind
so.
of like.
Yeah, I mean, yeah, I think I'm looking for a dip buy in both gold and ZB. I'm waiting for them to come down before getting back on, because I think ultimately the trend does prevail higher.
Yeah.
And I think if you've been getting in the past couple months, you've been positioning yourself pretty well for, you know, what's happening in the future. Like I said, you know, rates coming down, deficits going up. I mean, I think it makes sense to be long those. I think at these levels, you just be strategic, wait for those pullbacks, whether it's a pullback to, you know, a round number you like, whether it's a pullback to an EMA, an SMA, whatever it is. I think you got to give yourself a little better of a position here.
Yeah, we even mentioned the other day, like, you know, this move in gold over the last 2-3 weeks from 34 to 37, about a 10% move. I mean, that's pretty much what the implied volatility expects over a year time frame. I mean, this is your, you know, that's your move.
This is the Valhalla move.
Yeah. I mean, you got most of it. It's hard to play it for more, at least in the short term.
Yeah. Yeah. And I mean, all these, this, when a big move happens like this in gold, it really affects like the supply, the demand, because ETFs that, you know, they have to store a certain percent of the physical gold to underwrite their product. You need to take all that gold in. So, I mean, all these retail investors in your IRAs, your Roths, things like that, you're buying these gold ETFs. That increases the physical demand. It's not just simply a financial price going higher that tracks a product.
Yeah. The futures are, though. The futures are paper.
Right.
So.
Interesting moves.
You bet.
For sure.
What about in silver, too? You think that, I mean, that's another, you know, rate cut sensitive product there. You look at the Russell kind of being weak today is kind of an odd situation. Does that say anything to you, or is that just rotation?
I mean, like silver, you're seeing kind of like a bull flag pattern. I think, you know, it's maybe at a little better of a consolidation over the past few days than gold, where you're expecting more to come out of it.
Yeah.
But the Russell, I mean, technically the Russell has really improved its posture. You know, since August, it's resumed this uptrend. If you draw those lines and everything, it's holding above its, you know, the SMAs and EMAs that a lot of people look at. So, you know, generally, you know, Russell is something that once it starts joining the rally from tech and stuff, it signals like the late stage of the bull market in a lot of cases, not always, but so it's something good if you want to get long and you think the rally is going to continue, but it's also a signal that we're in the later stages maybe, and that aligns with the Fed about to start cutting rates and stuff.
Yeah, you're going to the frothier stuff. You got the, you know, open doors quadrupling over, you know, a week or two. That's usually the point where like you have the kind of dispersion that we've seen in E-minis and NASDAQ type stocks and all the big name stocks where they've kind of just chopped around. They've had, you know, big single day moves, but really haven't gone anywhere. And then, you know, naturally you look for the stuff that has some volatility, which is the lower cap stuff, the IWMs, silver, maybe the, you know, open doors, that sort of stuff where you get some volatility because nothing else is really moving net. That's usually, you know, kind of the peak froth.
Yeah. And I mean, rotation today, if you're looking at only today, I mean, it changes day to day. So it's like a hard signal to look at. You say, oh, rotation's happening today to defense. You know, it's just portfolio rebalancing in long-term accounts a lot of the time.
Yeah.
I mean, you look at today, you got energy up, you got utilities up, you got materials down, you got, you know, technology really flat. So it looks like a defensive rotation day. So again, that's happening ahead of expiration, ahead of the triple witching, you know, so definitely a time to be cautious, I think. So I mean, for a trade that I'm doing here is not today, but saying that I'm waiting for some kind of pullback, you know, and it doesn't have to be as deep as 3.6% where you see that on the seasonality chart. It could be 1%, it could be 2%, it could be to a level that you're more comfortable with defending. You know, say you set your price somewhere where you give yourself enough time, it dips under it, you're not going to panic, you're going to give yourself some time to come back. Let this seasonality expansion that occurs later in October and November play out.
Yeah, 3% is 200 points.
Yeah.
So that just brings us to like the bottom of the range we've seen in the last couple of weeks, which is not out of the realm of possibility.
Which is wild to say.
Yeah.
200 points. It's a lot.
Yeah, and I mean, just so 1st September going past the past 4 years, 2024 up 2%. That's the only positive year in the past 5.
Okay.
2023 negative 4.9, 2022 negative 9.3. So big one there. That kind of maybe skews the data, you know, takes down the average.
Sure.
2021 negative 4.8, 2020 negative 3.9. So excluding last year, it's been a pretty consistent story of September, you know, making a downside move.
Question for H. Montero. If U.S. interest rates are moving lower, does that generally support U.S. equities, and how do tariffs factor into that dynamic? I think it's all priced in already. I think the market has moved in a way that suggests rate cuts. But now
we had that, but then you have, you know, J-Pow taking the stand 2 weeks ago, telling us everything we already knew, and the market's up 100.
Right. And we haven't moved since then.
Yes.
I think the market pricing in a small probability of a 50 basis point cut, which would not be good for equities. I think we see a big sell-off if they actually did that. But it would be wild if we got a 25 basis point cut and then the markets just rip higher, because it feels a lot more ominous than the last time. But vol's low.
And I mean, you got to think about it. Is the Fed right or is the market right? Only one can be right. And, you know, the market, this move in bonds, this move in gold, it's saying, you know, the rate cut's coming. And up until, you know, really a month ago, this September rate cut hasn't been a sure thing. So we're really operating on a short timeline here where the market has moved into a very confident state where it's saying, yes, we are getting a September rate cut, things like that. The Fed has, been very careful saying things like data dependent. You have to take them 1 month at a time. But again, we have risk ahead of the FOMC meeting in PPI and CPI, so this could change. I mean, you get a hot CPI print, it could bring down these rate cut bets to where the market is now. If the market has to go, wait, now it's rethinking a September cut, then you're going to see a lot of this move come out.
Yeah.
I mean, so that I think that's the risk right now is the market has moved into a slightly overconfident state versus the Fed.
That would be you think you'd see bonds back to where they were? I mean, if that happened?
I don't think not to where they were, because ultimately these cuts looks like they do have to happen.
Yeah.
With the way the labor market. So if the Fed's tackling one thing, if the labor market's falling apart but inflation's moving higher, I think they're going to go with the labor market to avoid, you get that recession, you get a lot of people without jobs. It's just, it would add a lot more political pressure than they already have on top of them, because people are going to be looking to someone to blame. The Fed's an easy entity to say, hey, you're effing up the economy.
Yeah.
So let's say the numbers tomorrow and Thursday come in hot. Do you see TLT selling off a little bit?
Yeah.
Maybe that's the trade. Maybe the trade is a put Zebra and TLT.
I don't know. You'd think the equities would be the bigger move, I would expect.
I mean, I think it has to be. I think if it's just a little bit over expectations, like 0.1%, I think you're seeing like maybe a little sell-off to begin with, and then people coming back into the market, buying the dip. I think if it's, 0.2, 0.3, 0.4 over, then it's like a red light is going off.
Yeah.
People are really, volatility would increase.
Yeah.
Not sure what the market would ultimately take from that, but it would create uncertainty. That would create price fluctuations. Why is it doing that when the bond market's made this big? Doing that when the bond market's made this big move, gold's made this big move, equities have stayed the same. There's definitely there's unaccounted variables that we're not seeing.
Yeah.
That the market is being priced into. So.
Or complacency. I mean, you've been chopping around highs like nothing's really moving. It's
and really we've been on this fueled bull market, besides for a couple of corrections for quite a while. So all this exuberance, at some point, for a healthy long-term market, it needs to come out.
It can't go up every single day. That's probably not good.
Yeah.
Maybe this is it. Maybe this is the lever we needed.
I mean, if you're thinking like, when would it be? Now is maybe a better time than any.
Yeah.
I'm not saying it's going to happen, but this time is probably, the point where you would expect it the most.
I just got filled on my SPX 0-day Iron Condor, 50% profit.
There you go. It helps when the market literally doesn't move for 2 hours. That's as good as it gets.
It's quite nice. Literally a point.
Yeah.
1 point range. But this is what we talked about.
Yeah.
Just chop until we get the decision. I think that's what's going to happen.
On
or we get a big move tomorrow if the numbers come in hot. That could be interesting.
The 1 minute chart, it looks like it's a wider range than it is, but this is just 20 points.
Yeah, it's nothing.
Which is nothing, when you look at this.
Nada.
Nice job.
Lovely. That was the last slide, I believe?
Yes.
Yeah, that was all of it.
All right, yeah. I'm gonna do this put Zebra and TLT.
So you're playing for
just a small little
contrarian tail event.
Yeah.
Hot CPI and PPI or both.
Just a small little. What's a point?
Yeah.
Between friends.
Yeah.
Small little. I mean,
it's a $300 trade. If you're in October, you could even go. You can go to September and make a super cheap one. Maybe that's what I'll do.
All right, I like it.
Yeah, $1.75 in risk for a put Zebra at 90.89 with 20 cents of extrinsic.
What could
85
go
short
wrong?
deltas. Well, what could go wrong is I lose 175 bucks. But I kind of like I'm playing for this move to happen tomorrow or Thursday.
Okay.
So I think going to September makes sense. You could even go to the weekly, but September 10 days gives you a little bit more time.
And are you guys accounting for this triple witching at all? Do you guys, on those triple and quads, do you do anything different?
You typically do see more volume, so that's, you know, and if you have volatility, that can go hand in hand.
Right.
I don't know if there's anything like trade-wise that I'm going to do differently, but I think to your point at the beginning, like there's a lot of things happening, and so there could be wider ranges. I would expect wider ranges, but you know, the last 2 days and volatility itself have kind of contradicted that.
Cool. I was just filled at $1.77 in September. Bought 2 of the 90s, sold one of the 89s. Basically removed all extrinsic. 10-day expiration, so literally just playing for tomorrow or Thursday. Move to the downside, TLT.
Beautiful.
If it's a $100 winner, take it off.
Very good.
Yeah. I'm going to post that to the follow page right now.
Cool.
And we can get to the YouTube questions here. All right, let's see.
We got a mixed bag of, which is good. That's a market. Some of the people are like, no way, it's going higher. You know, I agree. We're going lower. I like that.
I mean, you have to express a view, and your view is going to win out sometimes. Sometimes it's not.
Sometimes both win.
Yeah.
A little bit.
We'll sell off, a little rally. ETH Butterfly followed from here. It looks like the shorts are worth 6 cents, maybe worth closing in the off chance of a rally. Did you put this on?
I have a upside crab trade. I think you put the butterfly on.
Yeah. I had the 30, 40, 50 call. Yeah, I have the 30, 40, 50 butterfly in the 10 day. And I have the, I have the 35, 40, 45 in the 10 day. And I've got the 40, 50, 30 in the October, November crab cycle.
So you got a cheapie.
Yeah, so the 40s in September are worth 6 cents each. So yeah, if you wanted to just buy them back, you could. Doesn't hurt you. Sure, I'll buy them back.
Yeah, why not?
Increases my risk by 12 cents, but if there's a big ripper, it will. I just have the 2 longs on.
Are you guys doing anything on Apple for the event day or whatever it's called for them?
Is that today?
I think it's today. I think it's at I think it's in like 15 minutes or something.
Ooh, Apple down $2. It's had a huge rally. I mean, we've gone from 200, 235 here.
It usually sells off on these days, right? Because it's like the expectations for some cutting edge product are high, and then you don't get it. You get like software update,
or a slight change to the camera.
Right.
Or a change to the charging port, going back to the other one.
No, they can't go back. I think
they
that
can.
was.
And
No,
they will.
they're not going back.
Please don't go
They
back.
will go
They
back.
can't.
We have so many different cables in our house.
Yeah.
They got sued. Wasn't that like a lawsuit? That was a
I think in
whole,
Europe, they all have to be
EU.
the same charging standard.
You can't have your own enforced monopoly on your charger.
Yeah. Smart though, I mean.
I just bought back those 2 shorts for 7 cents each. So now we need an ETH ripper in the next 10 days.
All right, if we're going to get this in the next 15 minutes, should we do a 1 day? A cheapy butterfly of some sort?
I like it.
Maybe like a broken wing butterfly for 2 cents into the end of the week. Break even at 230. Yeah, we'll play that. We'll play for a small down move.
Perfect. Brett looking at Costco. 29 Ivy rank. lower IV on option strikes, maybe a good place for an IV Iron Condor. So they have earnings on the 25th, so I'm going to wait till earnings. But I don't mind the idea of an Iron Condor in October for earnings, like a 900, 1050, something like that.
I've
10
got
points
one
wide,
on
5 points
September,
wide.
so I'm with you.
There you go. But yeah, I'm gonna wait till earnings. If you're placing an Iron Condor now with earnings looming, it's not gonna move that much until earnings are done. Unless you get a huge move against you, then it will move against you. So I wait for earnings. What are we doing in ZB? Did we do anything in ZB? I did not.
At ZB, I'm waiting to get long on a pullback. So.
And Nova volatility relatively low. The IV rank at 12. It's kind of a surprise considering the move that we've had.
Yeah.
Like it's almost like.
I mean, that's not too terrible for a bond's future, but it's you'd expected maybe the high teens, low 20s to be,
into what has been probably I don't know, that's got to be over a standard deviation.
Oh yeah,
2,
I would
3 standard
think, yeah.
deviation move.
Yeah. Crazy move. But yeah, I'm short TLT. That's as close as we're gonna get to the fire. Super small though. Spot. 690, 720 strangle for October. 690, 720 with a $5,400 net credit. Stock close to the call strike. Curious at what point do you consider adjusting?
$59.
$54 net credit.
Yeah, I would probably close this and just start fresh. You're at a scratch. Buy the guts, sell the wings.
Yeah. If you buy this back for $5,500, which is basically a scratch.
Yeah.
You can adjust delta however you want, really.
Yeah, 640,
There's a lot of call speed
800.
here. Yep. Yeah, 650, 800, 640, 800, 660. You're rerouting that for a scratch. So you're basically shifting your straddle-like position into more like a strangle in November. But yeah.
You probably needed this move too.
Oh yeah.
Because I mean, into the move lower, you're probably rolling down these calls. Now you're right, in the middle of your strikes.
But yeah, it's a decent position.
Yeah.
And your resulting delta for whatever you decide is just how you want to lean. And there's no wrong answer. Nothing wrong with leaning bearish or bullish here. Just got to be comfortable with it and move on. But yeah, I think you're close to making that decision, especially with your narrow range being out of the money right now. You can make the biggest adjustment if you're moving those strikes out of the money because you're only dealing with extrinsic value right now. If there was a big rally or big sell-off, it becomes a lot harder to make the adjustment we're talking about.
Talk me out of an iron fly at 6,500 in SPX.
For today?
Today.
I can't talk you out of it because I think it's going to be great.
It's really not going to move all that much, but do I gamble $300 into the next 3 hours?
7-point move up or down that you can absorb.
Yeah.
What's the worst that could happen?
I lose $300.
Yeah.
I think we're going to play for it.
I think you have to do the 0 day. I don't like doing the 1 day
No.
into the CPI.
No.
I think that's a tough one. But tomorrow morning, if there's whatever the move is, I think tomorrow morning's 1 day Iron Condor or Iron Fly could work, or the 0 day, I should say. But if there's a huge move in either direction, I probably will not do it tomorrow. Uh-oh.
I'm in. I'm in. $7. This is a sub 50-50 shot. Because the expected move is 9 points.
Mm-hmm.
Which is silly.
It's disgusting.
Small.
And it makes sense that the move is so small today ahead of, what we're...
All this stuff that's coming up.
Yeah.
It's the pending non-move. It's just...
Yeah. We're going to let that. I'm not trading that. It's not going to move at all, probably for the next
Are you going to throw in a
2
little
hours.
GTC?
I don't think so. What would you do it at? $100?
$200. Because you're gonna have to hold it till the end of the day, anyways.
Yeah, I'll do it for $100.
All right.
So I got 705 credit. I'll do it at $6.
There you go. Is there ever a good time to go narrow on the downside wing of an out of the money put butterfly? So just like removing downside risk, or having an asymmetric butterfly?
Maybe moving the risk portion.
Yeah. Like if you get a
Closer.
rally, bringing the risk up, or if
Yeah.
you get a sell off, bringing the risk down. Yeah, you can do that for small adjustments. Especially if there's a big move and now your out of the money option's worthless and you can move it up for a couple pennies. Yeah, totally makes sense. It's all just risk management, risk adjustment. That's all it is. Let's see. What do we got? $5 wide put spread in ETH A, October 17th. Sure.
Yeah, I've got some upside delta there. What do they want to do? $5 wide put spread?
Yeah, they did a $5 wide put spread. So probably 30.25 or 32.27. Either way, somewhat of a chicken spread where you're collecting about half the width.
Mm-hmm.
Yeah, I like
could
it.
do that. Double my long delta here.
Why would a 50 basis point cut be bad for equities? Generally speaking, if you look at the history of 50 basis point cuts, it's
We're going
not
to do
great.
that for cherry picks
There you
next
go.
week. We're going to look at rate of the moves, day of, 1 week, and 30 days after the most recent rate cuts and hikes.
Yeah.
Just to give a little context of like.
Yeah. So usually 25 basis point cut is what you'll get because they want to make the smallest adjustments that they can and then see what happens after they make the adjustment, see what happens. If you're doing a 50 basis point cut, which is twice what you would normally see, that signals that they're making a catch-up cut.
Yeah.
Which signals that they read the situation wrong or the situation is moving too fast, too soon, and they're making a cut to try and offset it. But either way, I don't see how a 50 basis point cut would send the market rallying. I think that would take a lot of people out of the market that's at all-time highs with the fear of things getting out of control.
Oh yeah. Yeah, I agree.
So yeah, that's how we're looking at it, but we'll see what happens.
Mm-hmm.
Why aren't you doing UNH? Well, totally can't.
25.
I think it's going back to 600. So, but do you wait
aggressive.
for a pullback?
What about it? I mean, at 31 IV rank, maybe it's time to do like a little iron condor, something like that.
You could do a little like calendar spread up at the upper bound.
Mm-hmm.
Like the Septembers are getting juiced up today more than the Octobers from a ratio standpoint. But you could do like a 370, 360 calendar for a couple $100. If you get them continue to move higher, it'll appreciate. You'll make like $300 on that. But yeah, I think you can do a lot of different things in here, but I'm leaning bullish over being bearish. You got a little iron condor on?
Mm-hmm.
There you go.
I'm gonna try 250, see if we get filled here. I'm gonna let that sit at 250. 10 point wide, 390, 400, 300, 290. 10 points wide, either side.
How do you know when your position's too big? Do you look at buying power against Netlick? Yes. So 5% buying power against Netlick. That is the biggest that we would go. Keeping things small. Looking into placing 2 opposing zebras in TQQQ for September 19th.
TQQQ.
So just looking for a big move in either direction.
So I would probably just buy the straddle.
Yeah.
That's essentially what you're doing.
Yeah. Buying the straddle, $500. The double zebras are, let's see. Yeah, it depends on what you're doing.
It's just going to be a lot more capital.
Yeah, the double zebras are way more than a couple $100.
Yeah.
So you might be paying a lot of extrinsic value there where you might as well just buy the straddle.
Yeah.
But yeah, certainly in play.
Mm-hmm.
You think there's going to be a bigger move than implied?
Yeah.
Long cattle? You're waiting?
I'm waiting. Yeah. Yeah, I think the sell-off, some profit takings here.
What about the hogs? The
hogs
hogs are short now?
Hogs I haven't looked at in a week or two. You know, they're doing pretty good. I mean, if you were trying to play live cattle or lean hogs to the upside, I'd probably do lean hogs at this point.
Mm.
If I have 100 shares of UNH with a cost basis at 350, should I sell a 350 short call?
$1 question.
I
think if you've been waiting, this move, you just rode you got 60, 70 bucks in the last couple weeks. Probably time to consider something.
Yeah. If you're trying to exit, then sure. But you could also collar it off. You could do, in October, you could like buy the 330 put and sell the 360 call for a 95-cent credit. So you basically verticalize this trade.
Mm-hmm.
Lots you can do. But yeah, if you've been waiting for this move, great move for you. But yeah, if you're trying to get more out of it, I wouldn't sell the 350. I would sell something further out of the money. But if you're trying to exit, sure, the 350 in the weekly makes a lot of sense.
That it?
I think so.
Very nice.
Yeah.
Ended a minute early. I get to my little meeting.
You got these 12 o'clock meetings all the time.
They drive me nuts. If I was king, we would do all meetings via email. You send me an email.
That's the meeting.
And that's it.
There you go.
We used to do that.
Yeah.
Corporate.
All right. That's it for us. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. Thanks for the analysis. We've got the bearish TLT Zebra on. Looking for a hot number tomorrow or Thursday and hoping for a TLT sell-off. A little one, just a little baby. But yeah, we'll post those trades to the follow page. We got filled on a bunch of them during the hour. And yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88? So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan. I want the car.
That's right.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We are back. It's Friday, September 12th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, how goes the end of the week?
It's an interesting end. It's kind of soggy. Was kind of interesting. The consumer confidence data was god awful, but the inflation outlook didn't move. So, heyo, I guess we're all on course for a rate cut.
Inflation expectations not getting included, labor market weakness, maybe a one-off because of the Texas flooding. Either way, though, the market seems very secure in its belief that we're getting a cut in September and October and December. Odds a little bit lower than yesterday for the tail end of this year, but by and large, 3 cuts are past the point with which we would say they're priced in. So the question is, going into next week's Fed meeting, what are we thinking is going to happen? What do you do with the market when you're, well, what to expect when you're expecting rate cuts? Baby's on the mind, Delia, less than a month out for me here. So, Josh, we can turn to the slides. We need to contextualize what a cut means and if the Fed delivers or doesn't deliver. Today, there's a little bit of sogginess in the market. Ilya points out S&P basically unchanged, NASDAQ up a little bit, Russell, Dow down a little bit, bond yields up slightly, dollar up a little bit, not anything substantial. The calendar next week, though, there is one more item that would be considered high here for September 19th, so a week from today, Friday, UK retail sales. It's the only item for that Friday that's considered high on the IG calendar here. So I just cut that off. It's not worth having its own slide. But this is a week where we're going to see some modest amounts of data, Canadian inflation, US retail sales.
I guess there's also a Bank of England rate decision, Bank of Japan rate decision. I guess those things matter. But it's the FOMC next week. I mean, okay, on Tuesday, on Tuesday we'll get retail sales. That maybe tells us something or other as a pre-positioning for the Fed. But is anybody going to make a bet on that before? No, probably not. I mean, who's going to sit there on Tuesday and go, well, now that this retail sales number is out, man, am I going to lay out some capital? No. So it's the FOMC next week. That's what matters. And of course, there's a BOC rate decision and a BOE rate decision and a BOJ rate decision. Like there's no shortage of event risk next week. It's just one of them is so towering over everything else that it's almost useless to even think about them.
Well, we're getting easing, not just from the Fed next week. You mentioned the Bank of Canada as well, expected to cut rates by 25 basis points. So markets are expecting both of those cuts for what it's worth. Neither should arrive as a surprise, both in terms of pricing and in terms of the consensus forecasts by various economists that would be pulled for Bloomberg or Reuters, for example. But the Fed is really primed in here. The rate cut odds haven't moved all that much since yesterday. The CME FedWatch tool on the CME Group's website still giving us 100% chance for 20. So that's 100 for 25 and then an additional 7.5% for 50. The 50 cut has come in a little bit over the past week. I think that's notable here, right? It's gone from 11% to 7.5%, but the trade-off has been that December cut odds for 25 have gone up. A week ago, you're looking at roughly 65%. Now you're talking about 75%. The shift is occurring, right? We don't need as much up front, but likewise, 3 cuts are the base case scenario now. The Fed's telling us, so I guess the conversation is, how many are the Fed telling us for the rest of this year? How many are the Fed telling us for next year? What's the market pricing? And does the market need to see the Fed match the market to walk away from this Fed meeting not too disappointed? And the only reason why I ask, because this is a market that does not seem to care about this Fed meeting.
Are you?
Well, I mean, Ilya, let's look at the pricing here. We go out to the options chain here to contextualize this conversation. September 17th expiry, plus or minus 56 points. We're talking about a Fed meeting that's going to give us less than 1% through the end of the week, maybe 1% of a move next week. Either we are so complacent right now, or the market's convinced itself that the Fed Powell is merely a placeholder and whatever happens in the short term doesn't matter because Trump's stacking the board, and those cuts are going to be coming no matter what.
I mean, unless they build the vol next week, right? So there was obviously an eventful week this week. The markets got a piece of information via the CPI report that they wanted to see. They wanted to kind of get on the other side of it. Ultimately, the substance of the report wasn't really controversial. The numbers were exactly on the screws. the internals were a little bit less supportive for the market's wishes. I mean, we got the fastest goods inflation in 2 years, third consecutive increase, largest one since January. So it's not like the tariff inflation that the Fed is so itchy about. It's not like it isn't there. I mean, it is building in the data. The larger question, of course, isn't that. The Fed has long since said we're going to have this one-off inflation from these tariffs is going to show up in the data over time. That's what we're seeing. It's whether that inflation is sticky. And the Fed has loudly pounded its fist by way of Jay Powell on the table going, we will not allow this to happen. This will not go into expectations. I mean, it's a very loud kind of assertive thing to say. I mean, the Fed doesn't typically speak in absolutes. And here the Fed is saying, listen, no, mark our words. Not going to happen. And so that's all kinds of confidence in the idea that if they smell inflation baking into the cake, they're going to disappoint the markets on these rate cuts. Not that they're not going to cut next week. That's a foregone conclusion as far as I'm concerned. The question is, are they going to endorse all of this expansive easing? 3 cuts this year. Markets have 3 cuts next year. Fed had 75 basis points in total over this year and next as of June. Its rhetoric hasn't materially changed. It's only just set the stage for this cut, which everybody has known is coming for months. And really the only question is, how is it that the Fed is at basically half the cuts that the markets have priced in? I mean, the markets are at this point at 170 basis points this year and next together, or 130 rather. And we're looking at almost double what was the Fed's forecast as of June. And one might argue not a whole lot has changed for the Fed in terms of the things it's seen. So are they going to come out with a summary of economic projections that says, yeah, okay, so instead of 50 basis points, it'll be 75 for this year, and then it'll be 75 for next instead of 25? The markets would lose their mind. It would be September last year. The markets would go, oh my God, this is crazy. Not crazy because it's, bad necessarily. Crazy because something must really be wrong with the economy for a pivot to be this hard. I think they'd want to see a move in their direction, though. At the very least, I think they would want to see this year go up to 3 because the Fed's out of calendar. They need to, if they're going to say 3, they need to endorse it now. And the second thing is they'll need to go to at least 50 for next year. If they don't do that, that's a letdown.
Let's talk about the path here. September priced in, October at 93%, December at 86%. March is the next to cross. January. January's priced
December,
at 65,
we'll get a new SEC.
assuming December. Yeah, but assuming December gives us a cut, then the next one would be March. So that's 1 for next year. June at 73%, that's 2. And then you get your third 52% for October, but 64% for December. So the market's pricing in 3. Yeah. So 2 with a 64% chance or 65% chance for a third. I mean, that's a year plus out, right? For the Fed to tell us where the rate will be at the end of December next year and the market to get really worked up, I have a hard time crossing that bridge right now.
No, I don't think they have to do all that. I think they just have to move in the direction that the markets want them to move in. They need to do something with this SEP for next year that's more dovish than where they left it. Just to give the markets a sense like, okay, yes, we see you. We endorse your worldview. How many rate cuts it ultimately ends up being, you're right. I don't think it's consequential, nor would the Fed commit that way, nor would anybody know, including the markets. If things change, they'll change their mind too. It's the market saying, this is our worldview. If you can't move from what you said in June by some amount in this direction, then we are fundamentally at odds. We see the world differently. I think that's what the markets want to see. They want to see some kind of a nod in their direction in the S&P. And if they don't get it, then ostensibly they've misjudged the entire thing.
Ilya, the NASDAQ here is advancing to a fresh all-time higher today, 24,105 right now in the NQU5 contract. Whether or not we stick up here in the end of the session is another story, but the NASDAQ has been the leader all day long. The S&P 500, which had been near the top of the heap, is meandering, soggy, but pressing a little bit up. It's a whole 2/100ths. That's something that you care about, to the upside, 65.94. I'm personally thinking that this thing has some more room to run, Ilya. I know you and I are a little bit opposed on this from time to time, and I know you're not sitting in a significant bear position right now.
I ran away from my S&P exposure because it very clearly broke out. So I'm not going to stand in front of it. Making money, and in this case, not losing money, is infinitely more important in my mind than being right and trying to fight the market. That's not the business that we're in. Who cares about being right?
The channel that's been in place since early May, mid-May, when the US and China came to their détente in Switzerland, it's been a channel that we've been watching for a long time here. Thinking about the scope and scale of the recent consolidation, early August onwards into effectively 3 days ago, that's a range that could, if we're treating this as an equidistant measured range, which I could say double bottom down here, 1, 2, then that gives you a target closer to 66.95 in the short term, which keeps you within the channel, right? Whether or not we get there next week is another story, but the channel thus far has been a good guidepost for, at least for the S&P. The NASDAQ, it's been a bit shakier, which is why it's been removed. But even so, higher lows, higher highs, stretching up into a new high here. It's a really strong momentum market. Just beneath the surface, the names that are performing well, that need to be performing well, are performing well. I would point out that it's not quite as good as it was yesterday for breadth, where you have the equal weighted NASDAQ and the S&P a touch softer, whereas yesterday they were up 1.5% each during the session. But either way, RSP closed at a fresh all-time high yesterday. Small caps have been taking the leadership this week overall. Going into next week, I still think this is the innocent until proven guilty market, despite what my seasonals tell me. That the seasonals make me so uncertain. This is really the least comfortable I've been long, because I don't think I've made money being long stocks in September in years. So
it's a tough month historically, but it gets a lot. What's interesting is that the look back on the seasonality starts to get really important. I've had some people bring this up in the YouTube comments. So I had a little bit of a detour to go look at it. And there's no question that if you look back, let's say 20 years, September is a soggy month on average. Not every month, obviously, on average. But if you look back 10, it's a little bit different. It's not quite as uniform. You start to get closer to kind of a 50-50. Some years it's this, and other years it's something else, kind of a thing. And then if you look at August plus September and look at cumulative 2-month performance, then it gets even closer to a coin toss. So this is something of an evolution here.
Yes, before COVID, September was just like an eh.
Yes. COVID was a big signpost in the relationship for some reason.
So 2018, just for the S&P 500, you get 0.59% in September. For 2019, 1.84%. And then COVID happens. Minus 4.2 in 2020, minus 4.93 in 2021, minus 8.97 in 2022, minus 4.2% in 2023. Last year was higher by 2.71%. But like this stretch, you know, the last few years, if you were going to find a window of the year where the market had been going down, it was August through October. November's produced some significant rips. December has produced some meaningful moves to the upside. Not that that's surprising if you you're a believer in the whole Santa Claus rally nonsense, which I am. So yeah, I mean, I'm glad at least I tucked this aside, because after getting chopped up in early August, I had a really rough 2 or 3 weeks in early August, Ilya, where I was looking for vol expansion, looking for a little bit more directional weakness. We got neither. And so flipping things back over has worked out, but it's the least comfortable I've been. Nevertheless, technicals are technicals, right? You have the mathematical targets there to keep you away from trading on your emotions and just focus on the chart setup and the price action. Low volume, below 1 million contracts traded today, positive technical drift, slope of the moving averages is increasing, and VIX is below 15. Nothing has served us better in this environment than just being long the stock market right now. It's difficult to call this as a top, even if it seems really
there's no
complacent.
indication of a top here at all. There's no indication. Like, I would be obviously the first to beat my chest and say August, like mid-August to mid-September, we got all kinds of positive news and the market did not go up on it. And that is almost always a sign of deep weakness. And by the way, it works the other way around also. If the market is impregnable to bad news, that's a really strong market. Any kind of a disconnect between the obvious interpretation of the news flow, the kind of path of least resistance to evaluating the news flow, and the price action is usually a pretty good signal. And it was pretty straightforward all of August. The market didn't want to rally on good news. Not on Jackson Hole, not on this, not on that, not on NVIDIA, not on other earnings, on and on and on and on and on it went. This is a breakout this week. There's no good reason to fight this.
There is this seasonal window that does occur in September, October, sell Rosh Hashanah, buy Yom Kippur.
Yeah.
Whatever rhyme or reason that is. It does produce a downdraft in the market. And if you buy Yom Kippur through Passover, I think the other window is, the market has a positive drift. But it's September, October. So, just for me personally, right, if we're getting into a Fed meeting and the Fed meeting yields a market that says,
all the way in the spring, that's a whole lot of positive drift.
Yeah. Right. But then I'm like, okay, so then is there saying buy Passover and sell Rosh Hashanah? Like what do you do there then?
Selling Passover is not unlike basically saying sell in May and go away. It's a little bit earlier. Most years, like you're talking like April-ish, depending on where the lunar solar calendar lands you. Jewish holidays are different every year.
The sell in May thing and go away bothers me so much because we've only seen one red May over the past decade. We've only seen 3 red Junes. We've seen 0 red Julys.
I don't really know where that's from.
That's from the financial crisis. That's because we got that stupid flash crash in 2010 and the market drifted lower, and we had the Eurozone debt crisis, and it comes after Bear Stearns a few years earlier, which was in March. Yeah. Right. So like you had this series of events over the course of a few years where May, June, July was always something problematic.
Like I remember July, obviously in 08 was the time. Like if people want to go back and think like, oh, Lehman, no, forget Lehman. Mid-July for no reason, the thing just cracks and everything falls apart or starts to. So yeah, I mean, I guess. But
I mean, like when you get to 2012, if you look back over the past 5 years, you've had red May and June's 2 of those years, and then every other year you've had one of those 2 months that's deeply negative. Like May was -6% one of those years, June was -8.5%. Okay. But then you get through that window, and because this is a popular saying, and then the amount of you don't see cumulatively 1, 2, 3, 4, 5, 6. So between May, June, July over the past decade, you've seen 6 red months. So 24 of the 30 occurrences, a solid 80% of the time, you can bet on like those months being. So this is why selling mango is ridiculous. So whether or not these patterns hold, if they stick, if this is a year where you sell Rosh Hashanah, buy Yom Kippur, the point is that you're going to see some of that stuff come out. the Stock Trader Almanac, Jeffrey Hirsch likes to put it out right around now. If I get to 65.95, consider me a spook. Well, excuse me, 66.95. Consider me spooked going into October. We'll have hit the upside target. I will have had my druthers here. I will be more than comfortable with getting out and potentially putting some capital on the sidelines. In terms of position management, though, Ilya, the one thing that's kind of sticking in my craw here today is that I'm still sitting at 18 days to expiration of this 6,700, 6,750 call spread, which, having been purchased so deep out of the money a while back, it is making money, right? I could sell it here even though it's still out of the money, and I can make a profit on it by about $2 wide.
Mm-hmm. Yeah.
The question is whether or not I still hold on to it. And the MES position has 7 days to expiration. So I think I need to roll that into MEZ. Outside of that, like those are really my only considerations in equities. I'd like to get some exposure to the Russell here on a little bit more of a pullback, which I keep missing. That kind of bothers me, but we do have the research.
I'm kind of annoyed with myself on the Russell, because I've been staying aside, basically saying, okay, there's not a selling setup here, but if there is a big sell off, then it's a correlation one kind of a thing, and everything will fall together. But all the way to sort of the latter part of August, the reason I didn't sell Russell is because it looked like it was breaking out in the opposite direction. And what I realized I should have done was just hedged my other exposure on the long side here. And then this would be even less painful than it ended up being. Thank you, bond market. If the currency market bailed me out of my fighting of the stock market in the first 6 months of the year, then the bond market has bailed me out of fighting it now. So far, so good. I remain unrepentant because these other assets keep covering my downside and then some. But what I really should have been doing was being long the Russell. So I missed that boat as well, annoyingly.
Taking a look at this NASDAQ, I did see a chap's back up, by the way. It had been down there for a hot minute. Just looking at the recent range that the NASDAQ's been in, if we are starting to break out here, upside targets extend north of 25K, which at 24,000, you're talking about it's not a small move, Ilya, another 4%.
No.
But that's what a lot of folks are saying. People are saying out there, Ilya, S&P 500 price target 7,000 end of this year. Bank of America, their year end, or excuse me, September 2027, 99.14 was the target from, who's it, Hartnett, their analyst over there. But that seems ridiculous. You're just looking at like 23, 24% annualized returns over the next, 24 months. We've seen the market do that. It's done that the last few years, in fact. So you're just basically saying the market's going to continue along its current path. Ahistoric for what it's worth, right? Post World War II, stock market's returning, 8%, 9% on average. Over the past post-global financial crisis era, it's closer to 14%. But still, 23% several years in a row. That to me seems like a reach. So asking for 4% between now and, say, end of November, it's a lot more reasonable than a lot more reasonable than some of the calls going around right now.
Yeah. I mean, you look at this here and you go, okay, well, if this breaks out, there's a very simple kind of extrapolate the range above the current range in the same width. That's your guesstimate. It looks like it wants this break. We'll see if it actually manages it today. It's trying. There's still enough hours in the day, and this is not the world's most convincing push, so it might fade off, especially with the Fed next week and the weekend in front of us. But it's making a valiant attempt here. Now, I suppose the question here is, if you're not long already, and I'm not, obviously. In fact, I'm still a little short as we test this high. If you're going to see a breakout here, do you do the Dylan Radigan? You come back on Monday, this thing is closed above the high. And then you start to get yourself into all kinds of thinking. You start to go, well, the Fed, blah, 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 blah. Or do you just blindly go, you know what, we got to break out above the high, Fed, no Fed, I'm long. Is that how you're thinking about this? Sound.
If I'm in someone like Dylan's shoes, and it's like, okay, well, we just saw a new high. Time to get back on the boat if I haven't been on it. And quite frankly, that's been the best thing to do. If we push up to a new high, get into the market long until we break the prior local swing low. And if you've been doing that, right, since the low that we had here in April, so you get back in, you miss the exact low, but you start getting right around 19.5, right? You want to get in on another breakout, your support becomes around 19.8.
Work was the NFP report where it seemed to crack the trend, but then it established a new range.
Yeah, it got close, but we never got below the highs that we had here pre-tariff nonsense, right? We really held up.
Yeah, it didn't quite stick it, but that was probably the most convincing. Like, okay, the series of higher highs and higher lows is broken. Maybe it's gonna make a run here. What's funny is that this was the Mag 6 minus Nvidia earnings, so and the markets faded them hard. But that was a resloping, as it turned out.
A resloping, yes, that's a good way to put it. So we have a new channel that's in play here. We'll get rid of some of these to just clean this up. But right now, this is kind of what the NASDAQ's working with.
Also, patent pending on resloping. I've just invented that right now.
There you go. I think we can move on from stocks here. But one final quick note. Talk about breadth being bad and the equal weights being in. The equal weights being in is a sign that the breadth is not good. We track 25 sector ETFs here on Futures Power Hour. I see 1, 2, 3, 4, 5, 6 in the green. XLY, XLU, SMH, KBE, KRE, and XLK. And XLK is only up by 0.01%. So 19 are down, led by telecom, home builders, retail, home construction. This is a Mag 7 day. That's really what we're talking about here, up 1.4%. But the generals, Ilya, they always get shot last. So if the generals are still leading the charge right now, again, do we want to call a top on a market on a Friday when we have this low volume, low volatility, positive technical drift? No. So
no.
Hang on for now. If you're in my shoes, bonds are giving back some gains though. Maybe that's good news for the stock market, right? We don't want bond yields to go too low too quickly.
Man, did I exit at the right time yesterday. I was 8 days to expiry after sitting on this thing for almost 80 days. It took the bond market a long time. We've been talking about, I've been sort of talking myself into this mantra like it's slow, but it's the bond market and it's the 30-year. It's supposed to be slow. Just let it go. It's making progress. And then, of course, at the tail end, it ripped. I got out yesterday as I was covering my stock positions, basically saying, okay, well, if they're gonna interpret this CPI as all clear, well, both of these positions need to come off because they're essentially both done. The narrative on both of them is sort of spent. And so, and I was close to expiry or close enough. So I took them both off. Obviously, I didn't consult my crystal ball about there being a pullback today, but fortuitous as it turned out.
It did pull back. Was there data released today that pointed to why this would have occurred? I suppose we could say maybe it's the Michigan Confidence Report.
Which was awful.
Which was awful, but bonds were coming off all day long, and that comes out at what, 10 a.m. Eastern time?
Yeah.
The market didn't do anything at 10 a.m. Eastern time. Traded sideways for the next 30 minutes. So I don't know if we could point to that being the source of a consternation. We do trade below the lows that we had yesterday around CPI, however. And that may be the more important point in terms of saying like maybe that we've pricked the near-term upside.
Yeah.
If you've been trading bonds alongside the idea that they are a proxy for the rate cut odds, then yesterday we were at 90% plus for December. how much more room do we have to run up there? And granted, ZN and ZB are not the vehicles with which you speculate on Fed cuts. That'd be ZT. But even something for like ZT today, we've seen that yields have come back to where they were effectively right before the CPI report on the 2 side of things. So, Elio, whether or not this means the end of the bond rally is over is one thing, but in terms of volatility and what it's doing to make this a more appealing market than changing tact, 7.8 IVR is nada, zilch.
No.
So as far as I'm concerned, I like bonds long because it's something good to have in the pocket if you're going to be an equity bull, and the equity market hinging on whether or not we're getting cuts for good reasons or bad. If they're bad, bonds rally. But other than that, right now, you got to pull back into your 1 week moving averages in ZB, in ZN. ZN's a little bit softer. You could see, maybe a case for next week ahead of the Fed. There's a little bit of a flush back down towards like 112.5.
Yeah. Yeah. I mean, I think you can start to sniff around this if it comes off these levels one way or another. Like either it breaks this range and you get a reset of risk reward, essentially. I don't think you trade this on the downside. I mean, the trend is very clearly pointed in a direction. I have no interest in being a seller here whatsoever. Not yet. But I'm not interested in chasing this higher right here, right now. I am generally a bond bull. It served me. The trend is going in the right direction. I think ultimately there's a lot more to go, especially at the long end of the curve, because I think if the Fed disappoints some of the market's headier prognostications on rate cuts, which I think they will, the response, I think, ends up being, okay, well, let's just drive up bonds at the long end because then rate cuts just move downwind. The Fed is still reluctant, keep pushing it down. And if that's where this goes, I think things like ZB and ZN rally. But we're not there yet. And until you get something cleaner cut, which, by the way, ahead of the Fed, yields might rebound. Bonds might pull back just on general repositioning for the event risk. So if you're going to get even that kind of a mechanical discount, just buy there. So I think standing aside here is what makes the most sense for now.
Not today or yesterday, but on Wednesday, we were more than 0.9% above our 1 month moving average in notes. We were there on Monday, the 8th as well. I bring that up because the last time that we were more than 0.9% above our 1 month moving average in notes, we have to go to the 4th of August. So we'll drop a line right there. We'll take another one. Another time we were more than 1% above. We have to go to the end of June. We find ourselves here. Why do I care about these markers, Ilya? Because when we get a little bit too far removed from our 1 month moving average in recent months, the market tends to correct back towards it. And we hit that threshold earlier this week where we've seen prior corrections occur. So if notes want to trade heavy here for a little while, as they've done in recent months, this is kind of the point where the market says, all right, path of least resistance is still up, 2 step forward. This is the 1 step backwards a little bit. And you get down towards 112 and 22 ticks. You see how the market responds. If it's anything like we've seen over the past few weeks, that's been a catch point on pullbacks. And it becomes a viable place to look for something a little bit directional long, in my view, only because it's a 1.5 IVR. So it's not the most interesting thing in the world with which to sell vol. But then that weekly chart, when we go back to where we were post-COVID, the weekly chart's a little bit softer here. This is a multi-year downtrend break.
Mm-hmm.
And I want to be long if this thing really is finally getting going. And where is the support on that breakout point? Well, right around 112.5, where we saw highs carved out in April, in June, in July and August. So patience. This could be a long-term being bullish on notes and bonds. It might be frustrating. It's been frustrating since we first started trading around a long-term bottoming effort, but directionally playing this to the upside has been the better bet. or at least playing against further significant losses has been the better bet.
Yeah. Yeah. I mean, I think very clearly here, there is room for bonds to keep going, but perhaps this is not the place where you get back on the boat. And if anything, my experience from having this trade on the last go around was you want to give this lots of duration because these are bonds. And what happened in April is not normal. They don't move like that. They take a while. And so give yourself lots and lots of time for bonds to kind of find their way.
ZB, same thing. This week, we cleared out the 116.5 level.
Yeah.
Started to break out, started to break that downtrend from the COVID highs. Meaningful turns. You know who sniffed that out, though? The metals.
Yeah.
Whose rally continues here. Yeah.
My long exposure continues.
Glad I got back on board. Let me tell you that. Felt a lot better. East Gold's not up a lot right now, but you know what? The characteristic of this market since August 22nd has been one in which it's riding up that 1 week moving average, and these
as soon as that range top broke, I was like, oh, I guess we're gonna do it again.
Just wants to run. Yesterday with that wick forming, I got back into a long position, a little bit more measured, 37.25, 37.50 call spread, just because the triangle measurement that I have on a conservative basis calls for a target around 37.46. I know we can ultimately find pathways to higher targets here for gold as we build up and start to extend. And ultimately, maybe this is something that's, as I've seen a lot of aggressive commentators point out, maybe we're going to 3,900 here as part of this breakout in our flag pull and final extension before pivot into the breakout. But long gold, long silver here, Ilya.
If gravity mattered for that flag pull, it would fall over.
Staying long against 41 this week has been a pretty decent call.
Yes.
We break to the top side of the range, and then the pullback that we had recently this morning, where does it put us? Former highs. Turn support and we bounce.
I'm sniffing around this today.
You should just get in. The water is more than warm at this point.
I'm very much inclined. I haven't priced it up yet to my liking, but I've been tinkering with some structures all morning. I might join you here. This now looks pretty clean.
It looks clean. Whether or not we get the extension we're hoping for, we could use a simple Fibonacci extension here from the toolbar. We'll go to the low there, high here, back to the most recent swing low. There's your target that extends up towards 46. That's one interpretation. The other interpretation is simply that this is a range that's 41 to about 42.40. Okay, so that gives you a 43.80 near side target. Either way, though, the technicals are pointing to, potential upside drift right now in the market, and that's the most important thing. So silver for us, I think we're talking about a position that's still 46 DTE here. Yeah, 46 DTE. These were purchased a while back to give enough time for digestion. So rolling these forward at some point is going to be necessary as we're getting to the short strike side of the call spread. But being judicious about it and finding strikes where there's enough liquidity, more importantly, Ilya, right? Like kicking this out to 44, 45 feasible. There's enough open interest at these strikes, can recycle some of the profits from this trade, move it into the next. That way, I don't face the uncertain situation where ultimately we just run down the clock. But I just need this to stay above 42. So I have time to make any decisions. This has worked out very neatly. Volatility is back on the up and up today, which is the most important observation. Gold and silver, they really, really, really like when vol stops falling. Vol and silver is now going up. In gold, it's been flattening out, and we're flagging up here. So, pick your side. I know which side I'm on, Ilya, and hopefully I can get more of you into the silver bucket too.
Oh, I'm very much inclined. I just think it starts becoming a matter of where. Actually, now that I'm looking at it. You can get a pretty nice call vertical here. Just the risk reward starts getting pretty juicy. I might just put this on as we're talking here.
and this is why I like doing the first off. If I'm going to do the options, it's going to, well, if I'm going to do the futures, it's going to be the futures options, because buying a simple future here, the buying power is enormous. If you're looking at, I think, a simple $25,000 account, even SIL.
Oh,
for those, there you go. Welcome to the party, pal. We have $3,300 in buying power for SIL. So SLV, just guess this is a future show, and I say this caveat every time we get to this section. But the goal here is to be able to express your view in the most cost-effective manner that provides you the easiest opportunity to operate in the market. And so just the shorthand is don't Hotel California yourself. You always look to the volume in the open interest here. And in SIZ5, a lot of these strikes, even at 46 days, you're not seeing a ton of trading volume here today. One strike traded at the 45 and a quarter, or one contract traded at the 45 and a quarter strike. But you go to SLV and there's equivalent, we'll go to 42 days, for example, you're going to see way more trading volume and open interest sitting around here. I just think that people need to be flexible about how they express their views. Don't get wed to one market, of course. You know, I like my futures, Ilya, because they trade at 24.5 or 23.5, but maybe that's changing soon for some other things that we'll not discuss just quite yet, but maybe it's changing soon. So do you have any strong feelings about gold or silver heading into next week's Fed meeting? Are they particularly exposed right now? Should we be worried if we're long gold and silver, both of them? Should we hedge off some of this risk?
I mean, I think you should be more worried, and I say this having just put on a silver position. I think you should be worried more about silver than gold. Gold has really had a different kind of run-up most recently than anything having immediately to do with Fed expectations. It moved earlier and hasn't really done much vis-a-vis the kind of event risk that got stocks excited this week, that gave the dollar some pushback this week. Gold's been kind of digesting. It seems to be thinking about other things. Maybe it's thinking about reserve diversification after India decided that they will want gold more than they do U.S. Treasuries. I think that's kind of a red herring of a story, but almost like Modi went to Xi Jinping's shindig as if to say, yeah, take pictures of me. Let them put 50% tariff on us. I'll show them. I'll stand around here with all these people that don't like them. Now what? I'm not sure he's going to get the kind of attentive audience at the White House that he thinks that kind of a stunt is going to produce. I don't think anybody is reading it quite so granularly, though they should. But it seems like gold is kind of doing its own thing. It's been consolidating all week this week. PPI, CPI, whatever. And obviously other markets have very much taken those things on board. I mean, S&P most obviously. And so I don't think there's much to worry about vis-a-vis gold unless the Fed really pulls the rug. But because silver has some risk-on element in it, if it turns out that the stock market doesn't like how the Fed forecasts, that's going to be vulnerable.
It has been a week of consolidation here.
I'll take that bet, though. I mean,
yeah, corrections take place in both time and price. They didn't. I was beating on this earlier this week, the Nasdaq, Elliot, right? Like we lost momentum, but we didn't give anything up. Yeah. So a precursor potentially to the market getting reloaded, basically. It's like eating at a buffet. You didn't leave. You're just digesting. So gold here, silver here, short term, you could see the momentum, right? Momentum basically crashes out over the lower term time frames, and yet price doesn't go anywhere. Not exactly a sign of a top being formed. Volatility bouncing back. I think the chips have to remain there. So again, the new position that was put on yesterday, it's on the follow page, 46 days, 37.50, 37.75. Let's just keep running this thing up. It's been working and there's no reason to fix what's not broken.
Yeah.
Even if it didn't work for a few months there. Tough May, June, and July, being long gold.
Yeah, I mean, it hasn't been the easiest, but I've, as you know, I took the approach of just selling premium around the range extremes in whatever direction was the opposite of what the extreme was. Just looking to basically suck out as much vol as I could inside of that range. It worked pretty well, but as soon as it broke out, I just sold a bunch of put spreads and got outright.
Well, that was the better play. You were maintaining your long delta view, but you structured it in a more efficacious manner than I did. You know what's working though here still though, Ilya, as we switch our attention to the energy markets? Directional neutrality here. It's boring. It's not the most exciting thing. You look at crude, you go, oh, you haven't done anything in weeks, but you know what? That's what we're playing for. Why
you've structured this beautifully. I've been completely on the sidelines waiting for this thing to have a directional move where you've had the right bet all along. Just suck the ball out.
Ilya, the Ayatollah was putting videos of the Statue of Liberty being hit by missiles as part of Iranian state television back in June. I live in New York. It didn't happen. That to me was just, they're trying to save face and say this thing's over. Geopolitics is dead for a little while. And we've seen attempts to get it back out.
Been basically defanged in a pretty significant way and probably for a while.
Perhaps. Either way, though, even Russia, Ukraine. Ukraine had drones in Poland this week. Gosh, we're not even going to be able to squeeze out a rally here.
That's right. NATO is scrambling today because they've been shooting Russian drones down over Poland. You're right. Which one might say could be an Article 5 kind of a thing.
But also, so is Belarus. Belarus was shooting down Russian drones. So when I heard Trump say maybe it was a mistake, but it's but we do have Western media outlets reporting Belarus was shooting down drones too. So maybe that doesn't excuse it.
Was a mistake?
No offense to your people, but we're not.
Oh no, I mean, listen, my favorite.
They didn't send their best and brightest.
No. My favorite saying from the late great former Prime Minister of Russia, Viktor Chernomyrdin, is, and I think this is a phrase, he has many, but this is a phrase that sort of captures really the essence of the Russian nation state, going all the way back to Ivan the Terrible. We tried to do it better, and it turned out as usual.
Is it a sign that oil? I mean, I want to say that oil is not paying attention to geopolitics, but then I look at that 16.8 IVR. I see it's continuing to come in. I'm seeing a market that's not responding to any of these headlines.
Yeah.
If the Fed is cutting, we're thinking about what to expect when you're expecting cuts. If we know these Feds are cutting, albeit for potentially bad reasons, what is the bull case here for oil in the short term? Why should we be optimistic at any directional move into the upside whatsoever and not use any opportunity just to fade rallies, which, quite frankly, if you've done that in recent months, you might be doing better than someone who's simply been trading it sideways.
Yeah. Yeah, I mean, I don't think that there is any reason to assume anything here directionally, and that's why I've been out. Because you could make the argument okay, look, the Fed has gotten spooked by the labor market. It's obviously not envisioning inflation being that much of an issue because we're pinned, let's say, a good percentage point above the Fed's target, and they're cutting. So obviously they don't think that this inflation is going to stick. I mean, clearly. Or else they would be behaving otherwise. And so you could make the argument okay, this is not good news for the business cycle. Energy is the business cycle type of asset. It might fall off here. Okay, well, maybe. I'm sympathetic to that idea, but you got to let the break occur. On the top side, you're getting progressively squeezed since basically mid-June in the Israel-Iran kerfuffle, with lower and lower and lower highs. Now, you're not really setting aggressively lower lows, but you seem to be getting hemmed into some kind of a wedge. And maybe then you really should be looking for this thing to coil up into an upside break. But you can let that happen. There's really no need to try and guess. So if I was going to be directional, I'd want this thing to actually make up its mind. Because then it's going to run. And then there's all kinds of room.
Natural gas is up a little bit here today, making me feel a little less bad about selling a put spread 2 days ago. We're not quite at the point where this is a tap out for me again.
It does
because we're looking
ugly though.
It's just knock it off.
I mean, this looks like a downtrend that had a correction and now is resuming.
Yeah, tell me about it. The monthly low is 2.869. Currently in on that short put spread at the 2.829.
See that feeling? That's how the S&P looked to me yesterday. I'm like, oh, you mother.
You know, we had this test and a lot of times recently since May, but for a brief 4-day reprieve outside of it in June. This 50-day moving average has been pretty staunch resistance, and we did rally into there last week before finally, or should I say earlier this week on Monday, before finally rolling over. So yeah, path of least resistance, top left to bottom right. That's not an uptrend.
No.
But I do see that the September 2nd swing low occurs right where we tried to pivot earlier at the midpoint of August here.
Yes.
So if we hold that, I'm good on this. This is not a trade I would put on today. Quite frankly, it's not a trade. I don't.
Wait, so
what
keeps you from just saying, you know what, I don't want to stand in front of this thing and just getting out?
Because I'm down like $30. It's nothing.
Yeah.
I'm not going to chicken out over $30.
No, I see that. You're real close to the last swing low. If it even comes in to test that swing low, how much are you down? Fine. Essentially, you can say that your line in the sand is a break of the August swing low, and that's a perfectly acceptable amount of risk. Okay, that makes sense.
Yeah, it's. I'm looking at it right now.
It's
Natural gas is
annoying,
off
but timing
$45.
with natural gas is awful, notoriously. And so, yeah, I mean, that makes sense.
It's still 46 days. There's nothing really to do there. There's more to do in the currency side of this, though, and that's actually where I want to go because we need to make some changes and make some adjustments here in the final few minutes of the show. The dollar may not be done yet is not something I want to ultimately dismiss. But some of these
I reloaded
positions,
on my longs and rolled from the September futures into December's today. I did not roll the Canadian dollar, so that one I took a small gain. Thank you, Canadian dollar. It seems to be kind of getting stuck here, so I haven't reloaded that one yet, but I definitely reloaded short euro and short pound.
So the pound
and I'm still short yen because it hasn't gone anywhere.
The
That's
pound
in
needs
spot, so I haven't had to reload it.
No, the pound needs to go for me personally, and I need to see why that's happening. But the pound's got to go because we're at 21 DTE. The Canadian dollar needs to be rolled forward, and the Canadian dollar still has a 45.3 IVR. The euro is going to come off the board today for a $75 loss. But thinking about restructuring this, I'm on the fence. These are long lower wicks against that 1 month here, Ilya, as the day's gone on, as this week has gone on. And this is trying to break a downtrend. I'm not convinced the dollar is going to go through another big wave of weakness. I mean, U.S. Japanese yield spreads are at their lowest level. The 2-year yield spreads at their lowest level since like May 22 this week. And the yen is not exactly surging right now, even if all of that positioning is being cleared out. So rate cut odds, if we're hitting our peak with them, how much more dollar weakness can be priced in? I'm just not convinced. But the Canadian dollar to me is still my favorite one to get short. We moved over to the Z5 contract here, but looking at the U5 where the technicals are, you can still get in the 73.5, 74 short call spread side at 56 days. And you're looking at, it's going away now, but it's going to be close to 1 to 4. Even pulling in there or trading above the recent highs near 73. You can get something close to 1 to 3, 1 to 2 risk to reward with a better than a coin flip percent probability of profit. So I'm comfortable taking those shots in the dollar, especially if it's going to be an equity bull. Because if the dollar is going to rip to the upside, then you can imagine that it's going to be some liquidity-driven thing that hurts stocks.
Yeah, I mean, I just look at the dollar and I go, for all this speculating on Fed rate cuts, this thing hasn't made a new low since July. Meanwhile, the outlook on Fed policy has become more and more and more and more and more dovish. This thing doesn't want to fall. It seems to be basing. Both the euro and the pound are at very attractive levels for that view. They're sort of near the top of their recent range. So for me, it was a no-brainer to reload short those. The Canadian dollar has been exceedingly weak, and so it's near the bottom of its recent range. And so I had this thing short. It worked. Now it's at this bottom. I'm going to let it break the range before I sell it again. But my bias is obviously to be long dollars here.
Monday's calendar is fairly light, not much out of the U.S. We're in the Fed's communication blackout window. Next week, we have more treasury auctions to discuss. But this week, we had 3s, 10s, 30s. 10s and 30s were good. But you know what, Ilya? You and I are done here for today. We're not back with overtime because it's not Monday through Thursday. So I hope everyone has a good rest of their trading week. Of course, more Tasty Live will be on next. So grab some coffee, grab a quick snack. Dr. J's here with From Theory to Practice up next on Tasty Live. See you at First Call on Sunday.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle. Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
This is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Friday edition of what it is that we are trying to do, man. I appreciate you guys. I appreciate you guys so much for being here, being with us, and being part of the team, because it is only because of you all that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube right now, because you can join the conversation and join the discussion. And of course, you can celebrate if you're a bull and commiserate if you're a bear for now the 48th consecutive day. But it is a good time had by most, regardless of which side of the trade that you might be on. So Josh, bring us into the market today. man, just another day, just another little deal to the upside. Even the S&P is up 4 on the day. You've got the risk-free instrument, also known as the NASDAQ futures, which is an extremely, extremely high-risk product if you are brand new. That is one of my very mediocre attempts at internet sarcasm. But nevertheless, we know on the streets, this is the risk-free instrument. Up 97 on the day. And then you've got the boomers down 218. You've got the Russell 2000 futures index down 16 on the day. And yeah, bonds looking a little weak. Notes looking a little weak. UB40 looking a little weak. You got oil up 20 cents. You got the shifties, right? Gold up 13. I'm sure that the Hunt brothers are doing pretty good too. Yeah, silver up. Man, silver up again. 68 cents. That's crazy, man. That's crazy, crazy, crazy. I'm pretty sure this morning, maybe in like the overnight session or like the wee hours of the morning, it actually poked its head up above 43. That's just some crazy stuff, man. That is some crazy, crazy stuff. Then you've got the British pound is down, the euro is down, volatility futures down 20 cents. And then spot volatility as measured by the VIX, probably around 0 now. You've got spot volatility down 14 cents, down to 14 and a half, guys. It's close, man. We are not too far off from a 13 handle on the VIX. So if you thought that it could get worse, oh, it certainly can. It can get a whole lot worse from a volatility standpoint, from a wanting to sell premium, elevated volatility, elevated implied volatility rank, elevated IV index, whatever you might be looking at. We tend to prefer IV rank as kind of being the lead dog in that that competition, if you will. But man, it can get a whole lot worse. Now, let's go ahead and let's take inventory of where we're at, right? The seasonality bros, they may still bail us out. Like the seasonality bros and bro sets, they have assured me, just like they've assured you on the internet, that man, it's September, it's October, like Volmageddon, it's minutes away at this point. Like it's still probably going to happen today before the close, according to them. And so I'm like, man, we can still hang our head on something. Like this isn't the summer lulls. This isn't like the whole like Memorial Day kind of July, 4th of July deal where the market just kind of creeps higher because nobody's around. Like there are no traders. They're all kind of off for the summer, kind of like we all did when we were back in college, right? But now it's, the semester's back in session. It's fall. Like, where's my Volmageddon? And I don't need much, man. Can you give me a 17? Like, I don't need 47. Like, I don't need like 77, like COVID crash type stuff. I don't need that. Can a brother get 17 and a half? Like, can I just get a little something to the upside? I don't know, man. So far, the seasonality bros have struck out indeed. But it's only September 12th today, so we still got plenty of time. We've got the rest of this month and then the rest of October. And then, right after the seasonality bros, have their say, you got the Santa Claus rally bros that are right behind them. Right? Obviously, you've got the Thanksgiving rally bros that are right behind the seasonality bros. But then you've got the Santa Claus rally bros that are right behind the Thanksgiving rally bros. And of course, what are we going to do? We're going to front run all this stuff, man. Like, we should be trading the Thanksgiving rally today. And that's actually probably what's happening. Right? This is all the Tom Lee, groupies and all the, I was going to say Bill Ackman, but he's on the short side, I think, right? So I think it's just Tom Lee, actually. He's like the only one that's kind of the pillar of bullishness. Oh, Jeremy Siegel, that would be another one. And I'm not throwing shade at these guys. Like, these guys are obviously brilliant guys, but they're perma bulls. They're perma bulls, a fixture on the long side. And yeah, so anyway, there's a quick little 3 minutes on the soapbox that I can assure you that's not going to help you become a better trader, but it's gone. It's over with. And so let's go ahead and I want to take a look at the portfolio here. Man, basically everything that could go wrong has gone wrong. Like basically everything that could go against us has essentially gone against us. I mean, Adobe, like I thought we had Adobe dead to rights last night. Like it looked like the initial reaction was good, and then it just completely reversed course. I didn't catch if it reversed last night or if it reversed this morning, but it has indeed reversed nonetheless. And so Adobe is going to be a full loser. SPX has not come back. Even Starbucks is getting hit. Best Buy is getting hit. Chipotle is getting hit. So we're going to talk about all that and more in the coming minutes here. But man, I see you guys in the chat and I appreciate you guys. I appreciate you guys so much. Sam L's in the house, man. Brian Dowdy's in the house. Brian Dowdy. I got Brian Dowdy written down for Adobe. So you took me down again? So you hit me hard with Lululemon and then you're following it up with an Adobe trade? Now I know you didn't tell me the direction. Like I know you kind of let me figure it out on my own, which don't do that. I can't do that, man. Like if you're going to give it to me, like I'm going to keep the receipts anyway, you got to tell me what to do. Because if left to my own devices, man, it just does not end well for me. And so, Brian, next time, man, I need the exact strategy. I need the strike selection. I need everything, my man. And so I appreciate you, though. I appreciate you for being here. Let's see. Kimberly Thomas in the house. Margin Walker's in the house. Man, Cynthia's in the house. What's going on there, Cynthia? I appreciate you so much. I'm going to surprise and delight somebody kind of early because Cynthia says, "What's up, Dr. Jim? Happy Friday. When is the crash coming?" I'll tell you what, Cynthia. It's close. It's got to be close. I'm going to say it's any time between now and the next 18 to 24 months, right? So that gives you a fairly narrow window to work with. Like sometime between like the next instant, like now. Okay, it didn't happen now. The next 18 to 24 months, I think it's going to happen. And by I think it's going to happen, I mean, we might get a 200, maybe 300 point down day in the NASDAQ. Of course, it'll be temporary. So you've got to be around when it happens. Otherwise, if you blink, you're going to miss it. It's kind of like iPod Touch. Is iPod Touch here? I mean, I know the iPod Touches were gone in like 2009, but is iPod Touch here with his Event Horizon call? He better be here because that thing was a flash in the pan. You want to talk about something that's temporary. You want to talk about something that is short-lived. Man, that Event Horizon call by iPod Touch, man, that was like a buys and a tries pump. Like, yeah, it's there. Oh, there he is. I see him. I see iPod Touch in the house. He says, "I told you to go inverse Event Horizon." Oh, so now we're doing so now we're doing inverse the Event Horizons. All right, okay, that's good. That's well done. That's well done. I mean, we're doing inverse Dr. Jim plays. I mean, I'm doing inverse Dr. Jim plays. I mean, if I can't beat him, join him. If that strategy doesn't work, I don't know what to do. Like, hopefully we can figure it out next week. Because, I mean, next week on Wednesday, guys, I've been trading a long time, and I have never seen a more important FOMC print than the one that's coming down the chutes on Wednesday. So you better get ready this weekend. And according to iPod Touch, I mean, we got to fade the Event Horizon now. We gotta fade the fade. And, oh, you got me there, man. It's pretty good stuff. But all right, let's go in here. Let's try to get something worthwhile done today. I know it's a Friday and all that kind of stuff. And I appreciate you guys, man. Rex Kramer's in the house. Man, look at John Cummington in the house. Wanderer's even here. Wow, it's amazing. Andrea's here. Man, look at you guys. Ash Finn in the house. Man, look at you guys. Appreciate you guys. All right, so what I want to do today is, I mean, there's not too much to do. There's nothing that really requires our attention. There's nothing that really requires any activity on our part. I don't think. I mean, I kind of looked at this earlier today in preparation for the show, and I didn't really see anything that jumped out at me in terms of, all right, I should make sure that I adjust X, or I should make sure that I adjust Y. I mean, we'll kind of comb the streets, and I'll kind of point out, the different things that might be happening in the strategies. But yeah, Adobe. Yeah, when did they take us down? Because last night, like on the number, it was good, right? Let me see here. Let me do I'll just do a 5-minute chart. It's fine. So if you go back to the evening, yeah, like right here. So there you go. Yeah, wow. I mean, this is what I'm saying. Like, look at this, man. It's so funny. I don't know what the numbers were, good, bad, indifferent. I have no idea. But it's so funny that you see the initial move. I mean, that was quite significant, right? I mean, it was up to almost 385, which I think that was like the short strike of our butterfly. We could go back and check if we want to, but then it fizzled out in the evening hours. It stayed pretty weak into the morning, and then on the open they just squashed them. They squashed them, and they have since kept them down in a squashed state. And so Adobe, it's man, we have really been missing the mark on these butterflies. And that's the thing about the butterflies, right? I mean, it's all relative. It's all about position sizing. But it's like, man, if you string together 4, 5, 6, 7 losers in a row, which I think we've been able to do with these butterflies, you're at 1 to 1.5% per butterfly. That's pretty significant. I mean, that can be up to like what, a 10% haircut that you would take. And I mean, at this point, I could use any type of haircut. I'm aware of that. But a 10% haircut on a portfolio, that's kind of significant. Now, a 10% haircut on me personally, you guys may not even know the difference. But still, it's like, man, you string together 5, 6, 7 in a row. Whew, man, that's some tough sledding. So hopefully, we'll kind of see some greener pastures here in the near future. I think we're just in a little bit of a cold patch with the expecting the butterflies. But that's the thing about that strategy. You can get super cold, but then all of a sudden you sink 1 or 2 and you're right back in the game. Like you sink 1 or 2 and you're right back, kind of back to square one when it comes to, portfolio P&L, different things that you might be trying to accomplish, which I think portfolio P&Ls is kind of the main thing that we're all trying to accomplish. But Adobe, not looking too good. Yeah, Best Buy getting smashed to pieces. Chipotle smashed to pieces. That's amazing, man. Like for real, like did something happen to Chipotle? I mean, this is such a big drop. Like this is such a big sustained drop. if you guys remember, this was only what, a year ago, maybe 2 years ago. Chipotle was like a $2,000 stock. And then they did like a million for one split and they took it down to like 50, 60 bucks. Well, now all of a sudden it's $38 a share. That's some really nutty stuff. If you look at this, let me do a daily chart. Let's go back. Yeah, we can just do 3 months. I mean, look at this, man. That's really crazy. This thing was up to almost 60 up here. It looks like 55, 57, whatever. And then obviously this is going to be your earnings call, that huge gap. And then man, they just sent him lower. And this is something I've mentioned before on this show, like on the Skinny with Tom and Tony, Skinny on Options, Abstract Applications. There's something in the finance literature called post-earnings announcement drift. And I was first introduced to this idea in my PhD program because we had to read all the finance literature and we had to understand all the finance literature so that not only we could A, understand it to like, pass our classes and pass our exams and stuff, but also B, at the tail end of a doctoral program, you have to write a dissertation and basically, you can write about whatever you want, but you have to improve and extend the body of literature. You can't do something that's already been done. You have to do something that's new in some type of way. And so the only way to understand what's already been done is obviously to see what's already been done. Well, there's a big, like in the earnings literature, there's a phenomenon, and this is, I mean, I read this in like 2006, 2007, and when I read it, I think it was 10 to 15 to 35 years old. But post-earnings announcement drift. And the idea behind post-earnings announcement drift is actually exactly what you see here in Chipotle. For stocks that have a big surprise for their earnings. Now, I can't remember, this was many years ago, so I can't remember how surprise, quote unquote, was defined. But if you hop on like Google or even Google Scholar, if you go to Google Scholar, like scholar.google.com, you can do all this in ChatGPT and Claude and Grok and all that stuff. Now they can do it for you. But if you Google post-earnings announcement drift, then you'll see the papers that have been done on this topic. And you'll have a better idea what they meant by surprise. But the idea was, if there's a big surprise, there's a strong likelihood that you are going to see it move and drift in the same direction that it was going. And so from a continuation standpoint, I'm not super surprised that Chipotle has continued to drift higher, but I'm just curious, like, let me know in the chat, like, what did they say? Like in their earnings call, like what was so bad that it caused not only the gap down, but the continuation? I would imagine there's something quite significant that they said or didn't say or whatever. And so that is, let's see, that is Chipotle. And then hold on a second. What is Josh saying to me now? He's saying something to me. Oh, he's trolling me. He's trolling me. That's good. That's good, Josh. Yeah, that's good stuff. Josh says he's repeating what I said. The only way to see what's already been done is to see what's already been done. I mean, this is the next level analysis. This is the type of next level analysis that you will only find on the Tasty Live Network. You're not going to find this on CNBC. You're not going to find this on Yahoo. You can only find this here. So you're welcome. So that's Chipotle. And now if we go to, I mean, GVX, it's not doing anything. GLD, surprisingly, I mean, it's up another day, of course, because it's just, that's what it does. But our short call spread is not really doing anything. I mean, Google's at a max loss right now. That guy's not coming back, but we've got 7 days to go. It's already priced, it's already marked at max loss. There's no reason to do anything in there. So we're going to let that guy just kind of simmer. And then HIMS is starting to get away from us a little bit. But I'm going to sit tight. Let's do nothing in HIMS. IWM, I'm really surprised by the Russell weakness today. So the Russell has been lagging behind the other major indexes. I mean, S&P 500 all-time highs, NASDAQ essentially all-time highs. I mean, I think it is all-time highs now, right? Hang on, is this all-time highs now? I think it is. Yeah, there you go. I mean, the all-time high was 128, which of course was 6 minutes ago. So, I mean, the fact that we're at 118, we're literally 1 basis point off of all-time highs. And so that's pretty remarkable, man. That's some pretty crazy stuff. Whereas with Russell, the all-time high was higher than this. I think it was right after the election, was it not? Like if I go back like 1 year. Oh, I've got to do the, excuse me, I got to do the continuous guy. $, RTY. Yeah, it's going to be the all-time high. Yeah, it's just right back here. So your all-time high is going to be right after the election where you're up to 2477, right? So it's close. It's only 70 points off, but it's really lagging behind. And so, with interest rates coming, according to the Fed Funds Futures, man, wouldn't it really be something if Powell didn't cut? That would be crazy, crazy, crazy. And so, I mean, I don't think that's going to happen, of course. I mean, I have 99.9% chance he's going to cut. Man, that would really, really be something. But I'm really surprised at the Russell weakness, given the fact that just generally speaking, the small caps are so much more sensitive to interest rate changes than like large caps or even tech stocks. And the basic idea, the basic rationale for that, or at least one piece to it, is the simple idea that if you think about stocks as financial assets, because that's essentially what they are, it's all based on their value is essentially based on the future cash flows that they're going to bring back. So you're always discounting future cash flows back to the present. So you're looking at the projects, you're looking at the different things that they do and this, the sales and the revenues and whatever else and earnings calls. And like, they're telling you like, we're going to invest X amount in AI and we expect an ROI of Y or whatever. I mean, what investors are trying to do, not necessarily us, because we're playing a very different game with probabilities and the quantitative nature of like, the derivatives market and things like that. But just generally speaking, just zooming out, right? It's like a stock's price should reflect its inherent worth. Well, its inherent worth is essentially going to be determined by the cash flows that it can generate. Well, the cash flows that it can generate are all going to happen in the future. Well, future dollars are not worth the same as present dollars. Present dollars are always worth more than future dollars, ceteris paribus, because we live in an inflationary world. Now, of course, if you happen to be in a part of the world or a country where, deflation is a problem, that's a very different situation for you. But coming from like the West, coming from like US, in an inflationary environment, at least modest inflation, you're going to see a situation where present dollars are always preferred to future dollars. So the future dollars have to be brought back. They have to be discounted to the present. Well, when you do that discounting mechanism, you need an interest rate to discount the future cash flows. And the basic idea, without like breaking out the chalkboard, breaking out the Final Jeopardy pen, when you decrease the interest rate that must be applied to future cash flows, that's going to essentially increase their present value. And so that is part of the reason why you normally see the Russell 2000 respond a bit more wildly to interest rate changes or prospective interest rate changes. Now, everybody knows next week is coming. Everybody knows next week is a done deal, right? It's signed, sealed, and delivered, right? For my Stevie Wonder fans that might be watching the show here today. If that's the case, then obviously a lot of this is being priced in now. So what's going to happen next week when the actual number drops and we get the information? I mean, yeah, it's anybody's guess, in my opinion. Nobody truly knows. But anyway, I digress. So IWM, we just adjusted that strangle and we rolled up the put side. And so right now it's very much a wait and see type of situation. But man, I mean, Meta is not going to work. It's not coming back. Oracle, obviously, that's done and dusted. Oscar, we got a little Oscar action. That's actually working out okay. We'll sit tight. Palo Alto, that's a Sam L special. We're hanging on by the skin of our teeth on Palo Alto, but we'll sit tight and do nothing on that right now. And then, of course, you've got SPUX, and I just talked about SPX. That's going to go away. And then United Healthcare. I mean, this is a short call spread. And so even though United Healthcare, I should say, is up again here today, the beautiful thing about defined risk is you don't do anything. The beautiful thing about defined risk is it is very much a set it and forget it type of trade, especially with something like a vertical spread. There's just not very much that you could do. Like, yes, I could roll this out to November if I wanted to, but I don't really want a 60, 65-day option when October with 35 days to go is still kind of in that sweet spot. And so right now, let's just give it a chance to breathe. Let's just give it a chance to kind of just hang out there and see what happens in the next, couple days, next couple weeks. So there is a full analysis of the portfolio, for better or worse. And there you go. So man, where are you guys at though? Let me see here. Let me surprise and delight some people in the middle. I see some people are telling me what happened with Chipotle. Thank you guys so much. Christopher Rizzo, 4% drop in same store sales and poor guidance. Yeah, but isn't that like an Ash? You kind of said the same thing. Thank you guys so much. Isn't that what they always say though? Like, that's not anything. Is that like really that monumental to cause? I understand the gap. Okay, that makes sense. But then you would think like after the gap, they would have maybe found the new intrinsic value. But apparently not, because it gapped down to what, 43 or whatever, and now it's 38. Like, that's pretty crazy. It's essentially doubled the gap, I think, based on the continued move lower. I mean, at the end of the day, in my opinion, in my humble opinion, which, as you guys know if you have followed the show, is worth less than nothing. Chipotle still has a space in that marketplace that's kind of difficult to compete with. Like, it's become a regular part of people's routines. Like now they don't quite have the command over the space that maybe like an Uber has, or even like a Google has, although that's kind of starting to shake a little bit with, people using AI to do searches. I mean, that's what I do for most of my searches because it's way more tailored. Like it just gets me to my answer a lot more efficiently usually. But still, I mean, in that fast casual space, I mean, you've got Kava, and I'm a big Kava fan. Okay, you've got Qdoba, I guess, but who's going to Qdoba over Chipotle? Zero people. Like 0% of the population. If you find yourself in a Qdoba when you try to go to Chipotle, something went wrong. Like something went wrong. The GPS took you in the wrong direction. And the next thing you know, you're in a Qdoba. So you'll eat there because you're there, but you didn't get there voluntarily. And so we all know that that's just a fact. And so anyway, I digress. Let me see. Where else you guys at? I see. I see, Sergio. We have some fun with this surprise and delight today. This has nothing to do with trading, but I appreciate you guys, man. Let's cut loose today. Sergio says, Dr. Jim, this is, man, iPod Touch got me with the reverse event horizon, and now I got Sergio. This is good stuff. Sergio says, Dr. Jim, if things keep going like they are, you are going to make more by selling your canned tuna fish recipe book than by selling premium. Man, truer words have never been spoken. And the fact that you think that I don't already have this in the hopper, like I don't already have this book deal lined up, I'm a little disappointed in you, Sergio. Like, you don't think I have a backup plan? Like, you don't think I'm aware that like 6, 7, 8 losers in a row on Expecting Butterflies, that's par for the course? Oh, I'm well aware. I am absolutely unequivocally well aware. The problem is, the tuna fish and applesauce recipe, I mean, it's a pamphlet. It's a Post-it note. I mean, it's 20% of a tweet, and it's over. It's done. Now, could I, Jim Schultz, right, who's never seen a space of air that he couldn't fill with some type of verbiage, could I make an 80 to 120 page book out of that? That's going to be the test. Like, that's what we're all going to find out. And so we'll see, but you can bet your bottom biscuit that is my plan C at this point. And so, but I appreciate you, man. That's so funny. Oh my gosh, you guys are too funny. And I see Ashfin says, I'm out of work meetings just in time to catch Dr. Jim, man. Let's go. Man, that's amazing. Man, thank you so much. I feel so honored that you hopped right into the show as soon as you could. That's really, really amazing. But let's go back to the beginning. Man, I gotta go up. Man, you guys are really pumping it today. That's really, really good stuff. I appreciate you guys, man. Let's try to fool the algorithm into thinking that this is some quality programming. But you guys crack me up, man. You always crack me up. And I'll check the comments after the show, and I'm just dying laughing. Right? I mean, I don't laugh too hard. It's about a B- level laugh. But again, that's the most I'm asking for from you guys. That's the most I can expect out of you guys. And it's right there. It's right in my lane. So Daniel Perkins in the house. Dr. Jim, I cut my effective buying power in half yesterday. I'm now at 16%. It's pretty low. Just desperately need some new trades, but I'm reluctant to add anything at these levels. Market IV, am I crazy? No, you're not crazy at all. You are not crazy at all. I would continue to wait. Don't force it, man. Don't force it. Don't square a circle. 16%, man, that's good to go. You have so much buying power. And again, if the seasonality bros are correct, maybe we'll get a VIX at, I don't know, 16 maybe? Can I get 16 and a quarter? Like, do I hear 16 and a half? Like, again, we're not asking for anything crazy. I'm just asking for something to not be just, completely on the deck. I mean, VIX at 14 on its way to 13. That's some tough sledding, man. That is 100% some tough sledding as a premium seller. So I would wait. I would wait, especially with FOMC coming up next week. It is next Wednesday, right? Like, I think I have this right. I don't think it's the following Wednesday. I think it's next Wednesday. With FOMC next week, it's like, man, we have the potential. There it is. There's another one, Josh. We have the potential for a big move. Again, you can only find this here on the Tasty Live Network. Big things could happen next week. Now, I say that, and it's most likely going to be a yawner. It's most likely going to be a snooze fest. But you never know, man. You just never know. I mean, when it's such a foregone conclusion at this point, I tend to think that those tend to be more of the snooze fest. But then I'm not sure, because we all know the interest rate decision doesn't really matter. Powell's commentary doesn't really matter. The thing that matters is he going to go purple tie for the 67th consecutive public appearance? That's all that matters. Because if he deviates, I don't care what his words are. And I don't care what the interest rate is. That is going to send the market into a tailspin. If he comes out It doesn't have to be fire engine red, although that would be a power move. It doesn't have to be lime green, neon green, although that would be a power move. But if he comes out with like a baby blue, like no one's gonna know how to figure that out. Like you think it was hard to find Chipotle's intrinsic value after same store sales went down by 30 basis points? My man comes out with like a pink, everybody's gonna lose their minds. They're gonna lose their minds. And so there's still hope. There's still hope there, Daniel Perkins. It might happen. But Samuel, happy Friday, Doc. What's up there, Samuel? End of the week, and the only thing pumping harder than your B- humor is the dry pre-workout scoop, man. That's a power. Even I don't do that, man. I do dry scoop my creatine because it's nasty if you mix it with pretty much anything. But dry scooping the pre-workout, man, spot us on this final P&L set before we hit the weekend cheat meal. I don't know why you would even do that though, right? Like I see some people, well, dry scooping the pre-workout, dry scooping protein powder. What I don't understand is if you feel the need to dry scoop those things, like creatine is different because creatine is just, it's pretty much flavorless, whatever. But if you have put yourself in a position to where you have to dry scoop protein powder and or pre-workout, you made a big error long ago. And that is, it's not 1997. Like we're not all, ingesting, egg white protein, and that's the only thing that's available. And it's nasty. It's vomit in a jug, right? We have moved well beyond that. Like there's so many protein powders that taste amazing. Like if you're vegan, if you're not, like it doesn't matter. There's so many things out there that taste amazing. There's so many pre-workouts that taste amazing. A la Ghost. A la any flavor of Ghost. I know that I was on here just the other day throwing shade at the new strawberry flavor, the straw bango or whatever they call it. It's actually amazing. I had a few more sips. I'm like, this is actually pretty good. And so, man, go with the Ghost, my friend. And you know that it will not let you down. But Sam L goes on to say, Kimberly, I see you. I appreciate you. Says, by the way, Doc, what's your go-to weekend cheat meal, or are you more of an all-you-can-eat buffet, bro? I used to be an all-you-can-eat buffet, bro. Buffet, bro. Get to like some Chinese restaurant that does like the buffets for like $8 or $9 or whatever. Oh man, we put some records on the wall in college. We absolutely did. But sadly, those days are over. I can't really do that anymore, or it's going to take me 6 to 12 months to recover from that physically, mentally, emotionally in some ways. And so I would have to say that my go-to. So my wife actually makes homemade pizza. So Autumn makes homemade pizza that is amazing. It is amazing. And because like she's gluten-free and dairy-free and the kids are mostly gluten-free and dairy-free, I'm not gluten-free. I don't handle dairy that well, so I stay away from it for the most part, but I'm not necessarily dairy-free. But she has perfected the recipe. So like when my wife and her breadsticks, she makes homemade breadsticks that are gluten-free and dairy-free. You would not even know. I promise you, you would not even know unless someone told you. They're unbelievable. And so when she tells me that pizza and breadsticks are on the menu for the weekend, like it's going to be a real good night. And so that's my go-to, actually. I would have to say my wife's pizza and breadsticks. But let's see. Samuel, every day is a new all-time high. It is, man. And what are we doing? I have no idea. Not a clue. Margin Walker says, what's up, Dr. J? I appreciate you, my man. I appreciate you, my man. So thank you so much for being here. I just, we couldn't do what we do without you, man. So thank you. Thank you so much. Brian Dowdy, is there an easy way to calculate buying power without actually prepping the order? Some back of the napkin type estimate. Yeah, it's usually going to be around 20% of the notional value, approximately. So if you want like back of the envelope, this is even quicker than that. Like you don't even need the envelope. You can just be like, boom, 20%. Like there it is. Like for example, like if I go to, go to like Apple, for example, right? Apple, $233 stock, right? So that means that 100 shares would be 23,000, right? What's 20% of 23,000? It's about 4,500. So if I go in here to sell a put and I go to like October and I go to sell like the 225 put, you can see the buying power effect, 3,800, right? So I said 4,500, 3,800. It's not too far off for not even needing an envelope. That's pretty good, right? And let's do one more just to kind of really, make the point here. Let's clear that away. Let's go to Amazon. Oh, let's go to Amazon. $227 stock. Well, I want something that's a little bit different. Let's go to like IBM. Wow, 250. All right, let me go to Tom's watch list. We haven't hooked him up with that royalty, and it's been a while. And again, that second Range Rover, like if you think it's going to buy itself, you are sorely mistaken. Like this is a team effort. This is going to require a collective effort. So we've all got to pitch in. And every time you click on Tom's watch list, he gets a 37-cent royalty. And so we click on Tom's watch list, we send him the royalty. And then if you just, if I sort by stock price here, like let me do Walmart. Walmart, $100 stock. What's 20% of 100 is 2,000. Or $100 stocks, or $10,000 notional on 100 shares. What's 20% of that is 2,000. So again, I go in. This time, let's even do a different strategy. Let's do a strangle. All right, let me do like a 16 delta strangle. I sell the 97.5 put, and then I sell the 110 call. And you can see the buying power is $1,500. And again, I mean, but this is like a really wide strangle. I mean, I'm only collecting $1 for this, so I probably would even do this trade. But again, just to kind of make my point, it's 20% of the notional value, give or take. And it's going to be dependent upon the strike selection, the individual IV of the stock. But 20% should get you. It should get you close enough for just a real quick. Like you're scanning the watch list, right? You're on Tom's watch list. You're on the Tasty Default watch list. You're on one of the others. There's plenty of others to look at. Dividend aristocrats and high option volume and whatever else. And you're just looking down the list, and you're just looking at the stock price alone. Just take 20% of the notional value of 100 shares. Let's see. Oh man, Sam L says, I remember the good old days when a 1,000-point drop on a risk-free instrument was enough to scare the children. Now they just ask for more screen time and extra leverage. Yeah, some more zero DTE calls, some more YOLO, right? And that's just that's the way that it is. It is crazy, man. That I mean, it's a $24,000 index now. A 1,000-point drop would only be a 4% move, and that's a huge daily move. Don't get me wrong. But that's not that crazy. Like it's a little bit crazy, and I'm not saying it's going to happen. It's a very, very, very low likelihood event. But it's not like limit lock limit levels. I think the first lock limit is 7%, is it not? I think that it's 7. So you're halfway there to like the first lock limit level. I don't think 5% is the first level. I think it's 7 if I'm not mistaken. It's 7 and then 10 and then 20. I think. But I mean, we haven't had to really address that in so long that I can't remember exactly. But yeah, 1,000 points on the NASDAQ. It's just not even that big of a move. Especially if you were like looking over like 2 days instead of just like a 1-day move. It's nothing. It's absolutely nothing. Wow, look at ES at 6,600. Wow. It didn't even get there this morning, I don't think, did it? Apparently it did. It was a little bit higher. 6,602 was your high. Maybe was that this morning? Now I'm kind of curious. Hold on. Let's do a 5-minute. We do like a 1-day. Yeah, so it got to the 6,602 level. Was it this morning? It must have been this morning. Was it last night? I don't know. I don't even see it. Okay. Oh, it must have been just now. Oh, it was just now. A couple of minutes ago, a couple of seconds ago. And so, wow, this is it. And once again, guys, this is only on the Tasty Live Network. Like people that are off, like doing something else, they have no idea this is happening. Like you can't find this information anywhere else. It's only here. And so, man, like I'm just so glad that you're here and you're able to see this before anybody else. And so, Cynthia, though, what's going on there, Cynthia? I appreciate you again so much. Joe's in the house. What's up, Dr. Jim? What's up there, Joe? Appreciate you. There's iPod Touch with the inverse event horizon. That's some pretty funny stuff, man. That's some really, really funny stuff. RC, what's going on there, RC? I appreciate you, my friend. Andy B, what's up, Andy B? Stefan's in the house. Man, have a great weekend. You do the same there, Stefan. I appreciate you. Brian says, guess Adobe went down. I guess I doubled down on the losses for Dr. J. Well, I think, weren't you playing it to the upside too, though? I remember now. Like, you gave me the idea, and you're obviously not responsible. You didn't tell me to go up. But it was funny that I went to the long side. And then I remember going down in the comments, you were also on the long side, which is really, really funny. And so once we both kind of got that confirmation, we should have just taken the 1-day trade at Tooken. Potential Tooken. I mean, it's all coming out today. It's all there for you guys. But we should have just bailed. We should have just been done with it. 1,000,000%. But let's see. Brian Dowdy says, my put worked out quite well at the 1 standard deviation for Adobe. Oh, so you did play it to the downside. Or no. I think you sold a put, I think, at the 1 standard deviation. There you go. That's some good stuff, my friend. Sergio says, greetings, Dr. Jim. What's going on there, Sergio? Appreciate you, my friend. Theta Trader. There you go. Theta Trader hooking it up. 20% of the underlying for buying power would be a very quick napkin calculation. Again, I don't even know that you need the napkin for that. Like, I think you can kind of just eyeball that guy. Emmett Morrison is in the house. What's up there, Emmett Morrison? Let's see. Theta Trader. There are 3 formulas, if I recall correctly, can be found on the Tasty Support FAQ. That's correct. And by 3 formulas, I think you might mean that there's 3 elements to the formula. At least that's how I think of it. Maybe there are 2 other formulas that are similar but slightly different. But there's essentially buying power is going to be a factor of A, the stock price, B, the implied volatility, and then also C, the amount of moneyness or lack thereof, the amount of out of the moneyness or in the moneyness of the actual strategy. Because all 3 of those things essentially determine how risky is the position. So this is why buying powers are different when you look at a low price stock versus a high price stock, because stock price is one of the factors. This is why buying powers are different when you look at a low IV stock and a high IV stock, because, obviously the implied volatility is going to factor into the buying power significantly. And then lastly, the amount of moneyness is quite significant in determining what the buying power should be, because you'll notice when you change your strikes on an undefined risk position and you move further out of the money, the buying power always goes down. Like, that's not by coincidence. Like, that's always going to happen because by definition, you have a lower risk position because you have more room before the option goes in the money. So that's the basic idea behind, the buying power calculation. Just to give a little bit more kind of mortar in between the bricks. But let's see. Oh, Brian says, I'll take a look at the FAQ. I was trying strikes and trying to balance it out portfolio percentage-wise and was getting annoyed. Yeah, I just do the 20%. I think that's the easiest way to do it. Ed Bickford's in the house. What's going on there, Ed? Happy Friday, Dr. Dangerous. Man, I appreciate you. I appreciate you so much, my friend. Thanks for being here. Joel James. Hey, Dr. Jim. Adobe first earnings play, maybe. IV rank is still up there. I'm so desperate for trades, I'm finding Adobe looking good. Well, I don't know that I'm going to do it again. I mean, I feel like, fool me once, shame on me. Fool me twice. I mean, you guys know how that goes. I think I'm going to pass. But yeah, 26.5 in a post-earnings world is pretty good. Like 26.5 in a the earnings have already been released type of world. That's pretty solid for sure. And so, I mean, if you did not play Adobe earnings and you've got kind of a fresh book when it comes to Adobe positions, this would be a great time to enter an Adobe position. I'm not going to do it right now. I mean, maybe we can revisit this next week, but I have a feeling we're going to try to keep some capital kind of at the ready for FOMC. I think we've done pretty well for FOMC the last couple times around. I know we've done SPX butterflies for FOMC, and I want to say, like Uncle Jay with the presser and the this and that and the Q&A and whatever, it's kind of bailed us out a couple times. And so maybe we can get lucky, for the 3rd time in a row. That'd be pretty nice. But Brian says, I'm hardly using any buying power, so it's been slim picking for me. 40% of Tasty portfolios in SCUF. I don't blame you, my friend. I don't blame you at all. Let's see. Theta Trader says, looking at QQQ short put, 500 strike at 10, 500, the 500 strike is 10%, 5,000 buying power, but the 600 strike is 20%, $12,000 buying power, different formula calculation. Okay. So you might be right. Maybe there is a different formula for kind of where you're at on the option chain. That would be news to me. But that could be the case. But remember, right? The out of the moneyness is factored into the main formula. But maybe it's very possible that there's one formula that's used by the brokerages, by Tasty, whoever, that's used for like at the money and slightly like in the money, out of the money options. And then once you cross over a certain threshold, whatever that threshold is, maybe they flip it to a different calculation. That's possible. That's very possible. Because I mean, I think we can all agree that you are playing a very different game if you're dealing with at the money or slightly out of the money options versus really far out of the money options or even really far in the money options for that matter. And so if there were different calculations that were applied, I wouldn't be totally surprised by that. But Sam L says your father must be in a good mood. Tesla is pumping. Oh, you mean my father-in-law? Yeah, my dad's in a good mood too. But I don't think my dad's bought a stock in his whole life. I mean, my dad will be 85 in December, and I talk to my dad almost every single week. And I don't think he's bought a single stock in his whole life. I mean, he is the prototypical like blue collar like boomer worker. And I mean, he's the hardest working man I've ever met in my entire life. He's the hardest working man I've ever met in my entire life. There is no close second. Like any work ethic that I might have and any like affinity towards hard work that I might have, it all comes from him. So I give him all the thanks and all the credit for that. And so, but he hasn't bought a single stock. And so, yes, my father-in-law is super excited just about the market as well. But Tesla, whoa, up to 400. I mean, almost 400. Look at that. Wow. So that would explain the NASDAQ strength today, at least to some degree. I mean, I think everything's kind of ripping today, but man, yeah, he's going to be pumped because Friday night is movie night. Well, Friday night is usually movie night. Tonight is Red Sox Yankees night, of course. I've already given very strict, very clear instructions so there's no miscommunication to my wife, to my children, to my neighbors, to anybody who wants or needs to hear this. I'm going to need to see every pitch of this entire series because it all comes down to this. Like, this is it. It's this series. Like, tied for the top wild card spot. Like, this is it. 100%. We've got Crochet, Giolito, and Bayo going this weekend. Not in that order, I don't think. But yes. And then Samuel says, I guess it's time to tell his daughter to stop drinking all the Ghost pre-workout and save some gains for you. No, she won't touch that stuff. Like, she sees that stuff and she's like, I'm not touching that. She's like, that's got so many chemicals and man-made whatever and this and that. I'm like, yeah, it's amazing. I'm like, the fact that you don't want to take advantage of modern technology, like, don't blame that on me. That's on you. And so hand that goes back to me. And so, yeah, she wouldn't touch that stuff. I mean, she'll touch it if she's handing it to me, but that's pretty much about it. And so let's see. Margin Walker, trade idea for you, Doc. Upside expecting move butterfly in October in Ondas Holdings. You buy the 6 and 12 calls and sell 2 of the 9 cheapo shot that can't possibly lose more than $60. Yeah, that's usually what could possibly go wrong, right? What could possibly go wrong in, a harmless little short silver trade, 4 weeks ago? What could possibly go wrong in a harmless little Ondas Holdings, whoever they are, trade? What's funny, really quick? So I'm not going to do that trade there, Margin Walker, because I'm almost done. But a really good friend of mine here, he actually works for the Discovery Channel. And he sent me a text today, and he works for, their Discovery Channel is part of Warner Brothers. And he sent me a text today, and he was like, dude, take a look at our stock. And he sent me the ticker, and I'm like, I've never traded that stock before. Like, I knew that he worked for him, but WBT, and I looked it up, and this is his company. He, works as a financial analyst, actually. And so he was like, man, I'm excited about this, because he's got a lot of company stock and whatever. And so he was super excited. But I'm like, man, Warner Brothers? My first thought when I read that text obviously was, they're still in business? Like, that's amazing. But I'm really happy for him. I'm happy that they're in business and apparently doing very, very well. But, man, I got to go. I'm totally out of time. I can't believe it. It goes so fast. You guys have no idea. But I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler. My special guest for Friday, none other than Josh Fabian. What's happening?
What is going on? How are you?
I'm good, man. We were sitting here talking about the week, basically, and that's what this ends up being. I don't know about you, but when I get to this point in the week, it's not so much about a new trade I'm going to put on today. It's more about what's going on for next week. You know what I mean? Like, that's just kind of where I am on a Friday afternoon of trading. And so when I reflect on this week, I can't help but like always go back to this morning when I talked to This Week in Stocks. I don't know if everybody knows, but like when I do This Week in Stocks, it's always been, that's basically, look, every show I've ever done on this network that I create or help create is born out of something that I just do naturally when it comes to the markets. And so like every Friday morning, basically, I'm looking back like, yo, what the hell just happened this week? And honestly, there was a lot of things that happened throughout the week. I mean, when you look, I mean, it started like when you come into a week, right? Like you're thinking about, okay, these are going to be the things that are going to affect the week. And then there's like many weeks where you get thrown a curveball. And so like this week we were like thinking, okay, inflation, those are going to be the big things of the week. But that Oracle move this week, I mean, it definitely became a huge thing of the week, and it brought a lot of other names with it throughout the week. There was also just different tidbits here and there. I think during the middle of the day yesterday, Skydance came out and said, Skydance Paramount, again, which has been a lot going on with that, and they just kind of got together. They said they're looking at buying Warner Brothers Media, which again, that's going to be a huge conglomerate, lots of content together if that comes through. If it comes through, because I'm sure that it'll be a regulatory issue, probably. Gold and silver made new highs once again this week. S&P 500, NASDAQ, Dow all made not only closing highs at one point, but eventually all-time highs as of yesterday. It's funny because I termed it the thing from this morning for This Week in Stocks, everything is bid, because it's interesting to see not only bonds, even though they've kind of retreated today, but bonds were bid this week, stocks were bid this week, gold and silver were bid this week. You just don't see that too often. So there was just a lot of things that happened that I think are setting up for a fascinating next week.
Totally agree. With respect to the Paramount, Skydance, HBO, can we just listen? I'm bidding that by mid 2026 we're all back to cable. Like it's so disparate. And then I'm going to buy this and you're going to buy that. And we're going to put this together and that together. I just want to go back to cable. Okay. I can admit when it didn't work out, it didn't work out. I don't need all these different subscriptions. So
how would it be different? Because I'll tell you right now, if they came back out with normal cable and it's like $250 a month and I get all of these channels that I'm dealing with now, I don't want that. That doesn't mean I won't have it in my house, because obviously there's another person in my house.
I don't even know it, but see, I don't even know what I pay anymore, because you got Netflix, you've got Hulu with the package there. I've got Paramount Plus, I've got HBO Max, I've got YouTube TV. It's like I've got all these different things, and it's just like it's confusing. I just wanted it used to be simple. I wanted it streamlined, but whatever. That's actually the least.
I could do without like 4 or 5 different apps that we currently have. Like I would be just fine.
Yeah. It's probably more for kids and family. I could same thing, but still that's like the most or the least interesting story this week, if you ask me. The Oracle thing was huge. I don't know if you got caught up in that. I did not trade it.
It's funny, and just real quick, it's funny because normally I was looking at calendar call spreads, which is my typical MO for earnings trades. I was looking at it, but I was actually kind of because I had a guest on that day. I had Matt Cashman from the OIC show up, and so I probably would have traded it if it had just been me, but I didn't. And those calendar call spreads, if I would have done, no matter how far upside, they wouldn't have worked out because they wouldn't have been ready for a 30% move.
Yeah. Yeah. No, that was it. That's the risk with earnings, all right, is every now and again you're going to get that one that just ruins the rest of the year. It really can take you down. But it was I think that
I got a put spread though. I bought a put spread the day after, and I like
that.
Dude,
yeah, I like
huge move like that. Come on, there's got to be some.
You got to fade it. You got to fade it. Yeah, but I think it. To your point earlier when you started the show, we were looking at PPI, we were looking at CPI. We were talking about what are the things that are going to move the market this week, and it was none of those things. So, to me, the big thing, you had Oracle, you had a bunch of IPOs this week. That's been the bigger story of the week, if you ask me.
Should I sell this Strangle? Speaking of, I'm wondering, now that it's pulled back, it's kind of interesting. I just don't feel like spending 2,900 right now. I'm actually getting into a mode where I'm starting to try to hoard a little capital. I mean, the vol is bidden here. This is interesting.
Yeah.
I don't know.
I've actually spent a bit of capital recently, and I regret it. Really, really wish I had that to do over again.
So tell me about that. What anything in particular?
So I decided we haven't had like a big IPO market in a long time, and my
2021, I think, was the last time. I think they've been saying.
Yeah, that's right. But my whole attitude towards the IPO market was formed back when I first started out in the 90s, in that stocks go up, IPO stock go up. And there were a few that were coming out this week that I thought they were kind of interesting. I thought Klarna could be kind of interesting. I thought that this Figure Technologies, I didn't know much about it. And then I started looking into it a little bit, and I'm like, that's kind of an interesting concept. And then, Gemini was coming out also. And how can you not want to invest with people named Winklevoss? I mean, is it like, doesn't the name just like, they sound like criminals in a Batman movie, but it's like, yeah, I kind of want to be on board with them. I want some Winklevi. We actually had a debate on this, Chris and I did earlier, but I went small in all of them, but none of them have really played out well on the secondary market for me so far. They've all, the IPO is great. There was a lot of strength, and I think that's actually a very bullish indication for the market. These were all oversubscribed. They did really well. It's my bad. It's on me for jumping in as soon as I did. I know better. I should have waited, but I wanted to get my toes in the water.
As much as I enjoy watching you beat yourself up over this, and I do, I really do. To your point, it is true. Like from historically, we've seen a lot of IPOs. You buy them, they go up. We've seen it. I feel like recently too. I'm pretty sure. Let me see. Circle was one. I'm pretty sure Circle on its IPO day, and obviously it's not here. I'm looking at a 1 month, 2 minute chart, but I do feel like that bounced within a couple of days of IPOing. What was the other one that I like a lot? CoreWeave.
CoreWeave was another.
Did that. So back to these guys. This week it was Klarna. You can see here since the opening, it's been kind of nothing but fade. These aren't marginable neither. That sucks.
I'm aware.
What's the look up the just because I don't feel like opening up another window. Look up the market cap real quick for Klarna. I'm just curious. I don't remember what it was. Was it like it's not over 100 billion, right? I don't think any of these are. They're both kind of. I'm curious.
We actually don't have it listed right now on the platform.
I know we don't. You'll probably just have to.
Wait, hang on. I'll Google it real fast.
Figure is another one where again this one This was the where's the open? This is
15.5 billion.
15 billion. So yeah, I mean it's fairly small actually when you think about it.
I think 15 billion I could get by on.
15 billion. I mean, yeah.
Yeah.
Yeah, true. Most people can, I would think. What day did this? Oh, what's today? 11th? Oh yeah, no.
Yeah, this one opened
Let's go
yesterday or 2 days ago.
5 minutes. There we go. So the 5 minute chart here. This is the day that it opened. Figure opened at 36, and I mean it's $3 below the price now, if you will. Looked like it fell pretty hard. Wow, it did it fell pretty hard that day. I didn't realize that.
Yeah, it did.
Down to 30, and then now it's just
it's hard to hold these. Like, as somebody that trades and
for sure
scalps a lot, like the idea that I'm going to hold these for a period of time, like, is not easy. But I come back to, I think it's a positive for the market that these guys are going public. That there's that kind of confidence right now, and that they've all been oversubscribed, I think, is another positive. So, we'll see what happens. They could easily get crushed. If we see some sort of negative event within the broader market. But for now, you know what? They're also affordable. That's the other thing. Is if you want to buy round lots, which I prefer to do, it's a lot easier for me to buy a round lot on a $30, $40, $50 stock than it is on a multi-$100 stock.
I did notice the day that Klarna came out, the related names like Affirm and some of the others did struggle on those days for whatever reason, right? Just getting stuff. I did notice that, but I'm thinking about that because again, like when I think of IPOs, I like to look. We don't know anything about these IPOs. I know you can look and you can look up to how much money they make, and honestly, that's not something we normally do when we're talking volatility. But in this case, you can only do stock for most of these, and so it's always interesting to figure out like what is the staying power. In this case, I feel like your best look is to look at Affirm because they operate in the U.S. Klarna mostly operates in the U.K., but similar businesses, and so you got to imagine like most times you talk about the IPO time period, right? And the late 90s and when things were going nuts. Most times when people think about IPOs, how long is this thing going to be around? I think Klarna is one that will be around for a while. Like you said, it's not easy to hold on to stock in these, but it is. That's why I was sitting here looking. I didn't realize it got optioned so fast.
Yeah, and they firmed up. Looking at your screen right now, they firmed up quite a bit from this morning.
I'm tempted to buy this just for the hell of it.
What I liked about this one in particular is that you can easily see this area consolidating. You can see a bigger name picking them up and using them for the financing arm. And then, if the economy turns down a little bit, we talked about this on Monday. This is, modern day layaway.
Yes.
You could see an uptick in users for this. So, I keep coming back to the idea that the IPO market being as strong as it is, I think is a positive. And it offsets my bearishness because I am a bit leery right now with the market being at all-time highs. You got that Fed meeting next week. And even though they've priced in a quarter point, my gut tells me this market wants to see a half. I don't see us rallying on a quarter point cut. I think that is clearly built in at this point. So, unless they come out and say, hey, we're cutting a quarter and we anticipate doing that again at the next meeting, I think anything short of a half point cut, and it's hard for me to make the bullish case out of that resolution.
I feel like this is a scenario where we could see a lot of volatility. I don't want to say a lot of volatility. I feel like we could see some volatility next week. I mean, that's why I'm trying to buy this put butterfly right now, and I've been waiting all day for this point in time to be able to buy this put butterfly. So because I'm buying like 100 points wide, basically 6,600, 6,500, 6,400, and again, I have some other different longs in here, but I feel like this is a good sort of, I don't even want to call it a hedge, just a good way to play what I think the market is. We could end up seeing a drop, like you said. What if the market is really looking for a 50 at this point? We only get 25, and then the market just pulls back as a result of that. It's also VIX expiration week on Wednesday morning. VIX expiration expires. So if you want to make some volatility plays, you want to use the VIX. Don't use the front month VIX because that was filled. That is not encapsulating that will not catch the Fed meeting, if you will.
Right.
And so
Right.
You would have to play, either the 24th weekly or just go straight out to October, which again, right now the October VIX is trading 1780. So yeah, September trading 1545, October trading 1780. That's a full $2.35 difference.
That's a big spread. That's a big spread.
Yeah, that's a big roll market there. So, but I mean, why wouldn't it be? I mean, markets just continue to move higher, pretty much day in and day out. Not crazily higher, I would say, but just drifting higher for the most part, right? This is somewhat like a 2017 type market, I would say.
Yeah, but one of the things I found surprising, and actually I like what you were just talking about with the volatility for next week. September is historically a volatile month. We haven't seen any evidence of that thus far. So I keep waiting on, some catalyst. Maybe it's the Fed meeting, maybe it's expiration, maybe it's triple witching, but it's for a month that has a reputation of bringing some volatility to it. Like, where is it? It's like going to see a movie and being disappointed. like where's the action?
You have a reputation. I don't judge you for it.
Well, I appreciate that. I've worked hard to curate that reputation.
Clean up your act. VIX is under 15. I think this is going to be one of the lowest closes in at least a month, I think. Oddly enough, I would like to say it's more than 3 months, but just a month ago, we had kind of 1450 something VIX, right? Too. We saw that. So it's not out of the order. Let me see. I think it was right around here. I think it was, what is this? Yeah. VIX closed 1422 on the 22nd. I mean, that was 2 weeks ago, I think. So this has kind of been the environment. And again, I know we like to be volatiles. We take advantage of that, but I like to take advantage of any opportunity the market has given me. And I think sometimes you just got to trade what's in front of you and find ways. I mean, for the most part, I'm still doing the calendar call spreads. I've still been doing the zebras and some names. I dare I say have even gone out and bought naked calls. Worked out this morning. I had some in here.
I'm telling.
I know. I had some in here. They worked out great. I had laddered calls, and somebody was asking me yesterday, why do I ladder them? Now, I got out of it early. Look, I made like $1,000 and I'm out. If I would have left it on, I would have made like $5,000 in this today. But it would have been a lot of risk, honestly, and I didn't want to. I mean, sometimes you just got to deal with a win, and a win is a win. But it is hard when you keep seeing it go up, and you're like, damn, I could have left this on longer.
Gotta take it off the screen.
But
take it off the screen.
I had these, I think these 4, and I had the 380s as well. So I had 5 of them. And somebody was asking me yesterday, why do you ladder your calls? Because again, I bought them it was like $500 maybe in premium. I had like a bunch of them like this. So as of yesterday, it was like this, right? And it was maybe $500. And to me, the reason why I ladder them is because when you do get this move, the hardest thing to do is sell them, right? And I think when you got a couple, so what I did initially earlier today, these were, say these were the 370s right here, and these were the 372.5s. They were like $1,000 right there. I sold those 2 and I left the others on for a little bit, and it allows me to just like sell a couple and then keep some on, sell a couple, keep some on, play with house money, keep them on. Because if you only have like one, it's like, oh God, I don't.
It's a tough call, right?
It's a tough call, and. I had 5, but it was a total of 500 in premium. So I'm still thinking about it. How much will I lose altogether?
Yeah. Anytime I buy an option, you have to do it. I think you have to do it in multiples of 2. So you can at least get out a half of the position, because it's hard. You see the thing running, you're like, do I want to get out? Do I want to stay in? And it's a lot easier if you've got 2 You take one off the board now, like you said, you're playing with house money at that point.
Exactly.
And that takes a lot of stress off.
And so what Josh is saying is like, say you bought 2 of these for 140, right? Say the stock jumps and now it's trading 280. If you sell one for 280, you still got another one on. You basically have it on for free. Even if it goes to zero, well, nothing really happened then, right? And so that's how the initial thought process was, like having multiple. But now sometimes instead of doing 2 on one strike, I'll do a multiple strikes in a row, especially with a name like this, because when this thing goes, it goes. I mean,
Yeah. Yeah, and you can do that way too. I mean, to me, you can buy multiples of 2 or do what you did.
The ladder.
Especially in a stock like that, a ladder. And yeah, because you're right. If Tesla's going to go, it's going to go.
Yeah. And it went so much that even though I made money, I didn't make as much money as I could have. But that's cool. I can live with that. I can way more live with that than anything
what
else.
I've done this week. I mean, it's really impressive what I've done this week.
I mean, you got stock, like you could still hold on, but I know you don't feel like holding on. It's tying up.
I don't like to hold, but I will hold it just because I'm stubborn also. But it's also
I'm past Monday. I can promise you that. I know you.
Well, I'm also short MES, so there is a bit of an offset. So if we do start to see the market, fall and these IPOs don't recover, at least I've got a bit of a hedge built in there. Of course, the other scenario is that just the IPOs fall and the market keeps rallying, because that to me makes a lot of sense in the context of my life.
Yeah. A couple other things I got here. RH and Adobe. I thought I was like gonna kill it on both of those as of last night. RH stock dropped like to 190, and I had put calendars. And Adobe stock was up to like, I don't know, like 380, I feel, at one point in post market. And both of them ended up basically not doing what I want them to do. That sucks, but whatever.
I think it's a hard market to trade right now, to be honest.
A little bit. Yeah.
I think that's a result of the low volatility. Is just, like I've been sitting here short with these micros. My earpiece is falling out. I've been sitting here short with these micros. They have not moved. Like, what did I get short at? They haven't moved 10 points today.
Yeah. No, barely. I know. It is. It's kind of well, especially today. Like I would say throughout the week, there was a little bit more movement with a lower volatility environment, but today is just kind of quiet. I mean, Tesla is one of the main few things moving. Even the other name that got a lot of discussion this week is this Open.
Yeah, don't talk about this one. I don't even want to talk about it. Get it off the screen. I don't even take it down. I don't even want to talk about it.
This stock is wild. Yeah, the big news yesterday, they had the founders come back to the board. Do you think the run is over? Do you think
I won't talk about it. I'm not talking about it.
Josh is upset because it was under $2. He was in there at one point in time. I was too, actually. I had like 1,000 shares at I don't know, $2, 190 or something like that, and I got rid of them. And I'm sure a lot of people have those stories with this stock, because this stock's been trading heavy. Even today, yesterday, it was number 3 on under the whole entire market as far as options traded. I think today it's number, it's in the top 5 active still. So very active name, which to me says it's not done making moves yet, I would say, honestly. And that's also one of the things that drives me.
Yeah, it's also why one of my kids is now going to go to community college. Like, you had a chance to go to Harvard, but now we're back to community college. Like, those make me so mad, because it was a $2 stock. Okay. And that's about where I owned it. And I just got tired of staring at it. I'm like, okay, this is done. It was a meme. It was stupid to even get in. Let's just get out. And instantly it's like 4, then it's 6, it's 7. And it's, pushing up against 10. And it's like,
So you know where it's going next, right? 12 to 15.
12 to 15. It's going somewhere that's going to be too enticing for me to pass up and think, okay, there's a run coming, and then it's going back to 2. I can storybook this out for you.
$4.33 straddle. I don't know. I mean, you could twist my arm to buy some of these expensive ass calls, but I don't think I'm going to do it.
If I was going to trade it, I would do it to the upside. I mean, I'm not going to bet on this thing coming back to $2 anytime soon.
It's a sizable ladder, but that's $600. I mean, this is cheaper than the ladder that I had. Again, it was different time frame, but this is cheap. This is more expensive than the ladder I had in Tesla yesterday.
Yeah.
This is expensive for sure.
And we've talked a lot the last few weeks about, my God, this woman and her timing is unreal. We've talked a lot about wanting to wait for a good opportunity. And we've been patient, or I had been until this week. So, open, do you want to chase it? Do you want to spend the $600 taking a shot? Or are you still of the mindset that, hey, I think there's some better premium selling opportunities coming, in the near future?
I think
it's a fair question for everybody to ask themselves. I don't think there's a right answer, but
I think the latter. And yeah, I mean, honestly, there's a decent premium selling opportunity in this right now, in this Oracle. I mean, 46 IVR. That's pretty jacked.
Yeah, it's very juiced for post earnings.
AVGO is not. I still have a punch on this one too. Yeah, that's kind of where things are. But yeah, I'm expecting a crazy busy week next week, honestly. And I don't see how we're going to get around it.
I hope so. I mean, I'd like to see some activity, some volatility, and yeah. I mean, it feels like summer's extended here, and it's been a bit boring, at least today. So I'm with you. I think that we're going to see some activity next week.
Yeah, things just might change. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. We'll see you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
If you have any questions, feel free to toss them in the chat.
Hello, everybody. Tim Knight here, and we are at the end of a mildly interesting week. I'm actually punching the last one of my symbols here because I like to have them preloaded for you so you don't have to watch me waiting for the symbols to load. So there's that. Anywho, next week, a different present unit of time, is going to be FOMC on Wednesday, and it is widely expected that Mr. Jerome Powell will drop rates by 25 basis points, maybe 50, if he's feeling sassy about it. And in a way,
that could produce kind of an anticlimax, because that's what everybody's been waiting for. All the news has been about dropping interest rates, and every bit of news that's been constructive to that goal has been very good for the market. The market basically hits lifetime highs every single day. It's getting a little more mixed lately. I mean, at this immediate moment, the ES and the incur are both green. The RTY and the YM are down. That is to say red. Palladium, bless it, is up again. And gold's up, although less. It's been a continued good performance for precious metals. So, as I mentioned, I have preloaded the charts for rapid and pleasurable viewing. So let's jump in and check those out. Here is the spider, lifetime high. 3 syllables you've heard a lot lately. It has been pretty much on an uninterrupted tear for the month of September. Just up, 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 up like so. Not as huge a game as yesterday, but just it's like every morning you wake up to the same thing. All the equity futures are up fractionally, and they just kind of do their thing all day long. Even though obviously we're not proximal to any real economic or business activity. In a month, it'll be cool again with all the earnings reports, but as of now, it's all about Powell and his rate. The diamond is down. It was at a lifetime high yesterday. 600 plus point gain, and we're burning off some of that. This was a minor resistance point, which was bested yesterday, and we'll see if it holds. The small caps are also down, about 0.75%. They are very close to lifetime highs. They got as close as they've managed to get yesterday, and they burned off some of that gain as well. There's a lifetime high, and yeah, ain't gonna happen this week. And the cubes, see, it's like green, red, red, green, just a whole mix. The cubes are up, a lifetime high. We're above the highest trend line we've gotten, which goes all the way back to 1999. This one right here, look at this. This goes all the way back, and we have pushed above it a little, just as we did here. And yeah, lifetime high. Although, underneath the surface, if you look at, I've been talking about the recent offerings lately, and they've not been doing that well. Here's Figma, which is a very hot offering. It's just flopping around at the bottom of the basket here. This is the 7th day in a row. It's just kind of hanging out beneath its sort of first earnings report slump. Klarna, much, much newer. This was a very closely watched IPO. It actually privately had a valuation, I think 3 times this high some time ago, but they finally came out, and as you can see, we've got its history is basically three red bars at this point, and some crazy stuff is happening. You might have seen this one, QMMM Holdings. This beast, all it had to do was announce, hey, we're all. I think they basically looked for the 2 hottest cryptos in the world and slammed them both together in a press release. Said we're going to be heavily into crypto and AI, and those are the magic words these days. Some poor sucker paid $303 for this thing. $303. This was a penny stock in April. So, as Elon would say, let that sink in. This is a penny stock. That's what I paid $303 for yesterday, based upon a keyword-heavy, buzzword-juicy press release. So. Is it back in the double digits now? It's down about 70% since that pop, but yeah, zany times. Oracle, a little bit more better known than QMMM, is also interesting because even at this distance, which is measured in decades, you can see the tremendous pop we had on Wednesday. And as I mentioned at the time, on the heels of that earnings report, which was Tuesday night, the earnings report was a disappointment, which is why the immediate reaction was the stock sold off hard. But it was all this kind of rosy predictions about how great things would be later that got people all jazzed. And they were very AI focused there. They had just tremendous predictions about just how much they were going to sell years from now. And they had their biggest gain since, I think, before Bill Clinton was president. I mean, it was just a very, very long time, third of a century since they've had that sort of pop. It did not stick. The peak was 345.72. We had a bearish engulfing pattern yesterday, which took out the lows from Wednesday and today, lower still. So it's still a great week for Oracle, no doubt about that. But we're down about 15% from the Wednesday peak. Over in precious metals land, very good week there. Here's gold, yet another positive day, yet another lifetime high. At the moment, we're up $11.50 with gold. Just say the same tired old thing, but I'm going to say it. I want to see us get back to that gap again. I'd be very enthusiastic about getting long gold again if we can get back to that gap. It's just too rich for my blood right now, and maybe it'll just keep getting richer. That can happen. Silver's been a laggard for decades, but silver is getting close to its own lifetime high on a nominal basis. This is not inflation adjusted. If it were inflation adjusted, this would be a very different looking chart. But nominally, we are getting quite close to the spring of 2011 peak in silver. As far as the miners go, they also achieved a lifetime high today, but it is kind of hanging on by its fingernails at this point. It's barely changed. Well, it's 0.00. It's unchanged right now. It had a very good week, but it's very weary right now. This has been a staggering run up, triple-digit gain this year. And I'll let you know a secret. I'm going to do it again, stupid as it is. I've actually bought GDX puts, October puts, $70. So we'll see if it works out. Tilting at that windmill once more. So we'll give it a try. As far as palladium goes, another good day. And I continue to assert that palladium will outperform even gold in the months and maybe even years to come. I think palladium's very undervalued in the precious metals world. It's been a really, really good week for that chart too. Of my 20 short positions, just as I glance here, 4 of them are up. Only a little, like 0.2%, 0.3%, so they're all, and 16 of them are down. So even with a green ES and a triple-digit gain on the NQ, 16 out of 20 at the moment of the shorts are down. So net is a positive day for the short portfolio. Here's a few. Accenture, our old friend, I think every day this week I've mentioned it, a continued good push lower. So, and I'm tending to tighten up stops across the board because I'm a nervous Nelly. Abercrombie & Fitch down almost 7%. A devilish 6.66% drop on this one right now. Really like the looks of that. Hilton, HLT, we're near lifetime highs there. So long as it doesn't push above that horizontal, I like the looks of this one. We've got to break below this trend line again though. On Semiconductor, ON, up a bit more, off a bit more than 1%. BA, Boeing, 1.54% negative. And long-term bear market on this one. It's been really left out in the cold of this mega bull market, this everything bubble. Cracker Barrel, down again, almost 2%. So just slipping lower, nice and steady, CBRL. Salesforce, CRM, like customer relationship management. This one, a giant head and shoulders pattern, not complete, but it has been working its way lower, with Wednesday in particular being a good down day. GPN, Global Payments, this was a newcomer this week and working down 1.2%, so that's good progress. And one last one, also a new face in the crowd, Wayfair, W, which is a, I believe, online furniture seller. And this was, I think, affected by the Restoration Hardware, RH, earnings. As you can see, this has been a wild stock. Just in its history, it was fairly normal acting, but then it had this topping pattern which collapsed during the COVID crash. Then it was decided between, I think Earth decided that they'll spend half their time on their Peloton and half their time buying furniture, and so this went crazy. So in short order, Wayfair went from about $20 to hundreds and hundreds of dollars, 340. So that was a big sensation. Then we had this beautiful top here. Look at this right triangle pattern. Plunge, and then we've been banging around like crazy. So this is one wild beast. But I'm using this horizontal as a stop loss. That is to say a $92 stop loss order. And got into it yesterday. So far so good. Got a little profit on it so far. 2.37% drop on W. So just to wrap things up with a few ratio charts. As I said, good week for palladium. Here's the palladium spider ratio chart. And over the course of time, bullish, bearish, bullish, bearish, bullish. And that is just say bullish now means that palladium will vastly outperform, I think, equities. An upside down version of that with different instruments. This is the Dow Jones Composite divided by silver. And we are so close to completing this top. So that's looking really good. And then finally, a real favorite of mine, the spider divided by TLT, equities divided by bonds. And what this suggests strongly is that bonds, which is the denominator in this case, will vastly outperform equities. That makes sense. Interest rates will drop as they try to goose the economy, and equities will not do so well. So that is the beauty of a chart right there. Okay, well, that's it from me. You have a good weekend, and I'll see you here Monday. Bye-bye.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88, so Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event.
I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Son, you know what that means? Time for a little bit more Tasty Live with the closing bell. And you know what? I've been sitting here for the last couple hours thinking about, good grief, what are we going to talk about on today's market? So let's just go through where we are. We are basically unchanged. $16 expected move for the afternoon, the morning into the afternoon, or early on the show. We talked about it, saying how light or how low it was. Well, it didn't disappoint. Even the S&Ps are down 2. That's about as low as they've been for the day. They've been up around 11 about 15, 20 minutes ago. That's the biggest move we've had all day. They were sitting up around 2 to 4 handles all day. NASDAQ up just about 90. Russell down 23, and the Dow down 258. Even the S&Ps grinding at a 1.21 million contracts. That's a lot of contracts in a very tight range. Volatility in by 11 cents, about 25 cents off of its lows, just about 15 cents off of its highs. Bonds down 18. They've been sitting here all day. They did make a new low at 117 even, got up to 1728. They're basically mid-price for the day. Bitcoin's hanging in there. A lot of Bitcoin mining stocks also doing well. Bitcoin up $2,000 over 117. It's gone from around 110-ish thousand dollars in the last 3 or 4 days to about 117,000, catching a little bit of volatility to the upside. Ethereum, big move to the upside, $216. You can see it's almost a 5% move, while the Bitcoin move was closer to 2%. Oil now up 10 cents. It was significantly higher this morning, close to 64. It's 62 and a half, and gold up 9. Some big movers today on the upside and the downside, but Tesla's been strong all day long. Apple has been strong all day long. Tesla's up 24. Apple's only up almost 4. But Microsoft up 9 and change. It was about $2 higher than this a moment ago. Apple Oven goes up every day. It's now a $580 stock. Palantir, with all the crypto stocks going, all the cryptocurrencies going to the upside, you'd expect Palantir to be up almost $6 or $7, and it is. On the downside, fewer and far in between, but still a few. Netflix has been weak last couple of days. Oracle coming off of its highs, down 14. And then really Reddit is the next stock that I see, $6, $7 lower. Nikki, what did you think we were going to talk about today with this market movement that we've had?
I mean, yeah, there's not a ton to talk about. It's been an absolute grind fest. I mean, even if you look at SPX, the range today, to give you an idea of what the opening session has been like, it's a 20-point intraday range. I mean, the low was 65.80, or the high 6,600 on the dot, basically. I mean, we've done basically nothing, not a shock. I mean, we talked about it this morning. Volatility super, super low. You've had an incredible rally going into the weekend. You know, you got a lot going on next week. I didn't expect there to be much decisiveness today in the market, and that's exactly what has happened.
Yeah, unfortunately, you said it early on, and it came to fruition that it was going to be a little bit of a nothing burger, and it really, yeah. I think even this overperformed for you.
Yeah, I mean, this is, you know, like when you have days like this, it's not a shock that, you know, the biggest movers on your list are things like, you know, Tesla. I've been looking at some of the quantum stocks, like IonQ is up $7 today. Open Door, you know, opened at up at 1040-ish. It's now trading at 9. You know, that's a 10-15% move. You got like
that's to the downside though. Yesterday it had a big rally higher, right?
Yeah, but I'm saying like it's stuff, high volatility stuff is the only thing that's moving right now. Like this isn't like a buy or sell day. It's just okay, I'm looking for something that's moving. I'm going to trade that. Like I don't think
where are all the cool kids is what you're saying.
Yeah, nobody woke up today and said, "Oh, IonQ is cheap. I'm buying it, you know, at any price." It's just that, you know, it happened to be moving today, and you say, you know what, my 0-day stuff isn't moving, so I'm going to put some money in IonQ. I mean, that's what the market's like. I mean, look, we talked about it this morning, and I said it jokingly, and we almost had it for the last 30 minutes or so. But I was like, we're going to just pin 6,600 and call it a day. You look at the 6,600 calls in SPX, they've traded 200,000 contracts.
Yeah, it's a big number you're talking about for the 0 day, right?
Yeah, it's not like I had like this, profound thinking that today would be, I think that it's become a a self-fulfilling prophecy.
Yes, yeah, we've been sitting. This is why sometimes when you look at like pin risk, and people always talk about like do these options have pin risk to them? Well, I mean, if a stock stays and we were around that 6590 to 6600, if a stock stays in that area, the at the money options usually trade the most. That's just the way it is. So it's not like a foreseeable like event that we're going to go to that number, but that's just where it's been. So that's where it trades.
I'm being called out in the YouTube chat for saying nothing burger too much. So
You did say it a lot today.
I just gave you another one. So everybody in the chat, take your drink. All right. Don't make me keep going. I'll get you drunk by the end of the
I'll do it.
I'll do it. I'll do it. You see, I'm watching now. So just keep in mind, I'm watching.
You got your eye on them for sure, for sure. 2 million open options have traded. That's a lot. 6 million Tesla options have traded. That's a lot.
441 million shares of open have traded today. It's the whole float 10 times over.
Yeah, that's the definition of a meme stock for sure.
Yeah.
Yeah.
But other than that, not much. Micron continues higher.
Yeah, I think that's giving Tom a little bit of fits, up almost $7. Micron, I've succumbed to its greatness, so I don't trade it anymore. I can't keep fighting it. I can't keep fighting it. And if I ever make some money back in GDX, which by the way today is falling nicely with oil up, it's only down 5 cents. If I ever make money back in there, I will look to never trade that product again too. So I got a couple of products on my hit list.
Yeah, I hear you. We got a number of trades on. Did you put that CCJ trade on that I was?
Which one?
Ratio.
Yeah. The one by 1 by 2.
Oh, that one was in. What was that stock?
That was.
We did that today.
Look here. Let me get in the right account. So sorry, I was in the wrong one.
We do it in an open door? Was that open? Oh yeah.
That was an open for 73-cent credits, trading around 36 cents right now.
The 10, 15, 18. Yeah. So you got another
10,
day.
15, 10, 15, 20 I put on.
Yeah. 10, 15, 20 and okay. You get another day like this, you buy back those 20s and you'll have that free call spread on.
That's correct. Well, I won't. Tom will.
Yeah. Well, ask for half.
Ask for half, expect nothing.
Well, it's a civil partnership, so you should get at least half.
It is a civil partnership. You should get at least half.
You want another one that's flying around?
Sure.
It has high volatility. Somebody in my YouTube chat gave me this the other day. I have a less advantageous position, but you might like this. So the ticker is BE. It's Bloom Energy.
BE.
Just that. BE.
BE. Bloom Energy. You are 100% correct. Yes, it is.
Look at the call skew on this thing.
Yeah, it's going to be huge.
It's gone from 15 to 66 in 3 months, 4 months.
So the 100 calls are about $35 out of the money, are around $130.
Yeah.
And the puts that are $35 out of the money
are nothing.
Are trading for nothing. That is correct. No bid at 20 cents.
You can't go that far out of the money. Even if you go, 20 points out of the money, 15 points out of the money, you look at the 50 puts at $1.30, and then you look at the 80 calls at $3-4.
Yeah, that's a lot of call skew.
I got a call ratio in there. You can look at that kind of in the similar realm of what we did with the open door.
What'd you do?
I just have a call ratio spread that's at the money. So I'm long the 60 short one of the 65s and then short one of the 70s. So my break even is up towards like, 77-ish, but you could put on,
you can do anything. You can do anything you want now.
yeah. So you can do something like the 75-85 and that's at, 70 cents. That's kind of a Tom type trade. If you want to do like a 1-1-1 type thing, long
by the 75-80 in October.
Yeah, buy the 75, sell one of the 80s, sell one of the 85s. You do that at $1.50. I mean, it gives you a break even in 91.
Yes, you're 100% correct. 91 and change, sure.
I don't need you to tell me I'm correct. I know I'm correct, but thank you. Appreciate that.
I mean, you can go 70, 80, 90 on here too for a 70 thing. I mean, listen, you can do whatever you want here, right? You could do 70, 80, 85 and sell two of the 100s. I mean, you can get as creative as you want on these.
I'm trying to give you something with some vol,
Yeah, and not the worst markets either. I mean, 10-cent wide markets out there on those wings is pretty good.
Yeah, no, it trades.
Yeah, I'm not gonna let you take me down on a Friday going into a Monday. I'm gonna just keep everything. Maybe I'll look at that on Monday when Tom comes back. But right now, I'm just gonna consider myself a little lucky and just say, you know what, Bet, you did fine today.
You are whipped. My God, you had the keys to the castle, and now you're denying trades. Oh.
Keys to the castle. Keys to the castle. 10 minutes to Wapner, 10 minutes to Wapner. Look at these E-mini S&Ps. We've just, in this last half hour, we've had the biggest move in the E-mini S&Ps that we've had all day, from up around 8 to down around 8 to completely unchanged.
Yeah, if that's the most exciting point of the day, it's been quite a horrible day.
Yeah, it has. You are correct. It has been quite a horrible trade. If you didn't have some existing positions that did okay for yourself, it was hard to find new trades today, meaning we really didn't move too much.
How about hymns? If you could play like into that call skew a little bit, if you make some money there, maybe we'll order Tom some of those testosterone pills.
Hymns, 55.62, almost a $4 move to the upside today. You got earnings coming in October. What are you looking at after November 1st? What are you looking at in the October options?
I like to do these naked put call ratio type setups. So you could do something like, it's tough to do into this sort of rally, so maybe you try and leg into it and just do the ratio side, but 60, 65, 70, you buy the 60, sell the 65, sell the 70, you do it at an 81-cent credit, get a little bit of a down move, you can sell puts, or you put the 45 put on with it, 45 put, short, long the 60, call, and then 65, 70. You do that all for $2 and change, $600 in buying power.
And you look at a trade like this where we're buying 160 and selling 165. That's a vertical. I'll get rid of this here. So that's buying a vertical spread. And then you're selling another 70 call. That's what uses the rest of the buying power and everything else. That's where all the risk is, obviously. And you get a break even just over $75, 75.81, right? Because you got the 81-cent credit. That would be your break even. And you say to yourself, well, why don't I just naked sell the 75 calls? If I sold them for $1.50, I'd be selling them for 70 cents higher than where I am right now. My break even would be a little bit higher. Why not do that? And you certainly can. What you're giving up is, if you get that move to the upside that's slower in pace, you've got this long 60-65 call spread. And even as we go higher, especially when we get closer to expiration, 35 days to go, you're 10 days off your optimal of 45 days. Usually you're looking to take this off at 21 days. You got yourself a sweet little long call spread in here. You didn't necessarily want the stock to go up, but you don't know where the stock is going. Not a bad little ratio. And you can not only do these, you can do these in any stock, but you can do these for nice credits in these stocks that have a lot of call skew. This is the advantage of call skew.
Yeah, and if it chops around here or goes lower, that out of the money call gets zapped, and you can just buy that in and have kind of a a free shot. Like I have a bunch of butterflies on the upside in HIMS around 55 and 60 where they started as call ratio spreads. The stock goes down, you buy in the risk, and you have this kind of lotto ticket. I have a couple of them expiring in the next.
Just to show you the difference, how much that call skew plays a part in this. The strikes are going to look a little funky because they're $1 wide strikes under 50. But here I'm buying a $5 wide put spread, same exact spread like buying the 60-65. The stock is 55, so I'm doing it $5 lower, just like when it was $5 higher. And then you sell this 40 put, and instead of getting that 80-ish cent credit, it's a 90-cent debit, right? So completely different trade here because of that because of the call skew. Now, if the call skew goes down to a degree where it's equal to the put skew, that's not really something that you could play for. That would be way too big of skew to go away, especially in a small time frame of 35 days. But that spread with the stock not moving, time obviously not going by, comes in by $1.80. So that's the power of call skew. You're buying a cheap call spread and you're selling an expensive out of the money call, as opposed to having no skew in the put spread where you're buying an expensive put spread and selling a cheap out of the money option. That's why I like to do them as you are right now, looking at these on the call side where the skew is. That's taking advantage of skew.
Gemini is out, by the way, middle of the day today.
Oh, I didn't. What was the symbol?
GEMI.
GEMI. Up $4.30 some odd cents.
Yeah, from the Winklevi.
It was significantly higher. It looks like it traded as high as
like 45-ish.
Yeah.
45.
The low is 31, pretty much right where it is right now. You can get in on the low, son.
There you go. From everything we've seen from all the other IPO stocks,
you should be buying.
Probably a good bet. I mean, for the game theory in me would say, it can't be. Yeah, it's time to have a loser. But if you just go with the trend, it probably is a decent one. But that's probably a reflection of kind of the volatility that you're seeing in Bitcoin and Coinbase as well. Coinbase, had some two-sided action today, so maybe that's all kind of.
Yes, you are correct. You are correct. Trying to take a look at here what to do with this.
We're gonna get a little rally here. I need my butterfly. I got my butterfly in SPX.
Oh, do you?
Yeah, I've been holding it. I bought in the risk on the upside, so I own it for like a 65-cent debit. But I'm long the 65.90, short one of the 65.95s, and then short one of the 6600s. So anything above 65.90 is where I'm looking, and where
is nirvana.
Cents off. So maybe we'll get a little pump into the close here, because everybody knows you have to buy them on Friday because on Monday they open higher. So you can't go home without your last bit of spoos here.
Makes per hey. This is the 8th day of buy the opening, sell the close. If we get higher here today, sure. So anything is possible. I'll go with this. I believe it all now, son. There's nothing I don't believe anymore.
There you go. If we close down today, is Tom gonna say they close weak on Friday?
Don't listen to him. You'll really hurt yourself. In more ways than one, by the way, too. You really you drive yourself nuts. You don't want to do that. You don't want to do that.
Did you get any long delta in Netflix? Put spread.
Netflix down $17. I haven't really touched it. IB rank has gone up pretty nicely today. It's probably warrants itself a trade. It has earnings coming October 16th, which is the day before expiration. So I don't like to usually trade a stock that has expiration in the earnings cycle, but one day before, I mean, I draw the line there. I'm fine with that. What do you think? So does Netflix follow the rest of the market?
I think today is just kind of the Warner Brother news. Warner Brother and Paramount, that sort of merger news is just kind of a sell the news event. That's why I think you can sell a little put spread here.
Sell a little put spread here, or maybe even like a broken wing butterfly or something like that?
Sure. Markets are, I mean, they're wide because it's $1,000 stock, but 1,100, 1090, that was what I did this morning. It's hasn't really moved, but it's a 100 points out of the money or just inside that. 1150 was kind of the low that we put in the last month or so in August. I don't know. If you're looking for something to get long that isn't at highs, it's a interesting spot.
Yeah, and
Apple, I mean those are the other ones. Tesla finally caught up today. It's at 400 or just under.
So let's take a look at these markets and Netflix. You've intrigued me here. I looked at a broken wing butterfly like the 1120, 1100, 1060. Looks like it's trading for 230 as a mid price, but look at the natural 40 cents. 475 is the offer. So you really have to kind of work these trades, and I would work them a lot higher. Usually I go a couple of pennies higher on options like this, where you've got a few tight options and some maybe even $1 wide, and even though you're probably going to get filled close to mid price, I would still look to work this one a little bit higher. So I'm going to try to do that for you right now. I'm going to do something here for you.
There you go. I mean,
yeah, I mean, you gotta try something, right?
Yeah, it's one of the only thing that's interesting right now in this market is Netflix. It's only one of the, I mean, unless you want to dabble in one of the ones that we went through of the, super high volatility stuff.
Mm-hmm.
That's just
No, I like your Netflix trade. I'm gonna continue working at lower here until I get filled and see what happens. So please give me just a minute here. Is that you or me?
That's me. I did the INQ call ratio spread. I had just watched it. I had to jump in front of it.
Oh, look at you.
Long the 60, short the 65, and short the 70, and I did a 73-cent credit.
Yeah, I knew this. I knew this looked a little too good to be true. I'm working this down. I've moved it by. Oh, there we go. I got filled at 262. It looks like 262. Maybe you can do it a nickel or so better than that. But the mid price on this is $1.66, and I got credit, and I got filled at 262. So again, work these trades. Only $1,800 worth of buying power to use them. 77% pop. When I do these kind of butterflies, I like to have over 80% pop usually, but Netflix has had such a crap couple of days that I decided to go a little bit closer. I guess it's a little bit more delta. It really isn't. Just your short spread is your short embedded spread is just a little bit closer.
Yeah.
I did speak to Tom. He did have a nice event in New York City. He was able to catch the earlier flight by 2 minutes to see his mom. So he is able to see his mom. Otherwise, he was going to have to take an Uber over to Newark. He left at LaGuardia. He'd have to take an Uber over to Newark and catch a 6 o'clock flight. So he was able to get on like a 1:45 or 2 o'clock flight. So it was good for him. Going to go see mommy. Makes it a nice weekend for him.
That's beautiful,
isn't it?
Yeah, it's amazing.
Well, take us home here, son. You got about 2.5 minutes. I put this on the follow page. If you want to follow along in Bob's IRA, you'll be able to find it by searching for Nick Made Me Do It. That's how you can see that.
That's pawning off, because if you make money on that, then you're gonna have to say Nick made me money.
It's not how it works, but this is a communal state. I'll give you half.
Okay, perfect. Yeah. There you go.
Hey, the stock just rallied $3 on your little call there. So
yeah, you got to have them. You can't go home without them.
Gotta have them. Can't go on.
Gotta have them.
Yeah, yeah, most definitely.
What are you thinking the next week? FOMC, expiration, triple witching, headline, seasonality, Tom flying back home. You know, what else you want to put in there?
Yeah, who knows? I mean, you got to think that volatility is maybe reached. It doesn't mean the market's going to go lower, but maybe it's reached its low. Like so I think like a buying forward slash VX and selling VIX options on a 1-to-1 basis, maybe forward slash VXM versus VIX options, because that's like 1-to-1. You can do that. A forward slash VX would be 10-to-1 on the VIX options. That might be something to do. I think volatility is going to kind of stay bid here. If I had to think, you're going to have a lot of ES volume coming for the triple witching, because there'll be a lot of rolling of the ES futures. That usually keeps things in a tightish range. So unless we get, the news really does something, I think we're in for more of what we saw this week. I mean, volatility could even uptick on a weekend. You know what I mean? Like, you usually get a little volatility uptick on a weekend.
Yeah, the Trump uncertainty is all but gone.
It seems like they got that shooter, regardless of what you feel one way or the other. Somebody should be brought to trial.
I agree with you on next week. I think it's a chop fest, but I think you get outsized moves, you fade it.
Yeah.
Don't get caught. I don't know. That's what I feel like.
Don't get caught. How do you not get caught? Even the S&P is down 5 and change, right? I mean, listen, every time we've sold off, if you tried to sell them because you figured that was the top, you got caught. And if you didn't buy them when they dipped one time, you didn't get to buy them on the bid. You had to buy the offer. But anyway, Nikki, thank you so much for coming on the show with me, filling in for Tom Sadloff, who will be back on Sunday night and Monday. Until then, son, enjoy your weekend. Peace.
Peace.